Are a little early, and I realized the sound quality in this bedroom is not as good as I wanted it to, but that's a-okay. We always adapt and overcome here at LoFiTrader. Let's go ahead and hit that intro and we'll get right into it. All right, it's going to be a great day today at 2 o'clock. It is March 20th, right? At 2 o'clock. Old Papa Powell will be coming out with his glasses on, his hair slicked back, and he's going to read us the Fed rate hike decision. They've already got it. They already know what they're going to do, and right at 2 o'clock, they drop the ball. Bam! And then they'll have plenty of questions, and we will live stream it here so we can hear exactly what Mr. Papa Powell has to say to us and our guidance for the near future. He'll take a look at all the CPI and the PPI data that we've already covered here on this channel, and when that happens, we will post it and we will share it live right here. So yeah, we're gonna hang out until 2 o'clock, but first I'm gonna give you a quick overview first of how the market outlook is. Then we'll go over the earnings gap ups that I've seen. We'll also go over quite a few other things. The stocks that I'm in right now, the stocks that I'm watching, any alerts that come off at 9:30. But before we do anything, it's time to pour a cup of coffee. You gotta have a cup of coffee in the morning. At least gotta get it poured so that way it gets nice and cool, so I can drink it in a half an hour. I don't have the old man tongue yet that can handle the pain. So let's see here. Let's make sure everybody's good to go. Make sure everything's set up right. It looks like everything's looking good. Looking good. All right. Let's see here. Yes, sir, Bob. Yeah, I think we're good, guys. All right, so we'll start with the S&P 500. We'll see how that fares us. Good morning. Good morning. Good morning. All right, S&P 500, we have a small gap up first thing this morning, but it pulled back and now is opening. It looks like it's going to open somewhere just below its close, so relatively sideways last night. We did get a good push like the night before, so that's looking a-okay. Let's see here, RSP, which is the equally weighted. It looks like it's just headed down a little bit, trying to bounce off that 21-day moving average. It looks like it's moving the same. It got a little bit of a pop there, but now pulling back. The QQQ looks like it had a nice pop this morning, but pulled back. Now trading at 439.19 in the pre-market, which is looking a-okay. Let's go ahead and send this out to a few other peeps. Scoobity-doo-wop. Things are looking good though. We're going to run through SMH, which is a semiconductor ETF. We'll see how that's doing. So the semiconductor ETF is now pulled back to its 30-day moving average. That's looking a-okay. Let's see here. The IWM. I need to learn how to quiet those ringtones down. The IWM is looking really nice here. And when I say really nice, I mean it looks like absolute crap. We had a nice pop-up through this high of 205.33, which is nice. But if you look at the overall IWM, we're still just testing this resistance area here at 199.68, currently trading at 201.71. So we had a big push up yesterday, which is great for the overall market because we do want to see the big push. We want to see those big pushes from the IWM, but we want to see them hold. So we get these big pushes last week or 2 weeks ago, and it pushed relatively high. We thought we were on a new breakout, and then boom, it slammed back down hard, just like the IWM, the Russell 2000, has done multiple times. So let's be careful with that, guys. All right, I really need to quiet down those chat notifications. Maybe we can figure out how to do that really quick. Do. Yeah. Let me see if I can switch this. Maybe turn this down a little bit. and make sure, hopefully everybody can still hear me A-okay. Still working out the kinks. Had to switch my office up a little bit, if you guys haven't noticed. Alright, so NASDAQ NDX, it hasn't opened up yet, but it closed relatively strong by the end of the day, gapping up to 18,032, which is the all-time highs is 18,416, so we're about 375 bucks away from the all-time highs, which is not bad. We have the Dow Jones Industrial. So the Dow Jones Industrial also had a beautiful push up yesterday, which is nice to see right before the Fed rate hike decision, which is happening at 2 o'clock. If you didn't hear it the first time. Let's see here. We got TLT, which is the 20-year Treasury. We had a small push up, and now it's trading sideways in the pre-market. My son is banging on the door. Nail, which is our builders ETF. It's our ETF for the daily home builders, and it had a nice push up again as well yesterday. So we're seeing confluency throughout the market. Yeah. Ooh. Yeah, baby. Things are looking good. Now, what I can say is today at 2 o'clock, we have the FOMC statement and the projections and the decision. So what does that mean? It means old Jerome Powell is going to come out. He's going to have that press conference at 2:30, which is where everybody's going to ask the questions and stuff. But right at 2 o'clock, you can expect the news to drop right here on LoFiTrader. You're going to get exactly... So what do we expected? The expected for the Fed rate decision is 5.5%, which is staying the same. It's the previous. He wants to hold those rate hikes at 5.5%. He does not want to cut those rate hikes just yet. He still wants to ensure that sticky inflation is being held down. So we want to make sure that sticky inflation is held down, because if not, we're going to end up paying way too much for gas, food, everything, and it'd be more than we've already been paying for. So keep that in mind, guys. Let's see if I can take a sip of this, see if I can burn my mouth. Woo! That is hot. Hot toddy. All right, let's see. One of the, let's just make sure. Let's look at the VIX Volatility Index. This morning we got a nice little chirp in volatility. If you don't know what this just shows how much volume is actually being traded in the overall market. So the CBOE Market Volatility Index right now is trading at 1407. We want to keep this thing relatively low to stay in a bull market. If not, you get these huge chirps. This was the pandemic right here, COVID. You guys remember the COVID? Or if you're just starting, you probably don't remember seeing this, but this here was absolutely bonkers when this went off. The volatility in the market, you could see the correlation in the S&P 500. If you go back to March of, that was 2021, that thing, it just took off. It really just took off. It scared and spooked everybody out of the market. You definitely didn't want to be the guy who panic sold, because it recovered very quickly. Monetary policy, old Jerome Powell stepped in and he said, hey, let's turn on this money printer and let's ensure that America does not fail. Some people will be a little butthurt, if you will, over all that. But, it is what it is. We have the dollar, DXY. The dollar looked like it had a very nice push this morning. When I say very nice, that's not good in correlation if you want to see equities rise. So if the dollar rises, usually you see an inverse correlation in that if the dollar's falling, then you usually see your S&P 500 heading to the north side. I always run through the NVDA. NVDA is absolutely beautiful, holding its gains from yesterday, just trading sideways now at 892.48. So that really looks good for NVIDIA, holding those gains from yesterday. A big push up off that base there. You love to see it. A lot of support there. And if we look at my friend Danny, a new friend of mine, very, very nice trader, good friend. If we look at the anchored VWAP here, I've been messing with it because he has been preaching it. He says he's going to start sounding like a conspiracy theorist when it comes to when it comes to talking about this anchored VWAP. We placed the anchored VWAP here at its lows, and when this thing popped off, you can see it's been holding this relatively nice. It's been following a 10-day moving average pretty well, and you can see when it broke that 10-day moving average, that's where I actually stopped out, was here on the 10-day moving average stop out. This thing actually came right down to that anchored VWAP, if you guys can see it here, and popped back up. And now in the pre-market, NVDA is just kind of trading sideways here. That's what you want to see in the overall market when you have big gains and you're in a stock that you hope continues higher. You want to see this thing trade sideways and hold those gains. Good morning, Carly Worrell. You beautiful thing, you. Here, I'm going to throw some hearts your way. Thank you so much for taking good care of me. That is my beautiful wife. She is strolling me around with my leg being the way it is and taking good care of me, so I appreciate you, sweetheart. You are the best, except for when you're not. So there's that. SMCI looks like we are back down to its breakout area. This is absolutely beautiful to see, and I'm glad that we're going over this right now, honestly. Because simply put, when you see things like this, guys, when you see areas of confluency where we have this trend break to the north side and we can extrapolate a ton of money from these trend breaks, when it pulls back here and is retesting those boundaries, retesting those price action areas, that might be an area where we want to keep an eye on. So this looks like a pretty tight trend. I mean, it came down pretty quick, but that's what stocks do. They go up using the stairs. They come down using the elevator. Watching from the toilet, says Jordan Brockerman. Well, I'll tell you this, this one's for you. If I can actually take a sip, this one's for you, brother. Ooh, that's hot. And I hope everything comes out okay. Make sure you wipe. Next up is going, well, actually, let's focus on SMCI before my decided to distract me. This trend here, this trend break here, not trend break, but this trend line that's heading down here came down pretty quick. So if we can see another pop up, because you can see right here, I'll just mark this out for you. You can see right here is where we had an huge surge. It popped up, it broke out after this trend break. It traded sideways, and then the next morning you woke up to some crazy gains. I mean, this was a jump of 16.38%. I mean, right there tells you that this thing is very volatile. I got a good friend of mine I do some jiu-jitsu with. He actually made quite a bit of money playing SMCI, and if you're listening, Jay, you're a good man, and I appreciate everything you do, brother. You are a good man. So yeah, SMCI is looking nice. I'm going to go ahead and set my alert. We do want to ensure that we are a part of this one, at least so I can give you the heads up when this thing breaks out. So SMCI is now on our alert system. Tesla, good old Uncle Tesla. Now, guys, I just bring this up. I always want to talk about it because it's one of those things, you know. When you look at Tesla, the very first thing I see is a 200-day moving average that it's under. It's below a 200-day moving average. It's also curling down. So if we zoom in here, you can see right here, this right here is curling down. That's never a good look for any stock whatsoever if you're not just below a 200-day moving average, but it's also curling down. Bob Builder says, this is Dan J. Hey, Dan J, good morning. It's good to see you, brother. Which just reminded me, I should bring up our Discord here just to make sure there's anybody in there. Okay, let me just @ nice going. @ nice going. Yo, join up, brother. At Nice Going is another good friend of mine. He was here the last time I was doing streams every day. We won't be doing streams every day, but we will do all the very volatile news like CPI, the PPI, and we will be doing any Fed rate hikes that we have from here on out, because you know you're going to have an amazing day once old Papa Powell decides to reduce those Fed rate interest hikes. This market is going to be metro booming on the track. Next up, we're going to take a look at NFLIC. NFLIC, what's NFLIC? NFLX, Netflix. I call it NFLIC because of the ticker. NFLIC. So the old NFLIC is sitting here. We actually used this as a beautiful example the other day. If you don't know already, I love playing these trend breaks. And this trend break here, I didn't actually get a piece of. But I use this as a great example of a risk-reward system that you could have used. I had this marked out, and I did not take this trade. I actually took this trade, but I didn't take it the second time it came up, which is a huge learning curve for me, because this is what we call an oops reversal, okay? Or Richard Moblin actually coined it, I do believe. But it came up here, broke through, got me in, and then stopped me out from the previous day. And once it came down here and retested and ramped up, if you would have just rebought this same area on this breakout, you could have made a nice penny. You would still be in this dang thing if you were using the 10-day moving average as your stopping point, or if you played the second trend break to the north side, you would still be in this trade for a beautiful, beautiful, let's just see. Let's just take a little peeky gander here. A 8% return, you would still be up. Now, this is a slower mover. We look at a little faster things when we're looking for trend breaks, but this NFLIX looks absolutely beautiful. It's nice to actually see it. So let's go ahead and keep our eye on NFLIX, because we want to see if it can break this top here. So if we look at this top, you can see we created a very small cup with handle. Anytime I'm looking at a cup and handle, the William O'Neill style, what I like to do is throw it up on a weekly to see if I see it on the weekly, because William O'Neill showed all of his examples in his book on a weekly time frame, and I'm not seeing it on the weekly, I'm only seeing it on the daily. So I wouldn't consider this a true William O'Neill's cup and handle. We could take all the measurements, making sure it's 30% from its highs and yada yada yada, but I can just do this visually first, and then we can give it like a deeper dive into it. Bob, listen, Bob, or I'm just probably going to call you Dan just because that's how I met you. But if you have any questions, throw them up in chat, and once I get through the overall market, I'll be happy to take a look. We can go over CAT again. We'll see how that's doing this morning, Caterpillar. Oh, that's a good sip of coffee. That is a good sip. I watered it down a little bit today because I knew I'm going to be in here for quite a few hours. So I watered the old coffee down. That way I can sip nice and leisurely without getting the jitters. That is good. I wish you could have a cup with me, ladies and gentlemen. And if you have your cups, go ahead and give me a cheers. Let's go ahead and sip Shawana together. Next up is going to be Microsoft. Old Softy here is just trading sideways after a huge dump from its all-time highs at 428.95. Now reaching back up there at 421.47. We're going to see what Microsoft wants to do for us today. We got about 25 minutes, guys, until market open. We want to ensure that we know what exactly is going on in the market, and that's why we run through these bigger boat stocks. That's why we try to look at all the ETFs and the indices, because we want to know what is going on in the overall market. And speaking of overall market, what does everybody have? If you have a 401k, if you have a Roth IRA, you're holding some Amazon. So AMZN. Amazon is trading at 175.90 currently. Back up here, and I drew this out for you guys before. Back up here right into that resistance area. I drew this gray area just to kind of show you that this is where we had such a hard time from 7/20/20 all the way till 3/22. So for over 2 years, guys, almost 2 years actually, we traded this, and it just could not break out past this area. Then we had the bear market. The bear market ensued. What a beautiful bear market this was, right? I mean, if you had a short strategy, it was a beautiful bear market. But if you didn't have a bear strategy, this was just a learning curve. If you hadn't been through a bear market already, you were there, right there, learning the whole way down. Below a 200-day moving average, guys, just like I love to preach, if it's below a 200-day moving average, you can rest assured that you don't want to be in the damn thing. So right here, you can see it pop back up. Below a 200-day moving average, failed, pop back up. Below a 200-day moving, failed, pop back up. Below a 200-day moving, failed. Now, getting above a 200-day moving average, and it starts to curl here, guys. Absolutely beautiful when you see that 200-day moving start to curl. And if you can keep that in your head and in your minds and in your hearts, you will start to realize that next bear market that we have, and things get fearful, things get scary. Adam, that's my boy. What's going on, man? Dubai was lit. When that 200-day moving average, that curl starts to curl to the north side, that's when we can start looking for our longs. And as you can see here, this thing had an absolute beautiful push after that 200-day moving average was broke. Then we pulled back to retest that 200-day, and now it's all the way back up here to that resistance area of 175 to 188. So 175 to 185 we'll call the resistance area, and that's right where AMZN, Amazon, is sitting currently. Amazon, since you're in here, Adam, and you're early, I'm just very impressed with you. You're usually just waking up with sleepy eyes and getting to the market right before open. So I am proud of you. Cheers to you. This one's for you, not for me. I gotta say, I am very impressed, young man. Very, very impressed with you for being here this early. I do want to point out a few things to you, Adam, that we have for our gap up scanners. PDD has an absolute banger right this morning. I think it's up over 17%. That's something to look at, which puts us right here at its resistance area. So if we can get a nice push on volume, this might be, now it has not been beaten down by any chance. This thing has been on an absolute terror from all the way back here. We've been watching this since, what is this, March of 2022? So last year, guys. We've been watching this thing accumulate all of this volume and all these shares. You can see institutional ownership buying the heck up out of this thing. And look at this run. Absolutely big run. Now we are here at the earnings gap up. So they estimated a $1.44, and they beat their estimate by a whole stinking dollar. PDD did. So definitely put that on your watch list. And Adam, I'm going to need you to keep an eye on that. Make sure you got the tracker up there for us. I'm going to go ahead and bring it up myself, so that way we can do a risk calculator on that in case we end up wanting to take that. So take a little peeky gander at that, Adam. Tell me what you think about that. And then we also have TSHA. It's a 32% gap up on the earnings, but I took a look at the financials on this. Absolutely garbage doo-doo. It's absolute flaming hot. Not even Cheetos. Those things are gross, but they're grosser. TSHA, it's up there. It's a nice little gap up, but I don't like it. And I've been wrong multiple times on earnings gap up. So take a look at TSHA as well. And let me know what you think about that one too, Adam. We're also in the Discord. We are out here in the Discord. So be sure to go ahead in the descriptions and check out our Discord. Adam, don't be mad at me. I did not put the LinkedIn Discord. I forgot to throw that in before I started. I guess I could handle that, but we're trying to do a live show here, baby. So take a look at PDD. And then I'm going to run through the rest of these. We got Meta, guys. Meta is absolutely just a banger of a stock. It actually gapped up on its earnings back here. Its expected was $4.82. And it bounced up to $5.33, which is absolutely beautiful to see. That's what you want to see, baby. You want to see a huge gain, and old Zuckerberg's been doing that jujitsu, so you don't want to mess with him. Let me see if I can't get. My boy in here, B Stewie. Where the heck are you? B Stewie, Brian. Brian Stewart. There we go. Get in here, dog. All right. Back to the live stream, baby. All good, brother, Adam says. Dude, I'm just so happy. I'm so happy right now that you're awake. You make me so happy. So Meta is holding these gains at 496.24, looking absolutely scrumptious at 21-day moving average, and the 30-day moving average now reaching up here. It's holding that area. This is starting to look almost like a trend, but it's just kind of sloping down too. So we want to see this thing hold these gains. I believe in Meta. I love what he's been doing. He's been, you know, I've read on a lot of different things. If you have a very big company, which Meta is absolutely enormous. Let's just look up their market cap, 1.27 trillion, which is an inconceivable number as a human being. It's hard to even understand or picture anything that is a trillion. But if you can, you know, power to you. But Meta, as a $1 trillion company right now, they had so much in cash during the pandemic. So they were fine. They weren't burning through money. They weren't fearful or scared at all. They weren't fearful or scared at all. And come to find out, he started buying up all the companies around him. And it was all for all the new technology. And that's what companies do. That's what the best companies do, is they buy up all the companies that are around them. You go, guys, I want to start a poll. Let's start a poll here. Let me see if I can figure out how to start a poll here. Start a poll. Okay, so the poll is Fed rate hike. Fed rate hike. Will they? And then we'll do raise, lower, or stay the same at 5.5. All right, so we got the poll up. Will they raise, lower, Fed rate hike? Will they raise, lower, or stay the same at 5.5? Now, I think this is gonna be an interesting poll. I think a lot of people are gonna go with what is expected, which is the 5.5 today, and we're gonna leave that up all the way until the Fed rate hike decision, which is at 2 o'clock, guys. It's at 2 o'clock. But I'm gonna be here all day. We're gonna cover what the market's doing, what's going on in the overall market, just because that's what I love to do, baby. And we're gonna be here for you. So if you have any questions, go ahead, throw them up in the chat, and we will make sure to get to all of you. And go ahead and take that poll. We want to see what you guys have in mind, what you think's gonna happen. That's some good coffee. I'm telling you, I gotta get a coffee sponsor. Guys, because I take a sip every so often. That's the only time I quit talking. I mean, shoot. I think we should get a coffee sponsor. And we did. We had a good coffee sponsor the last time we ran through this, and it was absolutely awesome. Silly Sips Coffee, actually. You guys should check them out. They are a non-profit organization. They give all their money back to the kids. So check that out. AAPL, Apple below a 200-day moving average. Do I need to say more? If it's below a 200-day moving average, it looks absolutely garbage. Let's look at Google and then Kobe. Yeah, we're going to look at NTRA just in 1 second. We got Google with a huge push in the after hours. It kind of gave back some of those gains 2 days ago and then started trading sideways. So now it's trading sideways. This is absolutely beautiful for Google. It's going to be nice if we can see that thing keep on keeping on. We'll just take a look at Bitcoin really quick, guys. Bitcoin's pulling back. This is a healthy pullback. I know everybody's freaking out. Oh, it's going to zero. We're going back to a crypto winter. Don't worry. This is exactly how things are supposed to happen. All right, we're going to take a look at NTRA. Ooh-wee, brother. NTRA looks absolutely scrumptious here above a 200-day moving average, and it is curling up to the north side, holding a 10-day moving average. And on top of that, it's trading at 91.26 currently, and we want to see this as a base breakout. So I do have my NTRA. Let's see. Black Rifle Coffee is dope too. Hey, Jordan, I would love to try some of that, but it looks very expensive because I think they spend a lot of money on their ink because their bagging packages look awesome. And but look at NTRA for the homie Adam. Homie Adam, that's right, homie Adam, my big dog. My editorial and analysis, my data and risk calculator. He is an amazing man, and he is seeing to it that this stream stays up and running, baby. So NTRA looks absolutely amazing. We do like to see these base breakouts. Adam more, he does more than I do, honestly. But I will say this. He's been killing it lately, and I want to ensure that if NTRA and its alert goes off, we want to be first to be alerted. So one of the few things I want to go through is what I have already did a watch list on. We have been doing these huge watch lists, these top 3 watch lists, which, by the way, our last top 3 watch list absolutely crushed the numbers. We had over 410, and it's only been up for like 8 hours. So if you haven't already, go ahead and take a little peeky gander at that one. Maybe I could post it up here in the chat for you. But absolutely killer. It absolutely killed it yesterday. And we just did a little bit of research last night on what to say or what to do. But you know what? I'm not going to distract myself with that. Adam, if you don't mind, I'm going to make you the moderator anyway in the live streaming. And if you can throw that up in the chat for us. There you go. I just gave you standard and managing moderator. And if you could throw that, Adam, up in the chat, that would be awesome. Throw the top 3 that we made last night in the chat for us, so everybody can check that out. But anyway, I want to run through the stocks that I'm keeping an eye on, because the market is going to be opening here in about 12 minutes. We got 11 minutes, 30 seconds, guys. So PDD, that's going to be my top #1 EP watch. We're going to have to see a lot of volume coming in. And I want to say this. There is already 3 million shares traded in the pre-market on PDD, and the average volume that is traded is 7 million. So if the average for the day is 7 million, and it's traded about half of that in the pre-market, you can expect that PDD should have a very volatile day. I don't know whether it's going to go up or down just yet, but I tell you this, if it shows a beautiful range open on this and we can break up through these all-time highs, we might see a nice continuation to the north side. So that's one of the #1s on my watch list here, is breaking through this area, creating an opening range break on the 5-minute. I would love to take that as long as it stays within that 3.9% of the ADR. Next up is SOUN. SOUN, absolutely. I don't even need to say it, but I'm gonna, because I am long-winded, gentlemen. This is our trend breaks. This is what I've seen time and time again. You see a flat bottom base. They make the rockin' world go round. This is absolutely amazing. Let's see. Dan says, I just drank Cafe Bustelo and save my money to buy more stock. Yeah, brother. Yeah, I buy the cheap coffee too, because it goes in one hole and out the other pretty quickly. So as long as it tastes decent, I'm okay with it. But I tell you, my grandma has made me some instant coffee before, and that stuff's even good. So Covey, my man, Adam, I appreciate you, brother. Thank you for throwing that up in the YouTube. Guys, if you haven't already, click that link, check out that YouTube video, and then make sure you get your butt back to the stream, because it's going to be lit. We're getting ready to start at market open in less than 10 minutes, and it is going to be an absolute fun one. So SOUND is my #1 trend break watch list. This is going to be absolutely awesome, because it actually moves 18.8%, guys. 18.8%. That's an absolute nuts of a volatility mover, and we'll set our stop at 17.35. So I'll know right away if this thing is going to take off. So I actually need to do my calculations now and get my alert out there. So 7:57, and we're gonna say we'll take it at 8:21. So let me just go ahead and do my risk calculator here, and I can bring this up for you guys right here and show you exactly how I do it. So what we do is we take the low, which is going to be 757. So I take 757, and I'm going to subtract that from where I would want to take it, which let's just say 825 to give it some room. So 825, okay? We equal that out, and that's 68 cents. Yeah, I know I did that wrong. And if I'm going to risk $260, let's just say, for example, $260. And we're going to take 68 cents, was it, right? Was it 68 cents? I think it was 68 cents. We're going to do 0.68. All right. We could take 382 shares, but I actually just realized that I only can risk $250 actually. So $250, $367.65. So I can take 360. We'll do 368, so it's an even amount of shares. So then what I do when I do that is I go to 368. I'm going to go here where I wanted it at 825, and I'm going to do 368 shares at 825. So if it breaks out right there, I'm going to take a sniper new higher low here, new higher low of a trade, since this is just barely making it. And then once it gets me in, guys, I'm going to go ahead and set my stop loss in here. So I'm already ready. I'm ready to rock. Now remember, these are my ideas. These are not yours. Every equity out there has its risk. If you don't know how to use risk management, do not play. You need to paper trade, and there's nothing wrong with paper trading, okay? Paper trading is absolutely just A-okay to do. It helps you learn. What? B. Stewie! Glad to see you back streaming. Not here for a long time, here for a good time. Let's make that bread, homie. Sprinkles. Hey, B. Stewie, it's really good to see you. Do you have me up in the nerve center? Tell me I'm up in the nerve center right now, baby. Tell me I'm up in the nerve center. Let me just go ahead and zoom in. Am I in the nerve center? Tell me I'm in the nerve center, baby. Yeah, feels good to be back. Yeah, that's the coffee pot. Let's go. I'm Sip Shawana in. Let's do this, baby. But thank you, B. Stewie. Thanks for joining us. I'm happy to see you in here. So our first trade will be on SOUN. If this thing decides to break up and get me in, I will be playing this with my stop loss being right here at 570. It'll be about 574 is actually where my stop loss will be. And if it wants to break down from there, then I'll be out. This is a little extended on a 10-day moving average, but just keep that in mind, guys. It is becoming a very nice tight flag. Yes, B. Stewie, I'm in there, baby. I'm in that. I'm in the nerve center. Look at me now, mama. Look at me now, mama. Oh, man. All right, next up, I wanted to just take a look at MOD. I have my alert set at this all-time high to see if it wants to create a beautiful cup and handle. So if we look at the weekly here, let's take a look at the weekly. Okay, it's barely making a cup and handle. We want to see this thing kind of draw out a little bit more. But this is a daily cup and handle, which I don't necessarily take daily cup and handles. I don't take cup and handles at all. I take trend breaks, and I did take this trend break. I am very, very sad to say, though, I actually got out of this. The market actually spooked me out. I'm not going to lie. This was an emotional sell, and that's why we have to stick to our buy and sell rules. I got in this thing. It was a beautiful break trend. A new lower high was made. I got in this thing, and I was very happy with the trade. I had full risk, and if I would still be holding this right now, guys, I would be up $750, okay? Now, that seems like a lot. Yes, it does. But instead, I think I made a couple $100 off of it. It's no big deal, guys. But it helps solidify and reinstate why we need to stick to our buy and sell rules. It doesn't matter what the market's doing at the time. If you took the trade, you need to stick with the trade. It's that simple. And I always want to bring up my mistakes on here just because, just simply put, if I don't bring up my mistakes and I act like I'm some robot, when I do mess up, which I will mess up, you guys are going to come down to me like a hammer, which I would hope you would. But you know that you're a loser unless you're learning. That's my motto. You're a loser unless you're learning. But we are always learning every single day on this show. And that's why we have had so much success in the past on this show, is because we're real. We're real, and we're real free too. I don't ask for $1. I don't ask for a dime. But if I had 2 nickels, I'd rub them together until they shine, baby. So let's go. Next up is going to be SWAV. We called this out 2 times in 2 different top 3 stock watch lists. Look at this. Absolutely beautiful. This is a William O'Neill's cup and handle. A beautiful breakout and then a retest. And then it took off. Am I in this? Absolutely not. I don't play the William O'Neill's cup and handle currently, but they do look like they are working out. So next time I see a beautiful William O'Neill's cup and handle, I might have to take a nice sizable shares into that. So good for you if you took my advice, and I didn't take my own damn advice, so that's a-okay. I hope you're making money on this. It's now trading at 288 and looking like it's getting pretty volatile with only 3 minutes left to go. SWAV, let's go, baby. That is why we call our top 3. And if you haven't watched it already, click on that YouTube link that Covey, our boy Adam, put in the chat, because you'll see right then and there we called this last night. We called this last night, and we called this last week. I'm sorry, 2 days ago, not last week, but we were looking at it last week. It was on the watch list. So with 3 minutes left to go, let's take a look at a few more. I got CVNA on my watch list, guys. This is actually showing a nice base breakout here. If this thing wants to get up above this area of, let's say, around 82.43, if this thing breaks out above 82.43 and it's on volume, that's the key there, on volume, then we are going to see an amazing push to the north side. So keep that on your list, because this thing has a 32% short float interest, okay? Meaning if it takes off, there are going to be people out there wanting to get out. They're going to want to cover. There's some big boys trying to short old Carvana to the south side, and they're holding on for dear life. Can we squeeze them out? That's the question. Can we squeeze them out, team? Next up is DLO. DLO is just on my watch list. I think I can take it off here now. It didn't bounce back. The earnings were garbage, but it is a beautiful actual earners, okay? But they didn't show too much concentration there, so they're not looking too good today. And we have quite a few other ones, but we're gonna have a ton pop up on the watch list with 2 minutes left to go. Let's take a look at the S&P 500 to see where we are sitting right now, just trading sideways. We're about the same area where we closed at last night, so it held all of its gains from yesterday, which is absolutely amazing to see, guys. So with only a minute 40 seconds left to go, let's get it, guys. Yeah, and I'm reading verbatim of what Covey said. So Covey said, let's get it. I say, let's get it. Let me get a sip, because we are about to have some fun. Now, just a quick pre-warning. You guys know I talk a lot, but trading is #1 for me. So if I do get quiet during these, it might be because I am either taking a trade, setting buy or sell stop orders, whether I'm looking up to see what is actually coming up in my alerts, but I will do my best to continue chatting with you while we go through this. If you have any questions, leave them in the chat. I will get right back to them, and we will make sure that we get to everybody's chats and comments, because this is live and very interactive. I'm trying to be here for you, but first I need to be here for me. Right now, I need to keep an eye on my trades. I promised myself that if it came to it, that I would be very, very attentive when my alerts came up and I played my trade. So the only trade I'm in right now is DYN, and if this thing breaks up through this area on volume, I might actually add into this position. I'm only holding 73 shares left of that. And if I remember right, Adam actually is still holding that too. We made plenty of money off of DYN. Now we're just trying to see if we can continue to make more money. But either way, we've already solidified our half in there. So here we go, guys. Here we go. The market's getting ready to go off. I don't have my bell with me today, but I tell you, ding-a-ling-a-ling, we about to, let's go. Market is open, baby. Let's have ourselves a good time. All right, so first up, we're gonna take a look at SOUND. This thing is still just trading in the area. We got IBRX, PLTR, both popping off. Let's take a look at those. We got ACMR, HMY, Pay, and CELC, all popping up on our alert system. So we need to go through each and every one of those. It is gonna be a crazy morning. So let's go ahead. We have IBRX. We're gonna take a look at that one first and foremost. IBRX. So this is a squeeze play, guys. This is a squeeze play, so be careful if you're into this, because it's very volatile. It can get very, very crazy, very, very fast. I'm gonna go ahead and reset this alert so that way we can come back to it. It doesn't look like it's doing anything too crazy at the moment. Next up is PLTR. So this, I think I had measured out for a trend break, and it does look like it is breaking its trend down here at these bottoms, but it never created a new lower high for me. So we're gonna have to wait for one more day on PLTR, but I will create this alert so that way we can keep an eye on it. But I do want to see new lower highs on this. IBRX is still asking for me to take a look. ACMR, I do want to take a look at this. This is absolutely beautiful buy back up here from yesterday's a huge drop off. It dropped off, and then we have this huge soaking candle on the hourly, now heading back to the north side. This could be an absolute market pleaser if it wants to continue to the north side, but it's stopping me out the way it did. Puts a bad taste in my mouth. So next up is going to be HMY, which this is the gold stock, guys. I've talked about this gold stock a couple of times, which also had that same push down and then a soak back up here, which Adam Covey, my boy Covey, he does like to see those buybacks, those big soaking candles. It does show that we have strength down here. I call them oops reversals. I learned that from Richard Moglen. Check out his channel after my stream. Don't you dare leave now. But check, he's got a lot of awesome interviews, and he calls these oops reversals, where it breaks down, it gets soaked back up, and then it starts heading more to the north side. But these are my buy and sell. These are my ideas, not yours, so just keep that in mind. Next up is going to be pay. So PAY, this is breaking out. So this is going to be, but it didn't create a new lower high. That's what it makes me sad, because I do want to take these, but I'm telling you, I need to see the new lower highs. There's only certain things that I will take that don't have the new lower highs in it. And right now, Pay does not have it. So I'm going to just go ahead and set another alert so we can just keep our eye on it. And I can come back and take a little peeky gander here in a minute. So let's see here. What else do we got? We got CELC. Yeah, baby. CELC is looking good, Covey. Yes, sir. This is, I believe you're the one that took and had me put this on my alert, so I'm glad that we have this. Actually, it does look like it's breaking out right here, right now. Let's go ahead and take a look at the 5-minute, zoom in here and see what kind of volatility we're getting. So before, this is kind of a slower, is not showing a lot of volatility. I'm going to reset my alert here, and we're going to see if more volatility comes in a little later. But see all this choppiness? I really don't care for that. But let's take a look at BYON that just popped up, and it does look like it's getting a nice little push here. This is a little bit more volatile. You can see that the chart doesn't have very many gaps and stuff in it. BYND does have a new lower high put in, so this is something that I can take. So 33.25 and 34.60. Let's go ahead and do the math on this really quick and see if this is something that we'd be interested in. So, well, first and foremost, it's 5.1%, and our low is 4.18. So yes, we can take this. So let me go ahead and do the calculations on this. Let's go ahead and see here. Boop, boop, doo. So we got, let's see, our low is going to be, a previous day is 33.22, 34.58. So 34.58 minus 33.22. That gives us $1.36. Okay, we can go ahead and punch this in our calculator at $1.36. And then we go ahead and change our risk to $250. That's $2,050. That would have been really bad. And then we click enter, and guess what? We can take 184 shares. So I'll go ahead and go to the active trader here and type in 184. But before I hit, I need to double check everything. So I will do the buy bid. Let's see what the spread is. The spread's only about, oh, look at that. Big sell-off there right before I hit buy bid. And that's why we never do buy market. Because if I would have hit buy market, this thing would have grabbed me up way up here. Huge price gap up here, okay? So we never want to hit that buy market, or it would have got me in somewhere at 34.60, and I would have already been down a good, I don't know, $25, $30 there. Okay, so right now, the spread on this thing is about 20 cents. So we do want to be very careful when it comes to this. So I do have my buy bid out there, as well as on SOUN, which doesn't look like it's doing any amount of justifying why I would want to be in there. So it's just kind of lingering. So we're going to leave those bids out, and we're going to keep on keeping on, and we'll see if we hit any of those. So let's see, we got, we'll go back to CELC for my boy Covey. So popped up, it headed back down, we reinstated why. I don't really care for it, but it is creating new lower highs, and if we can see volume come in on this, that would be absolutely amazing. That's definitely something we would want to see. PAY just popped back up on our alerts, and look at PAY now. Look at this. look at this. The volume's coming in absolutely beautiful. We are pushing on Carvana now, is also pushing to the north side. Absolutely beautiful. Pay, it looks like I missed this boat because if I tried to get in Pay now, this thing would just be, woo, Ebenezer squeezing, baby. So we'll have to bring up Pay a little later. Maybe I should have, okay, DYN. So DYN, do I want to add into my trade? That's a great question. Let's take a look at the volume here on the 5-minute. Doesn't look like we have a ton of volume coming in for DYN. I might just go ahead and keep the shares that I have in this, but this thing looks like it is breaking out to the north side on another trend break. But I'm not seeing any crazy amount of volume coming in on that. But wow, that does look very, very good. BYON, I might have to go ahead and reinstate my bid here. It's not wanting to come down here any further to get me in. So the next bid is 34.27. Let's take a look at where that is. So I could see me getting in at 34.27. The spread is still like 25 cents. It's starting to tighten up a little bit now. I'm going to give this a little bit more time and see where that wants to land me. But let's take a look at PDD. We want to keep our eye on PDD. So PDD is having a nice fail here. So far, the fail is from where it opened here all the way down to this looks like 6-7%. So now this is out of my category. So if this breaks out, this 5-minute candle breaks out of the top here, it's already bigger than its average daily range. So now I don't have to think about PDD, but I do want to look at Carvana because we have this beautiful break on its trend. Let's take a look at the hourly. All right, this hourly here. Now, I'm sorry, not breaking its trend, but it touched its base. Okay, it's touched its base. We're gonna go ahead and reinstate the alert, make it a little bit higher here. It did break its trend though a few days ago, but why didn't I take it? Because it didn't create a new lower high. And that's why I reinstated this, because I figured this is its new lower high now. And if I wanted to get in at that same price, I could justify it because it created a new lower high and I could take it at the price that it's sitting right now using previous day's low at 76.01. So I could still actually take that trade, but it's not looking too great. I do want to go back to Pay. I'm having a little bit of that, oh man, I wish I would have taken it, but it doesn't have that new higher low. That was my biggest issue with this thing. It did get tight on the 10-day moving average, but I would have liked at least see one more inside day on this before getting in. So we're going to keep an eye on Pay. I'm obviously not going to do any type of fear of missing out or anything stupid like that, because we don't ever want to do that, especially on this channel when I'm trying to teach, I'm trying to talk, I'm trying to get people to learn what the right thing and the wrong things to do are. So DYN's looking absolutely scrumptious. We're up about $166 on this play. Today, only up about $20, but that's how you compact that money. I mean, you guys can look back here. We had these beautiful pushes, a pullback, it got tighter. On the daily, it made new lower highs, and we got in and we just made money. Base breakout, made money. Trend break, made money. Trend break, made money. Now it's trend breaking again, and I'm saying, you know what? We've had almost four legs of trend breaks. I'm just going to go ahead and ride this one out. So right here is where my stop loss is. I'm going to bring it right up underneath previous day's low because I'm using that 21-day moving average. So every day this goes higher, every day is going to be a higher takeaway. TKO, B. Stewie says. If you guys don't know what TKO is, this is UFC, this is WWE, this is their holdings, right? So right now, B. Stewie, it is just trading sideways down here at 81.43. It had a huge push up on volume. I believe this is the day that they acquired WWE. I'm not 100% sure on that though. Maybe you can correct me. Let me take a sip of this. But I will say, this isn't the most volatile stock. It's not really moving too much. It's just kind of trading sideways, creating this base right here. Now, if it can get above this base of 81.80, this has potential room to move higher, right? So, but right now it's trading below all of its moving averages except for the 10-day, but the 10-day is underneath a 50, a 30, and a 21. So for me, this isn't looking too good, but maybe you're looking at something for like a longer term buy. And if you're looking at a longer term buy, you can create this uptrend and say off this very low of the 72.40, it's creating an uptrend. And every time it comes down here, it bounces off this uptrend. And some people like to play these uptrends, and it's getting tighter on this base of this uptrend. So this might actually be a nice area to get in using this low of 79.42. So if you are trading on a paper trading account, this might be a nice area to take a bid if it breaks above 81.89 using the low of that base of 79.13. I like that stock, B Stewie, and good eye, brother. Let's go ahead and look at the indices right now. The S&P 500 on the hourly looks like it's just still trading sideways. Let's zoom in on the 5 minutes to get a little bit more understanding. It looks like a small pullback is being taken right now, a small pullback, but it looks like it's trying to buy back up. So previous day's closing was a beautiful 515.85, and right now we're trading at 515.52. So we're only a few pennies below its closing from yesterday. So that's nice to see. Will it pop back up? Will we get to going? BYON does not want to get me in as it continues to take off. This is an absolute beautiful, beautiful trade if you could be in it, but it doesn't look like it wants to get me in it. So a part of me wants to just go ahead and slip the old bid, get rid of it, but I'm going to go ahead and leave it out there for a little bit more, a little bit longer to see if it wants to get me in. SOUN does look like it's starting to come back up here now. It looks like it wants to try and retest this breakout area. If it does and it wants to break out to the north side, I will be a-okay with that. It can go ahead and get me in. Hopefully it adds some volume to this trade, some volume to its hair, get it all frizzy and messed up. Let's go. Hopefully we don't get no rain and it comes back down. So let's see what else we got to look at, guys. SWAV still trailing higher. I'm glad I made that watch list because that just makes us look absolutely amazing. And if you haven't already seen it, go ahead and click on the link in the chat. Oh, Covey boy, the risk analysis, the editorial, the social media guru, my man Adam has posted that up in the chat for us. It's going to look absolutely awesome. CVNA, it's just still trading sideways, kind of chopping around there. Let's go ahead and look at a few other stocks here, guys. We have Uber, good old Uber with that trend break. It did create a new higher low, but because it did not follow any moving averages from previous, I just did not decide to get into this thing, which I'm okay with. You know, I'm happy to see that we had this buyback. I'm happy to see that, you know, Uber, which just got its inception in the S&P 500, is doing well. It's always nice to see, but the thing is it's not forming my play. So I hope it continues higher just for the sake of everyone's accounts because it is in the S&P 500. And if you have a 401k, a Roth IRA, or anything of those of that nature, you own Uber. Next up is Root. So Root had a beautiful push. I mean, it came off of these lows, went skyrocket. I checked out its fundamentals. It was just crazy how good Root's fundamentals were. But the thing is here, guys, is it just gave all those gains back. It needs a shakeout day. And it really looks like it did do that shakeout day. So that looks absolutely amazing. We got NTRA, Adam, NTRA. NTRA is popping off. It looks like we are at its base breakout. It's not breaking out yet at its base, mind you, but we are at the area where we would want to watch it. Okay, so I'm going to reset that alert, but it looks like it's getting really, really close here. Okay, so I just marked it out so we can see, and now we can zoom in on the 5 minute, which we're at, and we can see right now we're not getting a ton of volume to push it up through there. I would love to see some volume. Let's go ahead and look at NTRA on the volume bars here. So it's an $11 billion company, and it trades an average of 1.44 million shares a day. But right now it's only traded 6.9 thousand shares. So that means it has some proving to do up here. If not, it might still be stuck in this range. Let's go ahead and use the old anchor VWAP to kind of see where we are at. So if we take the lowest, and we take the highest here, we can see that we are above the average, the anchored volume VWAP. meaning that we are above most of the people that are in this are in the money. They are actually in the money. So are they going to take some shares out of this? Are they going to sell into this, or are they going to buy more? Are people going to follow that trend? SOUN looked like it is now seeing some selling action right here in this area. SOUN, this might be this final push, guys. It might not actually be able to get any higher. You can see on the 5-minute that we had this huge volume push, and then it just got bought right back into, sold right back into. So what is going to happen with SOUN in this area? Kobe says not breaking out yet, needs a nice push here. Absolutely, I couldn't agree more with you on that. SOUN though, back to SOUN, it's just not, it's wanting to break out, but it's not. I think what I'll do is I'll remember at 368. Nah, I'm gonna go ahead and leave it. I'm gonna go ahead and leave it, guys. I like this. I like this trade. If it can break out through this area on higher volume, because it is trading some good volume, but it needs to get up through there. Yeah, if it had an inside day, absolutely. You're talking about NTRA. If it had an inside day right here, absolutely. If NTRA actually had an inside day in between these, that would be good. Even 2 inside days, so it got even tighter. 2 inside days, meaning inside this bar, it closed inside this this bar, and then it closed inside this bar wherever it lands us. That would be beautiful. I have a couple inside days and then a beautiful base breakout. So I'm going to reset my alert up there so we do not forget it. I'm going to go back to CVNA, guys. Currently, I am still only holding my one position, DYN, which looks like it came back down to previous day close, which that's just okay. SOUN, I have not gotten in yet, and BYON looks like it took off without me. It looks like we're seeing a lot of soaks up here at the top. So I think what I'm going to do is just contract my bid here. I don't think I'm going to get into this trade, even though it does look good. I do like it. But it's just not doing its thing. What I want to see, guys, is when I get into these trades that they take off and they just continue higher. This one just isn't taking off. It's not continuing higher, which is great because I'm not in it and I don't have to have that fear of missing out. That's always accompanied to trades that you forgot to get or couldn't get into. But this just didn't work out for me, so I'm going to turn a blind eye, and maybe we come back and this thing took off without me. Who knows? But I'm not in it. That's A-okay. But we do have to keep in mind with the Fed rate hike decision at 2 o'clock, you have to understand, guys, we're probably not going to see a lot of volatility up until then. People are going to be indecisive. You're going to see indecisive. You're probably most of the time when I get to a Fed rate hike day, you're going to see a range form in the S&P 500, and you're just going to see it trade inside that range. It's going to look a lot like this. You're going to see a high, you're going to see a low, and you're going to see it bouncing in between that high and that low. Okay, and that is not typical. Usually you get a trend right here, and then it picks a direction, right? That's what usually the S&P 500 does on a day-to-day basis, okay? We're already up to 10 likes, guys. I didn't even ask you to hit the like button. Holy guacamole. Thank you so much. I am impressed and I am proud. So thank you very much for doing that. But I am going to use this time just to say, hey, guys, if you haven't already, smash that stinking like button. And you know what? I'm gonna do you a solid. I'm gonna do you a solid here. If you don't know where that like button is, if you don't know, I'm gonna show you. It's right here, guys. It's absolutely a beautiful like button. I'll even smash it myself to show you how to do it. So go ahead and take a look at my screen, smash that like button. Let's go ahead and get our subscription count up too. If you haven't already, hit that subscribe button, hit that like button. We are growing an amazing community, and that's my plug. That is my plug. That is me trying to continue to keep myself alive and keep this stream rocking. So let me go ahead and clear the pipes here. Oh goodness, that's good. That's good coffee. Welcome to LoFiTrader. Thank you so much for joining me. We're going to have an absolutely beautiful day. We're going to be here all the way up until 2 o'clock. We're going to drop the Fed rate hike decision, and then I will throw up, not literally throw up, but I will put up on the screen Fed Papa Powell and him doing his speech. And so that way everybody can hear what he has to say. And then, yeah, we'll see what the heck's going to happen. So go ahead and vote on that poll. We've already got 8 votes on the poll if you haven't already. Do you think they're going to raise interest rates, lower interest rates, or do you think they'll stay the same at 5.5%? I guess I should edit that and put a percentage next to it, but they won't let me. 5.5% on that. That's a-okay. So the S&P 500 just kind of trying to hold out here at 515.34. Let's go ahead and run through the, I still call them Fang Mang stocks, but we're going to run through them. So let's look at the equally weighted. The equally weighted S&P 500 actually is showing some strength here. So where is the weakness? It looks like tech. Tech looks a little weak. SMH, the semiconductors, look a little weak. IWM, the Russell, is just trying to trade sideways here, but it did give back a little bit of those gains from yesterday. The NASDAQ is looking kind of weak here, but it's just getting tight, guys. We had a beautiful push up yesterday, so it's not unlikely to see a pullback here. It's no big deal. I do like to see a pullback because if we cannot go straight up. So we've been getting this pullback from NASDAQ's all-time highs of 18,416, and that pullback came down and now is resting top of a 30-day moving average. That 30-day moving average, it looks like it's getting tight on, and then maybe if old Papa Powell doesn't decide to drop the mic on us, we might see a nice push to the north side. That'd be absolutely beautiful to see. Dow Jones Industrial is looking strong, though. That's your bigger Coca-Colas, your Amazons, your Apples. That's all your bigger stocks, which we haven't looked at Apple just yet. I doubt Apple's doing good in this environment, but we will see. But your Dow Jones Industrial does look good. Excuse me for 1 second. Next up is, I'm not going to look at that, the TLT. This is the 20-year Treasury. If you don't know much about the 20-year Treasury, I am still learning myself about it. But if your 20-year Treasuries are headed to the north side, that means people are expecting that the longer term, putting your money away for the longer term is better than buying an equity and making more money on it sooner. So if we see a rise in a 20-year Treasury, then we would probably see an inverse correlation in the overall market. So that is my thoughts, though, not yours. The NAIL, N-A-I-L, which is your home builders ETF. This thing is still trading higher. It does look like it had a nice little push this morning, trading higher than its previous close, now at 130.45. Next up is the IBB. So we are actually starting to see biotech start to sell off. So it was looking very, very strong here. And down here at these lows of 134 is going to be its area of confluency. Is this area here going to hold? Is biotech going to continue to be a strong leader in the overall market? So right now you can tell that it's just trading kind of like where the IWM is, which that's where a lot of your biotechs are in the small caps. At least recently, when we go through and we look at all the small caps or all the biotechs that are running, a lot of them are small caps. So if we are seeing this to get beaten down, we can also expect my DYN to get beaten down, but it does look like it's holding out over the overall pullback in the market, which shows relative strength in this area. Now we have Carvana, CVNA. The alert just popped up again, and it looks like we are getting a little bit of a nice volume push on Carvana here. Are we breaking out just yet? No, we are not breaking out just yet, guys. But we're going to set our next line right here so we can see, does this thing want to get above that area and on volume? We are definitely seeing the volume come in here, but are we going to have enough volume for long enough to sustain this pressure to the north side? That's what I would like to see. And guys, if I'm looking at anything, any stock on here, and you have not seen your stock come up, go ahead and bring it up in the chat. We'll go through some more speculative stocks very, very soon here. I'll go ahead and reset my Carvana alert to see if something pops up there. SOUN, it looks like SOUN is wanting to try this now. Go ahead, try it, baby, because I would like to take this for a nice play to the north side. One thing I can do while I wait is if I'm going to use my stop here at 8.6%, then I want to use my stop here and know where it's at. So 8.6% is going to be almost at $9. So we'll go ahead and put a mark here, and then once I get in and I set my stop loss, I will set my alert here so I know when to take half of my shares. Remember, if you want to make money, you need to know when to take money, okay? And this will be my first portion where I would take that money. And if SOUN wants to get me into this trade and wants to continue higher and show me big money, baby, then I would like to take out half of my shares once it gets up to that north side. So If you like what you see here, just keep in mind, these are my thoughts. These are not yours. These are my trades. These are not yours. I do not buy your stocks or sell your stocks. I only buy and sell mine. So keep that in mind when you are buying or selling any equity. I am not responsible. Please don't sue me. DYN, okay, we're not going to go back to DYN. It's just trading sideways, and it is boring. Let's go ahead and look at some more faster moving stocks. Now, all these stocks that I'm going to look at, these next four, they are wildly crazy. Do not play these penny stocks unless you know what you are doing. We have TGL, a gap up of 68%, 69% as of right now. Maybe I just wanted to say it, but we have a nice volume push came in. It came back down, and it's selling on less volume than what it was. Are we going to see this thing continue higher? One thing I can see with this is we have this uptrend that it's making right here like this. So is it going to hold this uptrend? Is it going to continue higher? Is it going to break down, shake some people out before it continues higher? Or is it going to break down here and never come back and just take everybody's money, and they're going to dilute the hell out of the company? We will see in the rest of the day to come. TRUG, True Golf Holdings, it looks like it's up around 55%. NTRA, back to NTRA, Adam, my boy, this looks like the breakout area. Where is the volume, though? That's what I want to know. Where is the volume on this thing? We are starting to see a little bit of volume. Let's see, on this little push here, so we got an $8,000 push on NT, or 8,000 volume push on NTRA. So best of luck to you if you're going to take NTRA, but I just don't see the volume in it. So if we look at NTRA here, we're not seeing much volume come in when the average volume that gets traded a day is 1.44 million, and on that 5-minute push we're only seeing 8,000. We still are going to need to wait. We're still going to wait and see what happens here, because it's just not giving it to us. It's not giving what we want, and you can see, bam, we got a huge sell-off there right there when it did that. And also we need to keep in mind we have about a 20 cent, yeah, it's about a 30 cent, 30 cent range there. Yeah, Adam's agreeing with me. No volume there, but it is nice to see. But that's, you guys, that's the difference between active traders, people have been doing this for a while, and new people. New people will see, oh, it broke out, I'm taking the trade. When you get better, you start to say, well, how much volume is coming in? And then when you get even better, you start to say, oh, what's the volume relative to its average volume and its previous traded volume? And then before that, you start to look at previous lows, and you start to, there's so much to it, guys. And right here, I mean, we could have just taken that and we could be down money. But because we know that there's no volume being traded in this thing, we just set it to the side, we reset our alert, and next time it comes back up here, maybe, just maybe, we'll have a nice trade on it. But right now, we're just going to set it to the side. Is SOUN going to get me in today? That would be absolutely beautiful. I'm looking at it on the 1 minute now. It's not, it's starting to barcode. I don't like that. If it's starting to barcode, there's two things that can happen. When I start to see this barcoding here, two things can happen. Either somebody's short and they need to cover, and when they start covering, it starts to create an Ebenezer squeezer to the north side, if you will. And if it does that, then I want to be in. But if it's not, that's showing that right here, if people are already exiting, or maybe they're getting more short, what's that? Wow, let me take a sip of coffee. What that could show is that this thing could just continue to fail, because there's not a lot of interest. You can see in pre-market, there's not a lot of interest. Now, the pre-market volume was 1.2 million shares traded, and right now the volume at high of day was 7.8 million shares traded. But let's look at SOUN and look at the average, SOUN. Let's look at the average volume traded. So the average volume traded in a day is over 100 million shares on this 2.52 market capitalization. 2.52 billion market cap. It trades an average of 100 million, and the average that it's traded today is 8 million. Okay, so it hasn't traded a ton of volume today in compared to its overall markets volume traded. So what is going to happen here? Maybe this thing continues to follow its trend, but again, if this thing wants to break trend and head to the north side, I want to see more volume coming in here. I want to see more buying volume, and I want to see it push, and I want to see it push higher and harder, just kind of like we would see down here, right? So we had this big trend, we had a breakthrough, and then boom, it took off, right? And it took off, and it continued to take off until you see a volume blowout, and then it pulled back. Very speculative stock though, so be careful if you're looking at it. The S&P 500 is just kind of trading sideways now at 515.50. Let's take a look at old Suave. Suave is still holding its gains. This is one that we did put in the top 3 to buy, so I like to see that thing continuing to do well. Let's go ahead and keep an eye on Carvana. It's pulling back to the VWAP area. SOUN we just took a look at, but I want to stay on it like a hawk. I really want to know what's going on with that. And PDD, I think we can just take this off the watch list completely now. This would have been a beautiful gap up range break if it would have shown its true colors. Is there anything else? We have SRAD as a gap up. We have JAGX, which gapped up but sold off hard. BCEL, and then we're just kind of getting into some crappy tickers. One thing, I didn't take a look at is this stock. This beautiful gold stock that I've had on our watch list for multiple times is now taking off without me. And this is that big soak that Adam likes to talk about. Big soak, I wish we could have called it a new higher low because I could be in this thing. Let's take a look at gold, guys. GLD is the ETF and ticker. So gold is doing the same thing. You can see it found this bottom. It didn't form a new lower high. Today will be the new lower high. So we're going to see if this thing really wants to hold out and possibly take off. And it does look like it's really taken off here now. And, you're going to see the same thing happen for HMY, which is a faster mover. And you can see right here, it is taking off. And, I'm finding a lot of good stocks, but I'm not finding a lot of good setups. IBRX with a nice breakout. Oh no, IBRX, did we miss it? Yeah, it did have a nice breakout. So I called it this morning, the IBRX breakout. I called it, and what the heck? What the heck? I'm not in it, baby. That would have been absolutely nice. That is a trend breakout, gap up. Where's the volume? Oh, it is trading higher than normal volume, it looks like here. But yeah, IBRX, this is actually a squeeze stock. We actually put this, we didn't put this on the watch list actually. This was brought to my attention after the watch list came out, which, I put on my watch list, but I never gave it to the public, unfortunately. So IBRX does look like it has a nice Ebenezer squeezer right here. Yeah, nice breakout, but you didn't get in it, neither did I, brother, unfortunately. Covey, what else you got on your watch list? Do you have anything else that you're watching? Have you taken any trades yet today? And guys, this is the range I'm talking about. It's just kind of going to trade in between this 515 and this 515.22 and 97. So 516 and 515 area. It's probably just going to trade within this dollar range for a little while. We're going to see. We're going to see what happens. Yep. Let's see. I'm going to bring up this. I'm going to stand for a minute because my leg is starting to feel a little funny. Oh, there we go. Rise on up with me, young gentlemen. Let us take a deep dive into the stock market. Yeah, I'm on one leg right now, so I probably won't be able to stay standing here for too long. But yeah, but the earnings schedule, all I had was PDD. That's the only thing that really looked good. We did have SIG, but that's not the right SIG. Let's see what else. Do we have anything else on here for the gap ups? TIGR? Nah, not really looking too crazy. But I am liking it. I am liking it. So if you haven't already, make sure you do the vote, guys. There we go. I see you voting there, Dave. Good job. But yeah, guys, we're kicking ass. We're taking names. Things are looking really good today. Remember, the Fed rate hike decision is at 2 o'clock. 2 o'clock is the Fed rate hike decision. We are going to be here covering all day up until then, and then we'll let Jerome Powell take my microphone and speak the truths into the microphone. So TREX, yes, I do remember TREX. Wow, look at this. This looks absolutely beautiful. I don't know why I didn't set my alert on this. There was probably a reason. Oh, here we go. SOUN, guys. We're going to come back to TREX, and look at that. Look at that beautiful pop right there. It's about to get me in right here. And it's pulling back, so it didn't get me in just yet. But this is it. This is the pop. This is the push. Now, hopefully, we'll put it this way, and I'm going to say hopefully because nobody actually knows what's going to happen. If this thing does want to get me in, we actually see continuation, but I'm not seeing a ton of volume come in right here. So I'm not sure if I really care for this pop. This pop might be before the inevitable drop. I'm going to do something I don't usually do on this channel. I'm going to bring up the level 2. And what I've been doing is I'll bring up the biggest orders here on both sides, the highest orders for the sell orders and the highest orders for the ask. And it looks like the bid orders, we're seeing a lot at 792. All right, I'm in, guys. I'm in this trade. I'm not going to try and look at this level 2 while I'm on the stream with you because it's just a lot to try and take in. But we are in the trade, okay? We are in the trade here, and this is what I'm going to do when it comes to SOUN. And remember, this is my buy and sell. These are not yours. Please do not follow me into this trade unless this is your strategy. Do not buy this stock. So what I need to do is I need to set my stop order in at 759, but I think I looked on the hourly and I made it a little bit lower because we have this down here. So yeah, 757 is going to be my stop. So we're going to go ahead and take 368 shares and we're going to put our stop at, I already forgot the number, 755. So we'll scroll down here to 755. Bada bing, bada boom, where are you? There it is. And then what I always do is I right click on this thing, I replace the order, and I make it a good till close. So that way at the end of the day, when everything's said and done, the next day what's going to happen is it's going to cancel all these orders out, okay? And when it cancels these orders out, I will forget to put my bid in the next day. All right, so I don't want to put my bid in the next day. I don't want to put it in the next day. I want it to already be there. So we always use a GTC or a good till cancel. I always use good till cancel so that way if anything were to happen, I got sick or I didn't wake up in time, which would never happen. If I had to take the kids to school and we got into a car accident, no matter what, and I hate to even bring that, I don't know why I even said that, but the kids were already dropped off when I got into the accident, if that helps. But if anything were to ever happen, I'm already in and I already have my stop loss set. So that way the next day, if this thing flushed out the next day, guess what? I'm already out of the stock. We're good to go, baby. All right, so I'm in this stock. My first takeout is going to be up here at 897. So what I'm going to do, since I have a stop loss in here, I'm going to set a alert that is at or above this 897. So when this alert goes off again, I know that that's the point where I need to take out half of my shares. Okay, so that is my trend break strategy. I did it here in front of you live. If you like what you see, make sure you hit that like, hit that subscribe button, guys. We're trying to grow this community. We're absolutely created an amazing community. We have amazing people in here like Brian. We got Dan in here. We got Jordan. We got Adam. Oh, Adam, you're awesome, dude. I'm seriously just so proud of you, buddy. You're awake. You're awake and you made it before market open. Oh my gosh, young man, you are going places. You are going places, I promise you that. We got Carly in the chat. We got London on the track, if you will. This sip is for me, not for you. Oh, looking good. All right, so let me go ahead and just check this out. Looking absolutely scrumptious. Remember, guys, the Fed rate hike decision is at 2 o'clock. It's going to be absolutely amazing to see what goes down. I do think he's going to keep the decision. I think he's going to keep it at 5.5. Usually they do. Daniel, what's going on, Daniel H? Good morning, good afternoon. How you doing? What are you watching, Daniel? What is on your list? I just took SOUN, but these aren't my buy or sell recommendations, obviously, as you already know. I already need to sit back down. This leg's getting tired. Let's run through the S&P 500. So the S&P 500 right now is just trading sideways, okay? Just like we had previously talked about. It's going to create a range. It's going to continue sideways, but it is only 10-10. So that being said, it's A-okay, 10-10. at 515, 610. I'm sorry, 515.65. Now 67. This thing is trying to hold its yesterday's gains, which is always a good sign. The equally weighted S&P 500 looks like it's up a little bit more than what its counterparts of the S&P 500. Let's go ahead and look at QQQ. Excuse me, guys. Just trying to get comfortable here with a bum leg. QQQ here, it does look like it's trying to hold those gains as well from yesterday. Right now, it is at break even from yesterday's close. It has not gained. It has not lost any money currently. Let's look at SMH. SMH here is still trying to hold its gains as well from yesterday. So we are seeing some sideways action in the market, which is A-OK. Let's take a look at a few of the more speculative stocks. So we already know, I've already taken SOUN. We're going to see what happens with that. Are we up? Are we down? Right now, we're just break even on the trade. We're going to see what wants to happen in the overall market with that. Next up, we have MOD. MOD is looking like it's getting to the all-time highs, which makes me sick to my stomach. I should still be into this. You're watching Pay here and PBM. Absolutely beautiful. Daniel H, are you Danny? Are you Danny from our chat from the other day? Still learning parts of it. Yeah, I believe this is Danny. What's going on, brother? I'm glad that you could make it. Yeah, but I was looking at Pay today too. I had it as a trend break. We had that beautiful push on its earnings. We had that beat expectancy. It had beaten by almost double on its earnings per share. As it pushed higher, it came back, formed a beautiful trend on the hourly. The only reason why I didn't take this morning, Danny, is simply because it didn't create the new lower high. And I'm starting to add that into my rules more and more because I like using that new lower high as a stop loss, just like I took in SOUN just a few moments ago. SOUN had this beautiful trend. It is above a 10-day moving average. It's a little extended, but I don't let that bother me too much. And because of this new lower high, I actually put my stop loss just below it because we have multiple areas of a support down here. So I ended up getting in on this trend break, and I will be taking half at around 9, but obviously these are my buy and sell. These aren't yours. But yeah, I would have to say, Danny, that is an awesome buy on NVDA, which I'm surprised we haven't took a little peeky gander at NVDA currently. But yeah, buying at this VWAP low was absolutely beautiful. We actually went over this once already, but NVDA here, we can see that if we pull a trend from its lows on its earnings, we can see that this thing actually held once, twice, and now the third time. This is where you could actually try and find a nice area to buy into, risking the low of that VWAP, which it looks like that's part of what Danny is trying to learn here. Wow, we're getting quite a few people in here. Let me get to everybody, but first I do want to take a look at SOUN one more time. Let's see if this can hold this area here. We're only up a small amount, looking absolutely beautiful. Yeah, HEAR. I was actually looking at HEAR, Danny, a long time ago when I seen it accumulating shares back here. We could see that after its earnings, you could see all the way back here from February 15th of 2023, believe it or not, that it was accumulating shares, and then it just traded sideways. So I got it off my watch list, and then it came back down, and again, it just traded within this trend of 1223 and 823 for just a whole year, and then finally breaking out on higher volume. I loved this. After it broke out on higher volume, it traded sideways and just got really, really tight that next day. So it was absolutely nice to see. I don't know if you're holding a position or not in this, but I would love to see this thing pull back, create a trend so I can find my way into this. So yeah, Dans are taking over. Dans, you need to calm down, Dans. There's only room for too many Dans in here. So yeah, let's see what else we got. PUBM, Dans was talking. PUBM. Let's take a little peeky gander at that. So actually, I do believe Covey, our moderator, our gentleman, our wakey, bright-eyed, and bushy-tailed before market open, Adam Covey, my man, actually gave me this to look at the other day because it's getting so tight on this area. This is a beautiful base breakout that he actually alerted to me just the other day. And if this thing can actually break out of this area on volume, I think that would be a beautiful thing to see. We could actually take this and I could manipulate my buy and sell rules by going, yeah, that's a trend. I could take that trend. But really, with my eye being as keen as it is, I would not consider this a trend in my book or my Bible. So as much as I would like to say, yeah, this is a trend break here, it's still not on any like amount of volume that I would say, wow, I have to get in this thing. But wow, now when I look at it on the 5 minute, it looks a lot more like a trend, and it's right there at its trend break. You know what I will do though? I will set my alert here just so I can keep a better eye on it. But I don't think that this is going to be in my discretionary area of my buy or sell rules. But I'm definitely going to put this up on my watch, PUBM, to keep an eye on that. So absolutely killer watch. Let's go ahead and see what else we got going on. Bob or Dan J. Bob is actually Dan. Bob the Builder is actually Dan. I don't know why you got it as Bob, Dan, but you're Dan, Bob. GOEV, let's take a little peeky gander now. GOEV, when we take a look at this, the very first thing I have to say, guys, is it's below a 200-day moving average and it's sloping to the downside. Now, I do not like looking at stocks like this at all, because all this does is get very new speculative players into this game, and they see these big pops, these big exciting volume pops. But what these pops do, they just get sold off into. And I say that with confidence because if we look at the overall look at this, it's never been above a 200-day moving average. And on top of that, every big pop on volume gets sold off into, guys. So look at this. Then we can even come back to here. Big pop, a sell-off, pop, sell-off. We got another pop, sell-off, pop, sell-off. And now we're all the way down here, and we see a beautiful pop here, which is getting you excited, Dan. I know it is, and I know it's good to take a look at these, and I'm glad that you brought it up. But you need to understand, Bob, Dan, Bob, that when this thing sells off here, it's going to leave everybody else holding the bag. What we want to see, if you believe in GOEV, is first, it needs to be above a 200-day moving average. The 200-day moving average needs to be sloping more towards the north side, okay? Then we also need to see new lower highs being put in, meaning we need to see at least one of these highs being higher than the previous low, okay? And if you understand that, what that will show is proof of concept. Right now we have no proof of concept, and it's just not looking the prettiest, okay? So let's just keep that in mind, guys, that when we're bringing up stocks, let's first look and see if they're above a 200-day moving average. That's what we want to see, okay? Mountain Dew Zombie Daniel, we got another Daniel in here. Mountain Dew Zombie, that's my little bro. What's going on? How's it going, bro? Told you I was going to be here. Daniel, it's good to see you. I am glad you're here supporting your brother. You know I love you, buddy. Thank you so much for being here. But yeah, we got so many Dans. We got Danny, Daniel, and Dan J all in the chat. I'm changing the name. It's Lo-Fi Danny now. Oh my goodness. Let's see. Pay would need to make a higher low at VWAP. So let's actually, just because I love taking a look at that, let's take a look at Pay on our trader. I'm having a brain fart here. Our trader view, okay? And let's go ahead and use our anchored VWAP. So we can take anchored VWAP, we can throw it at the top, and you can see it's found resistance here. It's absolutely very beautiful to see when you see these things, guys. When you see this anchored VWAP just hold right here at the peak of this. And that's why this anchored VWAP is so dang popular, and that's why my boy Danny loves to take a look at this. So if we also take the anchored VWAP, and we don't do it on the earnings day the previous day, we take it at the low of the day before, we can see that it's going to try and show some support here, or possibly if we put it at the previous low, which would be this anchored VWAP here, you can see that it's being supported here. So we're using the very low and the very high here, and we can see it's creating a range in between that. And Danny, if you have a different area, can you just tell me the dates at which you like to put that anchored VWAP at? If you have time, of course. We don't want to waste any of your time. But yeah, absolutely beautiful to see the anchored VWAP at its lows and at its highs holding this beautiful range here. So if it breaks down below, that might be a short. If it breaks up above Pay, that might be a long. But these aren't buy or sell recommendations. These are just speculative tendencies from an active trader. So let's go ahead and bring up SPY, and we'll keep up on the chat. I told you we were going to be active today, boys, and I will continue to be. Ah, that is some good dew, and that is some good coffee. I'm getting caffeines from both ends of the spectrum here. All right. Let's see. yeah. Pay would need to make new lies. So Bob, Dan, Bob, Dan. That's what I'm calling you now. Dan, Bob, Dan says you have too many Dan friends. Yeah. Hey, keep them coming. I can use more Dan friends. Let's see. Kobe, Dans are taking over. Darn tootin'. It's our chat now. Danny says it's our chat now. Let's see. You can call me Danny. It will be easier. I feel like I am calling you the right Danny. It's D-A-N-I. I'm just a damn stupid American that does not have the roll of the tongue. But it's like Danny. I don't know how to say it, man. And I really want to learn because I'd rather say it the right way. But for now, I will say Danny just because I don't have the lyrical tongue for it. So, oh man, incognito. Let's see, make a new contract, patent, or any real turnover catalyst, probably the only exception to take under the 200-day moving average. Absolutely, yeah, that would make sense. Always so confused watching you, but here supporting you. Yeah, I totally understand. This is one of those things. It looks like, guys, MOD just hit a new all-time high. It's close to its all-time high here. This was one of those trades, and this was, Danny, this was before, and I'm talking about sorry, before we actually decided to take our 30 trade rule, before we decided to take that 30 trade rule, the day before is the day I exited this trade, okay? And that was, I believe, Friday. So Monday, we decided to take that 30-day challenge, or 30 trade challenge, mind you, and now I'm really kicking myself in the ass. I wish we talked about this on Thursday night because I would still be holding a full share size of MOD, a beautiful trend break, making new lower highs, breaking that trend, and now making its way to an all-time high. I would be up a very large amount in my account on this. It's up 10%, over 10% now from where I would have bought. Yesterday, I would have gotten half out, and I would still be earning money on these shares. And I'm so happy that we went over that trading thing with, just bringing this up so I can remember the name really quick. Dr. Is it David? Let me see. Save pictures, camera roll. Oh man, come on. Dr. David Paul. It is Dr. David. So Dr. Do you think I would be able to remember that, right? My name's David. So Dr. David Paul, we watched a nice little masterclass, maybe not a masterclass, but a little excerpt from him that did talk about how that 30-day challenge he would like everybody to try and take. And I'm telling you that TREX, come on guys, let's look at TREX now. TREX does look like it's at that breakout area, but it's not broken out just yet. It's just the area. And so what we want to do when it comes to that breakout area is look at the overall volume. So I'm going to go ahead and bring up on TraderView TREX. Let's go ahead and take a look at it and see the average volume. So it's a $10 billion market cap. The average volume traded is 907,000, which is garbage. It's not a lot of traded volume, but we're keeping an eye on this for my boy Adam. And we have traded now 907,000 shares. So keep that in mind, guys. We want to see a lot more volume being traded before we take a breakout like this. But we will go ahead and set another alert on here just to keep that in mind. Let's go ahead and take a look at sound. So sound's still here at my buy-in area. It looks like it's starting to get some tops here, but I'm in it for the trade. I did play the trend breakout, so we are going to see if this wants to hold out, but I'm going to be in this speculative trade for a full risk, waiting to see if it's actually going to break this low, because this will be my 4th out of my 30 trades. I will get through every trade, every 30 trades for sure. I'm taking this and I'm running with it because I absolutely want to make sure I can get through it. Let's see. Global Capital Ltd. 8th of March, open, 30-minute chart, just in the beginning of the move. It was perfect now. Check the MOD AVWAP from earnings day. Okay, I will definitely check the AVWAP from earnings day really quick. MOD from its earnings day. Let's take a little peek. So earnings was right here. We'll go ahead and click this. We'll do the low. Oh, wow. Look at that. Yeah, man. I tell you, brother, you're absolutely right. You are absolutely right. I even did the VWAP handoff on this, where you would hand it off and then this would be the VWAP here. And then if we just create the trend on this, so we go ahead and draw the trend on this. Wow, Danny, that is an amazing thing. Now that's two traders, and the way they trade, it's converging right here, and it's beautiful to see, guys. So here's the trend breakout. It's also breaking out above its VWAP handoff, right? Which Danny could actually, or would have been in this, or I would have been in this if I was keeping an eye on it, and I played anchored VWAP. We could have taken a small share size here off of anchored VWAP and already be out half of my shares, and then replayed this trend break on a more speculative trade, right? So here we go. Now we have this trend break above its VWAP, its anchored VWAP off of its low, the anchored VWAP handoff, as Shannon O'Brien likes to teach. And now it's breaking out above its anchored VWAP from its highest area of price action, okay? So this is like confluency, guys. This is confluency, and this is why it's good to have a lot of different traders in your pocket. When I say in the pocket, I mean it in a good way. I have traders from all over the place that I talk to, and they all have wildly different trading strategies. And when you can finally put and piece together something you want to focus on, it just helps concrete what you have, because you understand how everybody else is trading and you can find what works best for you. So it's awesome to have you, Danny. It's awesome to learn from you as well. So let's go ahead and take a look at SOUN. It looks like it's creating those new highs. So we're up about $55 on this. I like to talk about the dollar amount because it makes it fun for stream, right? But we always want to talk about our we always want to talk in the sense of not dollar amount. When you become a better trader, you always want to talk in a percentage amount, because a dollar amount is going to be relative to each and every person. So 825 is where we got in. All right. So right here's 825. Let me go ahead and edit these properties. I'm going to mark it green so everybody knows where I actually got into this trade. Now this, just so you guys know, this thing could go right back down to zero. I'm not getting excited about this at all. This is just, I'll get excited once I get half of my shares out and this thing wants to continue higher. That's when I'll get excited. But until then, I know at any given point, this stock can just fail. And we'll come back to continue on this, but I want to make sure we look at PTSG, excuse me, PTSG. So unfortunately, it's not created a new lower high, but I do like the way this looks. It created this trend breakout here, traded sideways, sold off a bit, and now is running back up here and is trying to get a new base breakout area. So I'm going to go ahead and mark this out for a base breakout and come back to it to see if that's what it wants to do. But we're going to go back to sound because I want to keep an eye on this and explain to you guys where my stop loss is and explain it to it in a percentage view, okay? So if we look at the ADR, it moves 18.4%, okay? At 18.4%, if we measure from where we bought it to our stop loss, that's 9.25%. Meaning if I were to get into this trade, I should get stopped out the same day, or I will get stopped out same day, because the average daily range is higher than where my stop loss is. That shows that I have a good amount or a good risk strategy, okay? Because now this thing can get and break either me out today, or I can at least get out half today, because my stop or my break half is going to be 8.84. So it's the same amount. I'm sorry, close to the same amount. Let's say 9%, and then we bring it up here, and 9% is right after my alert. I just set it off. We're going to say $9 is going to be my takeaway, but I have my alert set just before that, so I can come in here, I can set my ask price, and I have time to do that. So 1R is 9% from the base, 9% to my half out, and then after that, that's when I will get excited. That's when I will say, hey, I'm happy that I have made this money on this. And now TRIP is going off. TRIP, I actually played this trend breakout a little too early, and now is breaking out. It's creating, it's right at the breakout, close to all-time highs now. TRIP is TripAdvisor. You know, with everything heating up and people getting back out there, putting on their bikinis. Yeah, me wearing a bikini out there. I want to buy some TripAdvisor. But we had a nice push on earnings. beautiful speculative stock, pushed up on earnings now, and then just created this huge trend. And I played this trend here, and then it stopped me out 2 or 3 days later. Actually, I don't want to say that. I don't want to say that's how I traded that because I don't think I was wildly too into my rules. But now that they're down set, when my rules are played, I have to stick with them. So it's absolutely nice to see. Let's look at the overall market, though. We need to revert to the mean anytime we get too far away from everything. And it looks like S&P 500 is now breaking out here of its previous day's close, and now it's trading at 516.40, guys. So we're having a nice little push in the S&P 500, but just keep this in mind, though. With the overall market pushing higher, we're just going to create a range and probably trade sideways. I say probably because I watch a lot of these Fed rate hikes, and a lot of the times it just creates a range and trades sideways. Jerome Papa Powell will be coming out at 2 o'clock market time to go ahead and give us what's going on in the market, whether he wants to keep the rate hikes at 5.5%, keep them the same, or if he's going to raise or lower those. So that being said, I just think the market is having a good old time. Maybe we even go all the way up to all-time highs here and then pull back. Who knows? But I know when he turns on that microphone, a lot of the times we get a big pullback in the overall market. Next up is the equally weighted S&P 500. Also is showing beautiful strength to the north side. Really am having a hard time getting comfortable here. Oh, I should probably grab a pillow or something for my leg. The QQQs also getting bought back up. It's now trading above its closing price previous day. It's trading at 439.23. The QQQs is looking nice. It's holding that 30-day moving average. And as you can see, the QQQ has played off of this 30-day moving average very nicely. 1, 2, 3. You can count this as 4 and 5 times, I guess. But now we're here sitting on 6 and 7, and it's kind of just trading sideways. And we really needed to see this in the overall market. Simply put, when you get this huge push and you just continue higher, up and up and up and up, people start to get a little worried. You're going to have some sell-off. You're going to have some pullback. That's just the way the market works. Now, is it going to break a 50-day moving average and head lower? That might be when things get a little bit more worrisome. So let's see. Got a message from Danny to help me better understand probably where he put those at. So both need to make me lower high. The thing is, where I was going to say about the June rate hikes, 60% chance. The word matters a lot since the market price currently 3 cuts. Yeah, absolutely. Absolutely. So let's see. Oh, on the 30-minute. Yeah. Yeah, absolutely. One thing I do want to look at is MOD. Yeah, it's created that it's breaking out here. Now this one, just so everybody knows, I don't play breakouts. I would want to wait for it to come back and retest. But this is absolutely nice to see. It does put a little salt in the wound, I have to say, simply because when you get these breakouts here, right, and you're not in the trade that you were full-sized in, it hurts. It does. It hurts as a trader because you're supposed to still be in this thing, you know. PSTG absolutely breaking out here, heading to the north side. It does look like some volume is coming in. Now trading at 51.51. This looks like an absolute freaking mover here. It is trying to break through that base breakout on volume. We're going to see if this thing wants to continue to head higher. It found some support on the 21-day moving average after pulling back and started trading less volume on the pullback. So that's I keep wanting to call it volume price contraction, but it's not volume, it's VCP. And I had to get schooled on that by Danny just the other day. But VPC is actually what it's called. Mark Minervini. But yeah, VPC is the contraction pattern that you'll see in price. And you've seen that here on the volume. You've seen a nice push up on volume, and then you see it kind of contract here in that area. But I don't want to go over too much because I obviously need to touch up on my Mark Minervini skills. No point in trying to push that off onto you unless I am a master at it myself, and I am not. So let's take a look at DYN. Now looking like it's pulling back here after that push. That push through got me nice and excited about, but Good thing we didn't add into that trade. It's still trying to find its way in the market here. But we did look at the IBB, which we know the IBB is pulling back, which is the biotech ETF. And when you see the biotech ETF pulling back, it's finding some support now right where we drew that support line at 134. I'm sorry, yeah, 134 exactly. And now it's bouncing back off of that. Is it going to continue to push higher, or is it going to just trade sideways and then further break down from there? If it does want to break down from there, I can obviously say that DYN is probably going to follow its overall ETF and break down as well. This trade might actually be over soon enough, but we will see. I've already made plenty of money off of DYN, so if it wants to stop me out, I'm not going to be saddened at all by that. Making money on this stock was a lot of fun all the way through here, guys. We played this trend breakout. We played this base breakout. We played this trend breakout. We played this trend breakout. And now we're just holding on to the last 73 shares to see what it wants to do. Let's take a look at SOUN. Now having a little pullback here. Mind you, if we want to look a little bit further into this on the 5-minute, we can actually take this and scooch this on up, and we can say it's actually now just breaking out. But a lot of times what I like to do is put this on the hourly, and that's where I draw everything. And on the hourly, it does look like I hit its marks. It does look like it's sitting very nicely here. So let's see if this thing wants to continue higher. The volume is a little lower than I like to see, but sure enough, we are getting volume at that pennant. We're going to see if this thing wants to continue to hold. Very speculative stock, though. These are buy or sell recommendations. Obviously, you need to be very careful when you're getting into these. Oh, did I not get LUNR? Oh, there it is. It's popping in now. So LUNR. So this stock has earnings the next day, but it's very, very shorted. It's got a 34% short float interest rate on it. And so that's why I just want to bring it up. And I actually put this on our squeeze watch list. The thing is, guys, when you look at these and they start to gain some attention here and they start to break out, if you see a lot of volume coming in on these, they might be what I call a short squeeze. They might be squeezing out a lot of the people that have them shorted, and they will be covering. And when they cover, it just everybody starts to cover. Everybody's trying to get that same price. Everybody's just buying over top of everybody. Everybody's just trying to grab whatever price they possibly can. So they're willing to just pay for the ask, exit on the ask, and that just creates this impending doom if you're shorting, right? And a lot of times that's how you get these huge pushes up to the north side, whether it's people covering or people trying to buy over top of everybody else. It creates this momentum that is very hard to stop. So it's 10:37. We still have an awfully long way until we get to the overall Fed rate hike decision. But I promise you this, guys, it is going to be a doozy. When the Fed, Papa Powell comes out, the market gets extremely volatile. And that is, to say the least, that is something that I can guarantee on this show, is that when old Papa Powell comes out and he turns that microphone on, we see volatility come in the market like you wouldn't believe. And it's absolutely fun to watch. It's fun to see. It's not fun to be on the wrong side. So make sure you are using risk management today and every day. We want to see you using risk management here. It is the very first thing that I learned, and it saved my butt. So make sure you're using risk management. All right, time to take a sip. Time to wet the old whistle. That is good. I think we'll take a little dew hit right here too. Woo! And this one's for the wife here. This water. She wants me to drink water. That's for you, babe. All right. Let's see what we got in the making. What's going on in the overall market? You know what we haven't checked in on in a while is Carvana. Let's take a little peeky gander at Carvana. Now up here, it's about ready to hit my alert and tell me, hey, let's take another peeky gander. But what about the volume on CVNA? And what about the anchored VWAP on CVNA? So let's go ahead and bring up CVNA. Excuse my language there. All right, so we're not going to put it on the lows of the EPS. We're going to put it on the lows of the very next day. And it looks like it's holding out very, very well. And it also looked like it's breaking out through its anchored VWAP from all-time highs. So that's absolutely nice to see. Now, what about the volume here? So the average traded volume is 8.2 million, and we've traded 2 million. That is 1/4 of today. Now it's 10 o'clock. We have 11, 12, 1, 2, 3, 4. We still have 6 hours left in the day, so 9. So it's been about an hour. So it's actually trading higher than average volume here. So that's good to see. That is good to see. So if you're looking for a breakout in CVNA, it's above and being supported by its lower anchored VWAP, and it's broken through its average anchored VWAP at its high, and it's trading on more than average volume for the day. So that's all really good signs to see. So maybe, just maybe, when CVNA breaks out through here, we'll see sustained buying volume or selling and covered volume come through here and breaking out through to the north side. And if it can do that, we might have ourselves a nice little Ebenezer squeezer to the north side. Let's see, are you taking day or swing trades today before FOMC? I only take swing trades unless they accidentally become a day trade. So meaning that is I took SOUN. I keep wanting to type sound. I took SOUN. I'm in this trade. I'm in this trade, and I am not allowed to get out until it stops me out, or I get to take half out at that $9 area. So I will be holding through the FOMC meeting. I have not put in any rules about not trading during the FOMC, or I don't exit my positions out before the FOMC. I don't do anything like that. I trade just as normal, but I do like to keep in mind that FOMC meeting is happening, so I always make sure to use risk management. What about you, Danny? Do you exit out before the FO? So you're just day trading today, or you're probably going to exit your more speculative stocks before the FOMC. No, I totally get it. But you have to understand, Danny, that I'm only in 2 stocks right now. DYN, which I've already made my money on, and I've already brought my stop loss up with the 21-day moving average. It's just a trailing stop, so I can get that exited at any time. The SOUN as well, I have 1% of risk in this stock, so if it stops me out, that's a-okay. But I don't believe that that SoundHound is going to be too affected by the FOMC, but I could be completely wrong. I could be completely wrong, but I do like you saying, brave man. I see where you stand there. I do see where you stand there, and that's a-okay. But I do appreciate your concern. But yeah, I'll tell you this. Maybe if I would have seen that you said that, I may have not even got into the stock because of the FOMC. But my thing is I'm trying to play this breakout. I'm trying to get half out before the FOMC meeting even happens. So that's my thing. I have 9% is my risk down here. It's 9% to my risk, and it's 9% to its takeout, my 1R, and it moves 18.5%. So if this breaks out here and it can hit my half, I'm happy to take it out, and I like those odds. I'm not taking anything now. Only 6-star setups come in. Man, you just added a star. I thought it only went up to 5 stars. We got 13 votes on the poll. If you guys are just joining us, there's 2 things I'd like you to do. Go ahead and take a look at my screen. You got this wiggly jiggly thing in front of you. Go ahead and hit that like button. If you haven't already, please do so. It helps this community grow. Also, if you would like to, you can hit that subscribe button. Make sure that subscribe button's hit. I do appreciate you. This helps me survive. This helps me bring life into the channel and grow this ever-growing channel. Also, if you want to, go ahead and vote on this poll. This poll is going to be over at 2 o'clock once the news comes out. The poll is on the Fed rate hike decision. Currently, the previous Fed rate hike was 5.5%, and the overall judgment on the Fed rate hike decision is that it will stay normal. It was going to stay at 5.5%. If that happens, that's a-okay. We want to see that happen because that is, well, what we really want to see happen is a Fed cut. If the Fed cut happens, we're going to see the market go absolutely bonkers to the north side. That will be absolutely beautiful. But yeah, Danny, I do agree with you, and I do understand why you're not going to take anything, only if it's a 6-star setup. Sound had a 5% range within the first 30 minutes in previous FOMC. Just check them. Oh man, just check how your stocks acted on the 31st of January. Okay, I'm really, really happy that you brought that up. So let's take a look at the 31st of January. Let's see, January 31st. Let's take a look. All right. 31st. January 31st. It moved 7.86%. 7.86%. Did I do that right? Yeah, 7.86, 5% range within the first 30 minutes. Okay, I see. So it did move pretty large. Well, good thing that my stop is over 9%, right? Now I feel like I'm just talking myself. I'm talking to myself down, like, oh, it's gonna be okay. It's gonna be okay. Yep, brave man, brave man. I do see where you're coming with that. I'm going to take what you said and I'm going to learn from it. We probably won't be taking any more trades today. Thank you for helping me keep myself safe, Danny. Danny's been doing this a little longer than I have, and I do appreciate everything that you bring to the market, brother. Look at the 30-minute bars at 2 o'clock. Yeah, okay. Let's see. I think it'd be easier for me to do it on this. Let's go to I'll just do the 1 hour here. 30-minute January 1st. Let's see here. November, December. Let's see. January. All right, we're trying to figure out here. Why is this so wonky? So January 1st? Yeah, I'm having a hard time finding it, bud. Unfortunately. Probably because January 1st, it doesn't exist. January 2nd and December 29th. Did I get that right? Oh, that's why. I'm sorry. 31st. Oh, me so sorry. Me so sorry. Okay, wow. Okay, I see it. January 31st at 2 o'clock. Let's take a look at 2 o'clock. Yeah. Okay. And that's probably why you want to be on the 30-minute. Do. We're all learning here. If you guys hear a baby screaming in the background, it's probably because it's close to his bedtime. He needs to eat some food and go lay down. Let's see. That's March. Now I'm all whopper jawed and I'm killing time. I'm burning the time. I'm burning the ticker. We are looking for January 1st. January, where are you? January, where are you? So January 1st, there you are. Or 31st, son of a gun. January 31st, there we go, right here. We can zoom in on this time on the 15-minute, and you can see that it did get some volume. Yes, yes sirree, Bob. Yes sirree, Dan Bob. Oh my gosh, I'm not used to using TraderView. If you can't tell, yeah, we actually got a big thing of volume too. So at 14, let's see, at 2 o'clock, so 12, 1, 2. I'm looking at Carvana now. Son of a biscuit. That's what you add. All right. I think I just need to stick to what I know right now. I'm obviously having trouble trying to find this. Let's see. I feel like I just want to get this though really quick. So March, February. I've done it twice now. I should be able to do it a little quicker, right? January, February, January 31st, right here. All right. Now where the hell's the ticker at? There it is. January 31st at 2 o'clock. This took forever, dude. This took forever, dude. Come on. Come on. Alright, I'm done. I'm sorry. I'm done. Let's bring up CBNA. Let's see where that sits. it's hard to keep a show and try to learn something at the same time. So often it ruins the short, even though I am not saying there are shorts runs, but just volatility large there. Have a good one. Got to go study. Yeah, dude. Yeah, poor Reese. Yeah, Reese is out there just screaming. I'm surprised he hasn't came and knocked on this door just yet, brother. You know, he's a very curious George. I wanted him to come visit me, say hi, but that's all part of it. Let's go ahead and reset this chart, and we will come back to think or swim and recalibrate here. I went off on a little tangent there, trying to figure something out in Trader View. If you have a mouse, you can scroll there. Yeah, I know I am. I'm scrolling there, Danny. I'm just not good with Trader View. And when it comes to this, I don't have my setting for the 30-minute. So I do apologize. I don't want to make myself look like I'm incapable on air. This sip of coffee's for me, not you. Much needed sip of coffee. All right, where are we, guys? Where are we? Okay, let's take a look at the economic calendar. This is where I get my economic calendar. I go to investing.com. You can go ahead and go on here. We all have learned this a time or two, but you click on filters here. Let's go ahead down here and you click on United States. After you click on United States, then you want to click on importance. The 3 stars is what's important. That gives you the most volatile times. And if then, and only then after you do all that, of course, I'm going to click on the wrong thing. After you do all of that, then you'll find that on your economic calendar, if it ever loads again, you'll only have the most important 3-star volatility events for USA. It gives you the time over here. We had crude inventories come out at 10:30, which never is very volatile when it comes out, but it is data, so it is of importance. And then you have the FOMC projections, the FOMC statement, and the interest rate hike decision, which I will be here live at 2 o'clock, and I will bring it to you as quick as I possibly can. Yeah, Danny, he's a noob. Yeah, Daniel, I am pretty new at a few things. I ain't gonna lie. But I will say this, I am always here to learn, because you're a loser unless you're learning, right? So I am great with technical analysis, but when it comes to technology in general, yeah, I'm a bit of a boomer. It is a miracle that I'm actually able here to use OBS to stream, to have an alert system, to be functional on social media, but that's also why my boy Covey is the man. Covey, Adam, my social analytics, my YouTube editorial, my friend, my Conrad, my chum. He helps me out. He calls me a boomer all the time. I'm not just a noob, I'm a boomer. Get that right, Daniel, brother, son. All right. So the S&P 500 is now trading at 515.85. It's looking nice here, but like I said, it's probably going to just trade within this range. Let's go to the 5-minute, and you can see the range now. Just trading sideways during this involatile area with the old Papa Powell deciding to coming out at 2 o'clock. We have RSP. RSP is just holding up off that 21-day moving average, which is absolutely nice to see. We have the QQQs. The QQQs are just trading sideways. We're at the lows and trading lower than previous day's close right now at 438.42. The SMH, which I actually have a lot in my other account, my long-term investing account, which I actually got to call my financial advisor today. We got to go ahead and see if the old financial advisor has me invested in the right situations there. The IWM's giving us a nice push here. I don't know if you guys seen that yet though, but the IWM, which is Russell 2000, it's your small and mid caps here. They are getting a little bit of a push, which is beautiful to see. Let's see. Just making sure we're keeping up on everything. And I do want to check the other chats because I don't want to leave anybody, no man left behind. So let's just go ahead and check the messenger chats. Let's see. 2 o'clock. Let's see. Yeah, everything's looking pretty good. IWM is doing a nice, beautiful push at 202.45. You love to see it. These things are very, very volatile at times, but then they have these huge run-ups and these big pullbacks. The NASDAQ here looks like it's running up as well. That's nice to see, guys. We look at the NASDAQ here. It's running towards those all-time highs. Let's go ahead and throw this in the hourly because that 5 minutes is just too much information at once. So right here, we got this nice push up. We're not too far from, we're probably a days or two away from hitting that all-time high again in the Dow Jones Industrial. That's absolutely beautiful to see. The TLT is up 20.25% today, trading at 93.15, which is nice to see. The 20-year Treasury, if that can continue higher, continue lower, that would be even better to see, though. But at least we're not getting a nice ramp up. The IBB, we want to see only for DYN. We want to see that thing pop up and continue higher. But remember, when it comes to the IBB or any of your biotechnology, we know that they are very, very volatile stocks, and at any minute they can just drop. A lot of people don't like playing the biotechs because they get burned on them so fast. But we do have the VIX volatility index in here, and this is actually showing a very nice uptrend, which is not good for the overall market. You actually want to see the VIX volatility to stay low and stay down. That means that we aren't getting a crazy amount of sell volume, because usually if there's a lot more volume being traded in the market, a lot of times that will tell you a coffee mug warmer. I'll show you my coffee mug warmer. It's right here. It's more coffee. Dan, Bob, Dan. That is my coffee mug warmer. That's what's keeping it warm. That's like the perfect mixture right there. We got cold coffee, hot coffee. Back to the VIX volatility index. When you have the VIX volatility index here, we want to see it staying low, because a lot of times when you get a surge of volatility, like I said before, usually stocks walk their way up the stairs, right? Nice and easy, and they take the elevator down, or they jump out the window and they head down fast. Well, when it heads down fast like that, that is usually making things more volatile because people panic. People's caveman brain says, I know make more money, I sell, right? But people, when they're making money, they don't ever think about taking that money out. That's that animalistic, brain that we have, that as traders we have to really train ourselves to get out of that mentality and to take profits. And that's why I always say I like to take profits at 1R. And speaking of which, it looks like SOUN decided to come right back down to where I bought in at. So we're going to see if this thing wants to continue to hold out here or if it wants to head higher. So yep, it just kind of broke out above, kind of just lingered around for a little bit, and then came right back down. It's retesting this VWAP area. We're going to see what it wants to do. And since we've been playing with that VWAP strategy, that anchored VWAP strategy, let's go ahead and bring up SOUN on here, and let's just take a look. So right here we have the anchored VWAP off of its high here, and you can see that right now it pulled back. Let's get rid of these ones here, and then we'll take the anchored VWAP off of its lowest low, which is right, we're going to say here, and it looks like it's trying to hold above that anchored VWAP. It did break out above that anchored VWAP, which is nice to see. It looked like it's trying to now hold above that anchored VWAP here. So there we go. And now it's just kind of making a range in here. So depending on which way it wants to go, that might show us some profitability there, or it might show us a stopping point, which is my lows at 755. So we're going to see what happens with SOUN, but right now it's not looking too promising. It looks like it got me into this nice breakout here, this nice trend break, making new lower highs. So I am happy with the overall trade itself. I would take this again, but when it comes to the actual price action in this, it's not looking as profitable as I would like to see it. I'd like to see me get out my half right away, like almost immediately after I get in. I like to see these things get a surge of volume to the north side and then get me out almost immediately. Let's go ahead and take another sip of coffee, huh? Oh, that's good coffee. That's some good coffee, I tell you. Let's look at the analytics of this thing here. Oh yeah, things are looking good. Things are looking mighty fine, ladies and gentlemen. Let's go ahead and take a look at a little bit of everything. Moderation alerts, we're good on all that. All right, so back to the task at hand, ladies and gentlemen. Let's go ahead and run through our stocks that we're keeping an eye on. and see if anything has happened. So we already talked about SOUN. Let's go ahead and take a look at MOD. MOD is breaking out of its highs and continuing to head higher now. Absolutely beautiful. Wow, I tell you what, I wish I was still in the stock. If I was still in the stock, we'd still be making quite a bit of money. I'd still have half of my risk in there, which would be $125 worth every dollar. So we would be up. So after that, that would be 125 from there. So we'd be up roughly $600 or $700 right now in MOD, and that would have been a beautiful win after taking a string of losses 2 days ago. I took two losses in a row, possibly 3. If I bring up my data, I can take a look. And you're going to have those as a trader. You can't win every single day. As much as I would like to, I'd be rich. I'd never have to work again. But you're not going to get that every single day, and that's a-okay. But you need to keep in mind how much risk you actually have out there. So we take data every single day. We have this beautiful drive, myself and Adam, and we just curate all of these tickers. Every one of these tickers, we have about 100 different tickers that we have taken data from, and Adam goes in there and he will speculate whether or not speculate, but he uses the data to conjure up where the best buy and sells were. So yes, we were on a 10-day moving uptrend. I took SOUN. The buy date was today at 3:20, and this is going to be, so I gotta add, so that's 1. I'll just keep that in mind. SOUN, the buy price. So this is where we go back in here and we type in SOUN. We bring up the active trader, and then this gives us all of our information on here. And then I can bring up the stock study and pull it over here. And then I'm going to do buy price. Well, we're going to do market cap as well. So let's get the market cap for SOUN. And the market capitalization is 2.57 billion. So we're going to go ahead and put that in here. 2.57 billion. And then the buy price was at, let's see, $8.25, so 8.25. Our stop loss was set at 7.55, so we put 7.55. And my position size was 368 shares. All right, and then from there, you can actually, he's got everything set right here. It's absolutely beautiful. And then it'll give you the risk per share, and then the total risk. You can bring this up. It'll show you your total risk. 257 is my total risk. Oh, and look at that. Let's go ahead and exit out of this. Look what just popped up. Dave. That's me, baby. Dave just popped up. And look at this beautiful trend break. So, Covey, I hope that you are here watching this with us right now, Adam, because you are the one that pointed this out to me. It doesn't look like we have a ton of volume for this, but let's just do this trade. So at 15.81%, it's actually a little higher than its ADR, so I cannot get into this right now because it's over and above. And because of the Fed rate hikes coming out, I decided that SOUN will be my only trade for the day. I don't know what I'm doing to my leg brace, but it's not good. Give me 1 second here. Oh boy, I don't know what I'm doing. Oh no, did I break it? I sure hope I didn't. Oh, there we go. That's why. Yeah, I don't know what I'm doing with this leg brace. It'll just have to chill for a minute. But anyway, guys, so DAVE is a little higher than its, yeah, gotta wait, yeah, for sure. Maybe if it pulls back and we see some volume come in. This is about the average traded volume on this thing, on its pops. But, you know, Dave is Dave. Dave's being Dave. Don't be a Dave. But let's take a look at some of the other stocks that we were looking at. CVNA, man, I'm telling you, I got my eye on CVNA. Uber's looking good. Root looks like it's just stuck in this this area of opportunity, we can call it. I did make this trade, but I did get out on Friday with the rest of my other trades. NVDA still looks like it's trading in that range, which is absolutely beautiful. I wish Dan I was still in here so that way he could let me know if he is actually going to exit this trade completely or not. That would be actually nice to know if he's going to do that. I'm going to ask him on this chat. Are you exiting before FOMC. We'll see what he says about that. Because he called me a brave man for getting the SOUN, which I do feel pretty brave. So, oh, you got stopped at DNTH. Yeah, you know what? That DNTH we should probably go over because it was a beautiful trade, and then it got really choppy. So DNTH, and this is why we say on this channel, we need to know when to take profits, right? If you're going to make money, you need to know when to take money. And what do I mean by that? What do I mean by you need to know when to take money? Well, simply put, DNTH here, it's a therapeutic stock. It rallied up off of this area, creating a new higher low, and then breaking out of this area. My boy Adam Covey, bada bing, bada boom. Congratulations, Covey. I'm very, very proud of you. He took a nice share amount into this trade. And what did he do? Well, right when he got 1R out of this, so let's say he took this break right here, and his stop loss was at 2.64. He took out half at 2.64. All right? So when he took half of his shares out here, which I don't even know if he was able to get it out here because it moved up so fast, so quick. But when he took out half of his shares, he locked in profits. That's what we want to do here on this channel. We need to lock in profits so that way if it does have a major pullback and stops you out from your break-even trade, you've already made money. So it's great to see that he made money on this trade, and I love to see him doing it. So right now we're back down here at its breakout area, and DNTH is a therapeutic stock, so we're not too surprised that he got stopped out because in IBB you can see we had a huge pullback here. That huge pullback is probably in all the therapeutic stocks if we took a look. Okay, so keep that in mind when you're taking a stock and you're watching a stock. You want to make sure it's in a healthy ETF and it's not just some lone runner that's by itself. You want to make sure it's a leader. The S&P 500 is still trading inside of its range at 516.11. The RSP is still trading in, well, it's actually pushing. It's looking a little better than the S&P 500, which is trading at 165.43. The QQQ is now trading at 438.90. The SMH just trading sideways at 217.98. The IWM, the Russell 2000, now trading at 202.34, which looks really great for this stock at the moment. NASDAQ still trading inside of its range. The Dow Jones Industrial making new highs for the day and higher than previous day's close. So that looks really good for this stock. You gotta love to see it. You are in some of those stocks if you have a 401k, Roth IRA, or any type of investment strategy. All right. So back to our more speculative stock. Looks like CELH here. It made that nice little break and then now is just trading sideways. This might be the new lower high that's going to set the tone for tomorrow on a trend breakout, okay? So here's the trend. Maybe it trades one more day with inside of this before breaking out, or maybe we get 2 or 3 more days of inside trading. CLSK, this looks like it's trying to get above this base breakout, which it looks like it did momentarily before heading back down. It's trading at 1773. That is your miner for a Bitcoin miners. PATH, this thing is just kind of trading sideways. This was my first and only options trade I ever actually took, guys. That's why I like to have it up on here. It's very nice to see that I'm not in this any longer, and I took profits on this thing. I actually took profits when it broke the all-time highs, and then I took more profits later in the day when it started to come back down. Just because I was new with the whole options trading thing, I wanted to ensure that I did it properly and made some money off of it. I don't know what I'm doing to my leg brace, but this thing is messed up. I really don't know what I did, but this thing, it's in a whole bunch of different pieces right now. Yeah, I messed up pretty bad. I don't know what I did, but it is not looking too pretty in here. I should probably get a pillow or something to put up underneath here, but can't stop now, baby. I do want to take a look at ACMR to see where that kind of sits. Yeah, so it got that nice buy back up, and now it's just kind of trying to hold off in this area. And I'm sure it's going to trade like NVIDIA. So if we look at NVIDIA, you'll probably see a big sell-off from yesterday, which you got that big sell-off, and then that big buy back up. And ACMR is doing that exact thing. And now look, NVIDIA is trading sideways, ACMR is trading sideways. So how did I know that was going to be like that? Because it's in the same sector. You'll see a lot of sectors that are going to be trading the same way, right? All right, so next up, let's go ahead and take a look at VTEX. VTEX, a nice push off these bases here, but not a lot of volume that came in for this. So you can see that we have this trend all the way down here, all the way through here. It's a kind of a wild trend though. You can't really, I mean, it's two separate trends it looks like. So you got a trend here, right? And then you got another trend here, and neither one of them look too volatile, right? Then you get this huge push up here, you know, not on much volume. I'm willing to bet that this thing is just getting a lot of people in, and it's probably going to sell off. You're going to see a lot of people taking their shares out of it. We're going to run through a few other things that we have on here to see what it looks like. You know what I do want to look at that I haven't looked at in a while is pay. Pay looked like it did an absolute great job. And look at MRUS, guys. You know, this is one of my best trades of the year, this MRUS. Made a lot of money on this trend break and made 3 different legs before running, holding this 10-day moving average and stopping me out completely at 48.91. This was an absolute beautiful trade. I held some of the position all the way from this base, returning myself a net of around 47% roughly, just because I'm doing it as quick as I can for you. So let's go ahead and look a little bit further into this now. Fate. Let's look at Fate and HOWL. So HOWL looks like it's coming down to this 50-day moving average. Is it going to want to be able to hold here? I gotta take this leg brace off. Holy cow. I did something wrong with it. It's just falling apart, guys. What did I do? What the heck did I do? I don't know. I broke it. Let's see. Uh-oh. I really think I broke it. I mean, I should be able to fix this, though. Come on. It can't be that hard. Right? There we go. All right. I'm fixing it. I'm so smart. I'm so smart, you guys. All right. And then I can probably push this back out and turn that little tab. Yes. Turn the tab. Or not. Whatever. We're going to leave it. We'll leave it there. Let's see, make sure it's even on the other side. Oh, look at this, me. I'm such a mechanic. Look at me. Oh, my. I don't mean to give dead airtime. You guys know I don't give dead airtime, but it looks like I am. Trying to heads down, focused on this. Losing viewers. Holy guacamole. What do I do? Holy cow. Don't ever mess with your brace while you're on stream. Don't do it. Not good. All right. Next up, RNA. Oh, wow. Now look at this. This is the stock. I don't know if you told me about this, Adam, or if I told you about this, but RNA looks absolutely picture perfect to me. It's creating that new lower high today, and that's what I like to see. I like to see that new lower high because then I can actually take my risk off of something, and I know that it's showing some support. So that new lower high is being set in. I do have a alert set out there for that new lower high, and hopefully it actually gets me in this stock. So we'll see if it's actually going to do that, and that will probably be more of a setup for tomorrow. But because it looks so good, well, actually the FOMC meeting today, I'm not going to take any more. Oh, did I tell you about it? Okay, good. But this here is the stock. This is the stock that I was like, man, I can't find it. This is the stock that I was actually talking about right here. I really like it. I think it's a beautiful stock. I didn't do any look on any of the, I don't know anything about the fundamentals or anything on this stock. But I would really like to see this thing take off and give me a chance to get into the stock. There we go. Leg brace is fixed. I'm feeling better. Oh, we're going to have ourselves a good day now. But look at that. That's what happens when you fix a leg brace, guys. If you're fixing a leg brace, everybody just leaves. They're like, no, we don't want to watch this guy. This old cripple. INBX. We're going to keep on running through this. SBRB. Goodness gracious. If you were in this, I am so sorry to hear it, but that's why these penny stocks and these biotechs, this is exactly what I'm talking about here. You woke up one morning and you had half your account at $5, and then you woke up and you are in a penny stock. You are in a 75-cent stock. You lost, you lost your whole account. WRAP also heading down. Now we have ADV just trading sideways, close to its highs here. This is kind of nice for a base breakout, but it's just it's not got a lot of volume being traded. So these are all just really speculative stocks that we have on here. Not too much to really kind of go over or look at. I'd much rather go over the large caps, the bigger tech stocks. Let's go ahead and take a look at some of our bigger ones like NVIDIA. NVIDIA here, just still trading sideways. We got SMCI, which I have marked out here, guys, for a beautiful trend break. If it can do this, I would really like to see that happen. We're going to go ahead and lower that alert just to get notified sooner when it pops up. We have Tesla. Good old Uncle Tesla is trying to hold some of its gains from 2 days ago. Still trading sideways here at 173.39. Okay, next up we have Netflix, NFLX, Netflix, or also known as Netflix here. I have this as a base breakout. Covey, if you want to take a look at that, you might like it. The all-time highs are at 627.74, and right now it's trading at 622.59. And if this wants to get up here at these, what? Sergio, what's going on, brother? It's David and Sergio. Yeah, that's right, baby. It's good to see you, Sergio. I'm glad you're in here, buddy. If you're taking a watch, if you're watching anything, Sergio, why don't you put it in the chat so I can look it up and do some technical analysis on it? I'd like to do that, brother. So Netflix, if you guys have been following Netflix, I have been following it. You can see all these green bars where I've made some money on, lost some money on. But Netflix had a beautiful trend break. We actually did a nice risk to reward video on it. Kobe, if you want, you can throw this Netflix short that we put up. If you could throw that up in the chat, if you have time, brother. I know you're doing your own trading and you got your eyes on a few things, but yeah, man. Sergio, we have only taken one trade so far for the day, and it's almost pretty much break even, and that's on SOUN, and we'll go over that in just a minute. But let me know what you're watching. Let me know what you're trading, Sergio, and we'll definitely take a look at that. I'd like to know how you trade or what you look at. I do think you're just taking futures, but we do go over the S&P 500 very, very often, so I'm glad you're here with us. Thank you so much for joining us. Netflix at 625.24. If I see volume coming in on this, we're creating this beautiful uptrend off these bases here, looking absolutely nice. And then we also have as well, actually this trend looks nicer to be broken here nonetheless, just like this, guys. That looks really nice. I do like that, just like that, looking beautiful. So if it can break out here, break all-time highs on volume, Netflix might not get a nice little pop to the north side, but Netflix, nobody does it like Netflix. There's nobody else that can compare to Netflix at this time. There's plenty of other things out there like, Hulu and Prime and all this stuff, but Netflix is very situated on exactly what it has been doing, and that is being a huge, volatile, big mover, money-making machine. So it's awesome to see. Let's see. Dan Bob Bomb Dan says, duct tape. What y'all think of ET? Let's see. Oh yeah, duct tape for my knee brace. Just get the duct tape in here and just throw it all around. Bob Builder, Dan Bob Dan. I don't know if that would be the best way to fix this, because by the time I'm ready to take it off, I'd rip out all my stinking hairs. But let's take a look at ET for you, Bob Dan Bob. So this is actually really nice looking. So we have this energy ET, energy transfer is what it's called. And this is a slower mover, guys. So this is what Dan Bob Dan likes to play. These slower movers, which is great if you're into that. This is going to be more in your probably Dow Jones Industrial type stocks. They're slower, bigger stocks. So let's go ahead and take a look at this. It looks like we're actually getting this thing, if you want to call it a breakout, I don't know, but it is breaking out of its supported area here of that 1344, you can see it's just been following a 200-day moving average, bouncing off of it multiple times, getting tight, popping up, retesting, getting tight, popping up, retesting, testing that 200, now actually getting extended from its 200-day moving average. And what you can see for this is, as energy stock, which energy has actually been doing very well right now, this might be something that you want to take a look at. Now, Dan, you know for a fact that I play these trend breaks. So if I would have been looking at this, say here, and it broke out through this, that would have been a great area for me to buy in and then played off the 10-day moving average. Now, I am looking at this in hindsight, but I do like the way this looks. This would have been a beautiful stock for me to get into and get out half of my shares and let this last half ride. Now, if you're looking at getting into a stock like this, I would suggest finding a way to get in, but not when it's extended from a 10-day moving average. Because every time this thing gets extended from a 10-day moving average, it wants to pull back and retest. So maybe wait for it to pull back, retest, and then take a paper trade into it and learn a little bit from it. So let's go ahead and take a look at the chat. Yeah, duct tape, dude, that's hilarious. Broken even, one of my accounts caught a rebound. Nice, very nice, dude. I like to hear that, Sergio. Been watching Bitcoin. You know, we haven't taken a look at Bitcoin. Let's take a look at BTC, gentlemen. So Bitcoin looks like it's trying to hold out on that 30-day moving average. I still think it needs some time here. It needs some time to digest this huge move. I mean, it had a huge move up, but I do believe in Bitcoin. I do believe Bitcoin is our future in a sense. And why do I think that? Here, I'll give you my only reason why. Do you believe in the dollar? We have believed in the dollar for a very long time. Now the dollar is getting a little too inflated. People aren't trusting the dollar as much. People want something that is going to be founded that can't go up or over or get diluted. And that's where Bitcoin comes in. Now, the only thing that keeps the dollar alive or any other asset alive, any other fiat currency alive, is you and I believing in it. Okay, so if you and I believe in the dollar and I give you $1 and you feel like I've given you something of worth, then what if I give you a Bitcoin? Would you feel good about that? Yes, you would, because Bitcoin is believed to be worth money or worth something. You can buy and sell things with Bitcoin currently, and that's and I say currently, current currency currently. You can currently do that. So people believe in Bitcoin. And if you have people that believe in it, then it is worth something. It is only worth what people believe it to be worth. And so unless this bubble pops, which anytime it has, it's gotten bought right back up. And this isn't the first time we've seen this bubble pop. And then we get bought back up, bubble pop, bought back up. Now, is this thing a bubble? It's just getting bought back up. We are on a beautiful trajectory for Bitcoin. Now, after coming off this 200-day moving average, actually, we can look at the 200. Look at this. Comes up, retest the 200-day moving average. Now on a sloping up 200-day moving average, this thing just goes skyrocket. Absolutely beautiful to see, guys. And now it's just digesting a lot of these gains and it's pulling back, and we're going to see what it wants to do here. So now looking at it on the hourly, you can see a huge push up and a pull back. Now if we can see new lower highs being formed in this area, we're going to see Bitcoin travel even higher, more than likely. And if it doesn't and it wants to come back, we're just waiting for support. That's all we're waiting on. I truly do believe in Bitcoin, and I believe we're going to get a nice run. And I keep telling Adam, and this is very speculative, we're going to 100. We're going to 100 with Bitcoin, at least 100,000 on this push. And I know that's wild and speculative, and I have no evidence backing that up. I really have no evidence backing it up. We might get cut in half. And once it gets cut in half, all the gurus, all the big guys of the financial institutes will buy this up. BlackRock will come in, buy it all up, and then we're going to head back up there, right? But who knows what actually will happen to it? I just want everybody to know I do believe in it. I truly do, because there are a lot of people that are speculative around that. So let me just bring up the S&P 500 just so we don't get confused that this is an equity site, but we do like watching Bitcoin, of course. So S&P 500 trading at 516.18, and let's catch up on the chat. I used to work for Energy Transfer. Sergio, that's pretty cool. You used to work for Energy Transfer. That's really cool. If you get any insider information, you need to send that to Bob, because he's looking at investing. And he asked you if would you invest in ET, Sergio? And Sergio says, I really like the consistent dividends. And actually, Bob Dan was asking questions about dividends yesterday. It's not something I can highly relate into because anytime I'm doing an investment on a dividend, it's always VOO or VTI. As you can see, I actually hold about 18 shares. Nothing much. It's just something my brother and I do. Anytime he wants to buy in, I just go ahead and buy in with him because I'm the one that told him to buy VTI. So anytime he buys VTI, I buy VTI, and I make sure that he knows I'm putting my money where my mouth is when it comes to telling my brother where to put his money. So saying that, let's continue with the chat. Bob says, nice Bitcoin halving in April. Ooh, we got a call out. Halving in April. All right. Well, we'll see because April's coming up very, very quickly. Easily, yes. Okay, so 100K, baby. Yeah. Sergio says easily. Covey says, yeah, 100K. Let's go. Big opportunity on altcoins. Yes, there's always big opportunity on altcoins. I call them poop coins or maybe something a little bit more absurd, but I just believe in Bitcoin. I mean, altcoins, I don't really care for. I'm sure that there's alternative reasons to buy those coins. I'm sure there's reasons like speculative reasons why that might be nice to have coins like that, but really I see coins as just being like more like V-Bucks, you know, or like video game coins. Like they're going to be worth what people believe them to be worth, right? So if you think, you know, if a kid thinks he's got 20,000 V-Bucks and the kid thinks they're worth this and he wants to buy that currency with another kid and he can give him V-Bucks, right? Then that's worth something there. But as an adult, if there were V-Bucks and somebody wanted to pay me in V-Bucks, I'd say, you're not paying me in V-Bucks. How am I supposed to unload these? So if you can get an altcoin that it's easy to buy and sell and unload because other people want them and you know that they are gaining maturity and they're gaining growth, then yes, I would believe in those altcoins. But I don't know enough to really even talk about altcoins. But if you think that there's going to be a great opportunity in those, in a technical pattern, I can tell you this, they do follow technical analysis. So if you can buy and sell in any type of equity or coin, then there's money to be made, baby. So big opportunity on altcoins. Covey is trying to set this chat on fire, apparently. Let's see. Oh, Sergio, I forgot to read that, but yeah, you've been waiting for the Fed decision. 2 o'clock, baby. 2 o'clock market time, and we will be here. We're going to give it to you right here now first, baby. It's 11:30, so we don't have too much time left. Time has been flying because when you love doing what you do, time just flies by. Now, let me take a sip, and we'll make sure we're all caught up on the chat, baby. Ooh, oh, big opportunity before alt season. I gotcha. So you're catching them while they're low and selling them while they're high. That seems to be the best way to do it, brother. Let's see what else we got. I'm not. Yeah, you said I'm not a smart man. I need a slow mover, but I can tell you this. Some of our smartest men are in the slow movers. Sometimes it's easier to just dollar cost average in and you don't have to worry. Sometimes your homeostasis or your happiness is worth more to you than trying to get rich overnight, right? Some people don't need to make 20% every day on their money. They're happy with making 10% in a year. And if you have a large account and you live a normal life, and let's say you have $1 million, can you live off 70 grand? Can you live off of 70 grand a year? I mean, that I would be totally happy with that. 70 grand a year, I'm totally fine with that. I don't even need that amount, to be honest with you, because I live such a simple life. Most of it's right here in front of the computer, chatting, talking with my friends, or going to family get-togethers, or hanging out with my family. You know, trying to do homework, trying to do homework on school days. You know, but trying to relearn fractions on school days. But you know, other than that, guys, you know, if you live a simple life and you lead a simple life, you don't need much. You don't need to have a huge rate of return. You don't need to be a smart man. A smart man will tell you that if you just take your money, dollar cost average, into the S&P 500, you are going to have a rate of average return between 8 and 10%, and that is with inflation. That's adjusted already for inflation, and that has been calculated over the past 100 years. So that's been back tested. It's been shown. It's been proven. So if you have speculative money, if you have extra money, I always say don't go blow it. Don't go buy another video game, Daniel, Mountain Zombie Dude. Go ahead and you know, invest a little bit of that for your future and use that like a video game. That's what I like to see. I like to use my account as if it were a video game. And hey, how much money do I have today? I'm winning. I'm beating I'm beating previous days, you know. Let's see. Well, yeah, not surprised. Netflix signed a contract with WWE to make all PPV and shows live on there. Make sure, guys, too, that you are live on this channel. So go ahead and look at my screen here. So while you're looking at the screen, you can click this live button underneath this, and boom, it'll take you right to the live section of this trade. And then while you're here, make sure you hit that like button, hit that subscribe button, and then I will leave you alone when it comes to that, and we'll get right back to the S&P 500 trading at 516.30. 516.30, absolutely beautiful to see for the S&P 500 to be trading still up here. But like I said, it will probably be more range bound throughout the rest of the day. For the rest of the day, simply put, because we know the Fed meeting will be coming out. When the Fed rate hike decision comes out at 2, you're going to see things get so stinking volatile, you're going to wish that you had your stop losses in if you didn't already. I'm seeing SoundHound do a nice little pullback here, so we're down a little bit of bucks, but I still have a stop loss down here at 755. So we're going to put on our hopium, and we're going to hope that this can hold out, so that way the account can hold up, right? We want to make sure that we're trying to make money, especially when you're on live stream and you're sweating. You become a little sweaty boy because you're doing it in front of everybody. But no, I'm cool, calm, collect. I'm happily. Oh, check that out. I was just talking about my financial advisor, and he said, please give me a call. And look at that. We just added about another $18,000 to the long-term account, and we're going to figure out exactly where we want to invest that. And actually, I think it'd be better for me to call him after the Fed rate hike decision, and I'll let him know that. I'll call after FOMC. And that'll give me a better idea on what I want to do. What if the FOMC meeting, they say, we're going to cut 0.25%, even 0.25%, knowing that, them saying that we're going to cut 0.25%, that would make things so extremely volatile in the market. It would make things so extremely volatile in the market simply because people wouldn't be expecting that. Now, is it going to happen? I doubt that that's going to happen. I doubt that we're going to have that kind of rate hike or that rate cut. I think more we're going to stay the same at 5.5%. But I'd sure like to know what you think. So make sure that you go and vote on that poll that's in the chat there. Let me know, do you think the Fed is going to increase rate hikes, lower rate hikes, or stay the same? The poll, or the overall analysts think that the 5.5% is going to stay the same. And if you go to investing.com, the economic calendar, it actually shows you that that right here, we can just show you right here, at 5.5% is the forecast, and previously we were at 5.5%. So meaning stays the same. Okay, and that'll be again at 2 o'clock, guys. We'll be doing this at 2 o'clock, so just keep that in mind. Now, I'd love to see SOUN. Just go ahead and make an inside day for me. Let's get through the FOMC. Let's bounce off the 10-day moving average, and let's head to the north side for one more final huzzah push. Let's get all these bag holders out of it. And you know what I do like to do, guys? I do like to go to the FinViz, okay? And we'll type in SOUN, and let's take a look at their stats here. So SOUN, the short float's only about 18.39%, which isn't too high. I mean, it is a higher interest short. Anything over 10% could be considered higher, but I would say 30 is where the sweet spot, when you actually could get a short squeeze like people are trying to cover. Okay, so that's just something I want to look at, and it's something you can do. I always try to bring free content here, so FinViz is absolutely free, FINVIZ.com, and you can go through here and you can type in whatever you want. You also could click on there's news, all the new news that pops up and comes out. You can use these screeners, which I actually have a part 1 and 2 on the screeners that shows you exactly how to use these screeners. Let's see what else. What else can FinViz show you? Insiders. What? Shows you insiders trades. That's cool. But yeah, and what about the map? Yeah, there we go. You got this nice little map here. This map shows you, green or red. Where are these counts sitting? Nvidia's down 0.48%. It just pops this up. It shows you in the technology semiconductors, you got Nvidia there, AVGO, AMD, Qualcomm, ANTC. So it's a nice little tool that you can use. Here's Microsoft, also in the technology software. You have Microsoft, Oracle, Adobe, PANW, SNPS, FTNT, and GPN. Just some of those. Then you have consumer electronics, which apparently they're giving Apple their very own spot. Apparently they don't have any competition. Apparently. Then you got Google, Meta, and MTCH, which I'm not even sure what MTCH is. Let's look that up. MTCH. So MTCH Match Group. I'm actually not even aware of these, but they're below a 200-day moving average, so it's not something I really want to take a look at. But Bob, Dan, Bob, if you're still in here, right here you can see we are starting to get a pullback on that ET. Maybe we do head back down to that 10-day moving average and we create another trend here where we can get in and move to the upside. That way we have an area where we can play using a good risk management. All right, so back to Netflix. So we know Netflix is just trailing right here at its all-time highs, looking very, very good in the overall market. If you have Netflix, you're probably going to see some selling at these highs like we've seen right here. We've seen the same thing in NVIDIA. Big sell volume come in, bought back up, started selling back off again. So if we get through, whoever's selling all their shares here, if we can get through this and head higher, that'll show you that your supply runs out, your demand is increased, and then it's going to go higher. The screener video is up. Thank you, Kobe. Our boy Kobe, the moderator in the chat, shows you exactly where that screener is. And you can click on that, go to that video. That is 2 parts. The first part shows you how to use the screener to show the best stocks in the overall market. And then the second one shows you the stocks that I chose and did a little stock analysis on. Next up is Microsoft. We have already looked at this morning, and we will continue to look at Microsoft because it is a leader in the overall market. You can see with the market at all-time highs, this thing helped drag the market up using this 50-day moving average as support the first time, second, and third time, now getting close to that all-time highs at 427.82. This stock is trading at 422.43. Microsoft looks very, very good here. And I tell you this, I created this trend line a long time ago, and this thing broke up through it, came back and retested that trend break. Absolutely amazing to see. Got very volatile after it broke out through. Is this selling? Is this the top? Well, it looks like we're getting bought right back up afterwards, so we will have to have a little bit more time to find out. AMZN looks like it's trading a little lower for the day. Is this where it's going to sell back off? Are we going to see this huge push up get sold back off into and maybe find support on a 50 or 200-day moving average by the next time it wants to actually break through these tops? So we will have to see. Good old Uncle Meta here. So Uncle Meta is just trading kind of sideways here. Looking really good though up here at these highs, using this 30-day moving average as its basing area. You love to see it. Now Apple. Apple is trying to come up off these lows, but look at this 200-day moving average. It's starting to slope down a little bit now. That's not a good sign for Apple. When you see this bottom here and it's creating a new higher low, that's great. That's exactly what we want to see. That's our first sign that it's not that bad. But with a sloping 200-day moving average, this thing really needs to get back up there. It really needs to get back up there. And then I think our next sign would be that crossing of the 10 and 21 and 30-day moving average. Like over here, when it created this breakdown and bounce off the 200-day moving average, where that moving average was still sloping up, you can see where the 10 crosses the 30 and 21-day moving average and starts to head higher, that was your buy-in area, right? Or better yet, you can see the trend that it created here, that it broke out above after retesting a 200-day moving average. You could get in here and play through the crossing all the way until it breaks that 10-day moving average right here. And that right there, even on a slow 1.6% mover, let's say you would have gotten in right when it broke back up above its 200-day moving average and its trend, and then got out at that, you would still have an 11% move there, which is absolutely amazing. That is what you want to get. You want to grab those 10% movers, those 20% movers, those compound and grow your account. Okay, so that's what we want to see here in Apple. But right now, below a 200-day moving average, and as that moving average starts to curl over, that's never a good look. Now, we have an alert going off for CELC. So let's go back to CELC, and we'll take back where we left off. Now, CELC does look like it's starting to break out here. Is it on higher volume? We're not seeing a ton of volume come in. We're seeing more than average actually come in. We can actually bring CELH up on here to see how it looks. So CELH, its average volume for the day is only 5 million. It's only traded 657,000 for the day. So it's not looking too nice, but it is looking like a trend break. This is very speculative here, guys. It's definitely not something I recommend new traders buying into, but it is a trend break nonetheless, and it is on a little bit of volume, but it's not my type of trade. Covey, what do you think? Do you like this trade? If you're still watching, I'd really like to know your opinion on this, because I know we got new lower highs here. I know we have that volume contraction right here. And now we're breaking out here on a little bit higher volume, but it's not enough to really Google over. I mean, look, you got this huge buy up off the base, and then you have a little bit of volume here. It's only 25,000 only 25 shares, only 25,000 shares traded right at this area. So it's not much volume at all, but it's definitely something that, I wouldn't want to miss. So it's absolutely beautiful. Do keep in mind that its earnings are on the 27th. So that is my outlook for CELC. But Covey, let me know if you are still in the chat what you think about CELC right here. Back at it, we're going to go back and take a look. So we were just looking at Apple. So there's a few other ones that I want to take a look at. Google. So Google is very speculative up here at these highs because they gave this huge gap. Now, is it going to hold this gap or is it going to fill that gap? That's the real question. Let me throw this back on the hourly. And then you can see here this trend break. I was even talking to Adam. We were in a chat in our Discord, which you can join. It's in the description of our video here. You just click on the description down here and you can find the Discord if you're more than welcome to join it. We have plenty going on here. And I said, we have this trend here, and when it created this trend, when I seen it, I said, well, this trend is in an interesting area because it bounced once, twice, and then 3 times when it came down, and now it's bouncing off the 200-day moving average and came up to retest this trend. I wanted to take a short here, but that's not part of my play. My plays are trend breaks. And then, sure enough, the next day, it breaks its trend, it holds its lows, and it carries on higher. The only issue with that is this volume right here. If that's where I was going to take my stop loss, it would have been 1.97%, and the ADR on Google is over 2%. So it wouldn't have been the best stop loss area for this. So I would have passed if I would have actually seen it, but I did not see it. So I'm not going to say that I would be in this thing. So Mara, lovely Mara, this beautiful thing is bouncing off this uptrend line now. It looks good, but the question is, what is it going to do in this area? So it does look like it is creating a bit of a trend. It does look pretty nice. I said when it breaks out in this area that I would keep an eye on it. It does make a new higher low, which is also very nice to see. So Mara, lovely Mara, might be a nice buy. If you don't know what Mara is, it's a digital holdings acquisition, or digital holdings, maybe I shouldn't say acquisition, but it's a digital holdings for Bitcoin. They are a Bitcoin miner. So if you're not aware of the Bitcoin miners, it's a Bitcoin miner. I am still watching, but I do like the setup and the buyback that it had today. I won't be trading till after the FOMC meeting today, just waiting to see, but it's definitely something I'm watching. Heck yeah. Very, very good. I thought you might like it. I thought you might. So guys, I just want to take a quick second out. First of all, thank you. Thank you for being here. I do appreciate your time. Go ahead and take a look at my screen if you would. We have this poll. We have 16 votes already on this poll, which is nice to see. But make sure that you hit that like button right here. Just smash it. Smash that thumb button. Hit that subscribe button if you're not already. And go ahead and leave a comment in the polls. If you leave a comment in the polls, I can go over any ticker that you are watching today. More than happy to do so. Do appreciate you guys being here. You guys are awesome. Thank you so much. And we will get right back into it. So after Mara, sometimes I just like to look at Snap, S-N-A-P. Snap looked like it was snapping up off these lows and then sold off hard once again, selling off hard and now back at these lows. The only thing that I can say for SNAP, simply put, is that I use it. I know a lot of other people use it, but it's below a 200-day moving average. And the only other thing is the issue with it is the only other thing that I have a big issue with is I'm waiting for it to get bought by another company. I really think that Snap will end up getting bought up by another company. Like, who owns Snap? I don't think anybody owns Snap, do they? That's a question. So, like, who owns Snap? Who owns Snap? Snapchat in instant messaging is not owned by Meta, but is actually owned by its company Snap. So that's exactly what I thought. So Snap owns Snapchat. Snap Incorporated owns Snapchat. So the thing is like, will they sell their company? Are they going to sell to like Meta or maybe a different, bigger platform, and then they're going to use all that data in their database? Because Snap has to have a ton of data. They have to have a ton of data. If you really think about it, you know. Bob says, does Apple even have a product any longer? Phone sales in general have slowed. Yeah. So they really don't. They really don't have anything new that's coming out. AAPL, not APPL. They really don't have anything new that's coming out. So I mean, you can really see sales start to decline. I mean, how many iPhones are you going to come out with before people are like, you know, I want something new, you know? And even then, you're only going to maintain when that comes out. So you get a really good point there. Is its growth, you know, is its monster growth finally over? And now we're just going to get that sideways action like you see with like Amazon, like you see like with Coca-Cola, like we talked about before, KO. You know, it's just sideways action now. Like, how much more can they grow? You know, how much more can they lower? They could start by lowering prices. That would increase their sales. But is that going to increase? Is that going to increase profitability? You know, I don't know. I'm not a financial guru in that sense. But when it comes to Apple, yeah, that's a great question, Bob. That does it. Do they even have a product any longer? They said that they're not going to be coming out with the car anymore. Personally, I knew that was just bull crap when they came out with a concept car. They're just doing that to keep their investors bought in, you know. But, you know, I don't know why anybody would want to try and test Tesla, because Tesla's got it. Tesla's got what's going on, and Tesla's down. Tesla's not happy. It's not doing good right now. So Tesla's the way to go. If you want EVs, you know, go with Tesla. I don't see anything else really competing with Tesla. Not even Lucid, LCID. I mean, people are so speculative about Lucid, but like Go EV, Lucid, a lot of your charging stations, they all look like this. Every one of them look like this. You get these huge run-ups, these huge sell-offs, run-up, sells off, pump and dump stocks. And I was watching and trading LCID when it was a SPAC. Does anybody remember what the SPAC stock was? It was like CCTV or CCVT or something like that. I can't remember. Lucid company used to be a SPAC. It was like a very speculative SPAC stock, and it wasn't even a real. It wasn't even a real account. It wasn't even actually traded. It wasn't even allowed to be traded on the real market. So they used a SPAC stock to trade it before Lucid bought them out and said, okay, now you're Lucid, you know? And this is exactly how they've always traded. They've always got bought up and then just crap the bed. Bought up, crap the bed. Look at over here. Bought up. I mean, I even had a line here because there was so much volatility traded on these days that I knew when we got a nice pop-up right here. Beautiful. And it popped up and then it just crapped the bed again. And now below a 200-day moving average, continuing to head lower, this thing is going to be a penny stock if you wouldn't already consider it a penny stock. It's a pop and drop. Where Tesla, yes, below a 200-day moving average, but Tesla is huge. Elon Musk even said he's overvaluated when they were overvaluated, right? And so Tesla had this huge run-up, huge excitement in it, but now below a 200-day moving average that's curling lower, this thing could head lower too before it actually catches a bid. K-Dog, what's up, big man? Good to see ya. Intel, what's the ticker? INT? I can't remember. INT, it's INTC. Yeah, that's it. INTC, I gotcha. All right, so Intel. So we know Intel has been getting some excitement lately because of the whole chip and software and everything going crazy with that. So when we look at Intel, let's just take a look at the overall market on the daily time frame. Let me blow up this daily time frame just for you, buddy. So if we look at Intel, we can see that it's had better days, right? We have seen Intel at these highs, but it created this trend at this base here and it broke up through it, came back, retested a 200-day moving average. Now Intel looks like it's on an uptrend off the base. We can simply put an uptrend here by drawing this line to show Intel is on an uptrend, okay? Not only is it on an uptrend, but it's above a 200 rising 200-day moving average. So that's very nice to actually see happen, right? You want to see that happen. Now it looks like it's coming back down to retest maybe the trend line, or maybe like we have done more than once, maybe it's coming back down to retest this 200-day moving average, okay? So Intel currently right now looks short-term downtrend, okay? Short-term, it's in a downtrend. Long-term, it looks like it's in an uptrend, and the overall stock looks like it had a huge downtrend in the bear market, and it's slowly trying to recover. Now this is a very slow, not very slow, it's a slower mover though at 3%. But right now, for me personally, these aren't my buy or sell recommendations, but me personally, when I look at Intel, I would not play this stock because it's not holding any moving averages. You know, if I were to look at Intel maybe over here and I seen it pop up and it holds some tread on this 21-day moving average, we might be able to play like a trend break, you know, right here. But even then, that's pretty choppy for me to want to play, right? But you can see here it came up, held a 10-day, pushed up higher, traded sideways, came back down, found some support on a 21-day moving average, and then pushed higher. That looks a little nicer, but now it's just kind of chopping around, huge drop off, kind of chopping around. So it's below all of its moving averages right now, other than its 200-day moving average. So it still has hope, but it still has proving to do when it comes to Intel. And K-Dog, I really hope that helped. I hope it helped you in some way. But yeah, if you have any other questions, just leave them in the chat. We got plenty of time. The FOMC meeting comes out at 2 o'clock. So we got a little more than 2 hours here with Dave. So cheers to you. I don't know what you're drinking. I got coffee. I'm keeping my coffee body warm. I'm double fisting it, baby. It's got caffeine in the left, caffeine in the right. We're going to be up all night. That's good. This is better. It's warm though. I got 3 warm Diet Dews sitting here. That's A-okay. All right, let's continue on. Let's take a look at Hack. So Hack is an ETF for your cybersecurity. Hack is looking pretty good here. It's trying to hold this uptrend. It's trying to hold this 50-day moving average. It's doing its absolute best that it possibly can. But we're going to see what Hack wants to do here. I tried to play in the cybersecurity before, but it didn't have much luck. It had a pullback after earnings. I can't remember what the ticker symbol was called, but let's go ahead and take a look at the SPY though. It looks like the S&P 500 is now trading at 515.87, so that's a good look. We want to make sure that the S&P 500 does stay in this range, I've been telling you since this morning, it probably will stay within this range. Oh, let me get rid of this. Hang on. Sorry about that, guys. It looks like the S&P 500 will stay in its range like we talked about this morning. And what did I say? We talked about how the S&P 500, when it is happening before the FOMC meeting, a lot of times it will just create a tight range and just trade sideways until the FOMC meeting at 2. Why is that? Well, because people are not speculating very highly before an FOMC meeting. That's why it's not as volatile. It's not going to be as volatile today until 2 o'clock. But I promise you, at 2 o'clock, when Jerome Powell turns on that mic, he is about to drop. Well, that could have went a few different ways. The market will probably get very volatile. I've seen it happen multiple times. It's probably going to get very, very volatile. So keep that in mind. We have about 2 hours until the market volatility commences, and then we'll listen to Jerome Powell's speech. That comes out just after the market. They're going to release their statement at 2, and then right here on the economic calendar, you can see at 2:30, they're going to have the press conference. And that's when I will allow, that's right, I will allow Mr. Jerome Powell to take the microphone, take over the show, and go ahead and let us know what is going on in the overall market. He'll give us his thoughts on the CPI index, which is the Consumer Price Index, which he uses, that Consumer Price Index, the majority of the time to help him understand where inflation is sitting and whether or not he needs to raise, lower, or keep the Fed interest rates the same. All right? I hope everybody understands that, and if you don't, you're going to hear me repeat it multiple times because it is just how the market works. That is how monetary policy takes in the data. Takes in the data, takes in the information, and lets us know where we are at on the overall market. Okay, I need to get this brace off. Oh man, my leg is just so crampy. But that's A-okay. I'm here for you. I hope you're here for me. Let's continue on, ladies and gentlemen. We have the S&P 500 at 515.85. We have the RSP, which is the equally weighted S&P 500 at 165.30. We have the QQQs now up 1.07% at 438.89, looking pretty good, but trading sideways just as we anticipated. The SMH was the Van Neck ETF semiconductor, which is just the ETF that holds all your semiconductors, mostly NVIDIA, but it's got your AMDs, your Qualcomm, it's got your MU, your Micron, it's got your Taiwan Semiconductor, it's got all of that in there. The SMH has just been trading sideways at 217.75. We have the IWM, the Russell 2000, made a nice push this morning after it sold off in the pre-market and aftermarket. Now trading at 202.19, up about 0.3% currently. The Nasdaq's up 0.02%, still creating a nice flagging formation right here on the daily. If we go ahead and mark this out for you, we can just go ahead and show you what this flag's kind of like looking like here. You know, we have this base right around here, and then you have this flagging pattern, this trend break in a sense, guys, and it looks really good from my point of view. But anything could happen here because, you know, Papa Wall might come out. He might say, hey, look, let me tell you a little something. We're gonna raise interest rates, and the market is just gonna crash. You know, that's exactly something that could happen. They could say inflation is still too high, it's still too hot. Even though CPI only came out 0.1% hotter than expected, which I don't personally think is a lot. You know, if you're forecasting and you're trying to get your numbers right, I personally don't think it's too crazy or too hot. But, you know, that's to each is his own. To each is his own. Papa Powell might take a look at the numbers and say, you know what? Dump it. Dump the market. You know, you never know. So we'll see where that lands us. The Dow Jones Industrial is doing very well today, up about 0.5% in the overall market. TLT, which is the 20-year Treasury, is up about 0.29%, which usually you see an inverse correlation in the market when it comes to that. NAIL, N-A-I-L, which is your Builders ETF and Trust, looks like it's up today. A nice almost 1% on NAIL for the day, trading at 131 even. Next up is the IBB, which we know is down, and I'm still holding DYN, which is in the biotech ETF. So DYN is down, IBB is down, and it's trading at 135.07. Listen up, guys. If you have anything that you want me to take a look at, I do stock commentary, stock analysis. I want to be your voice. So if you have any questions, or if you just want to tell me what you're looking at, let me go over it. Put it in the chat now, and I'll be happy to go over it. Also, we have a poll for the Fed rate hike. Will they raise interest rates? Will they lower interest rates? Or are they going to keep it the same at 5.5%? Go ahead and vote now. And if you get an extra second, please take a look at the market. Please take a look at the screen now. You'll see that we have a thumbs up button. Smash that thumbs up button, and if I bring you any form of entertainment, please hit that subscribe button. I would love for you guys to stick around with me, and we can look and watch at the stock market together. When the Fed Powell comes out in 2 hours, ladies and gentlemen, you are going to see the market volatility get ramped up, hot fire, going cray-cray, if you will. We got 8 of you watching now. Thank you so much for being here. I do appreciate you, each and every one of you. Help me make this live stream great. Help me build this community. Next up is the volatility index, now trading at 1398. The volatility index is how many shares are being traded at the moment, and it doesn't look like we are very high. We want to keep this thing below a 200-day moving average, to be quite honest. But really, in all reality, we just want it to trade below 20. Anytime this thing gets ramped up in the 20s, in that area, it can get very, very volatile. Things can get really, really crazy. And I really know, from watching it, anytime the volatility index goes up, the market sells off hard because it's that panic. People get scared, people get afraid, they panic sell. The dollar is up 0.15% today, but it does look like it's trying to come off from the pre-market push, now trading at 103.99. 999. Sound German. No. NVIDIA now still trading sideways, 885.64 for NVIDIA, ladies and gentlemen. It broke out through that trend break, pulling back, stopping me out from previous day's close, and then popped right back up, bouncing off a anchored VWAP strategy, which was absolutely beautiful. We showed it to you before. We can show you again. So if we bring up NVDA, you can see that we have this anchored VWAP placed right here at the top, and we also have an anchored VWAP placed right below at these lows. I want to do one more thing here. If we do the anchored VWAP, we don't want to we can put the anchored VWAP up here, but we want to take this anchored VWAP right here and get rid of that. And let's put the anchored VWAP actually, instead of right below the EPS or at its lows, let's do the next day where the lows were, to help kind of clean things up a little bit. And the whole reason why is because there's so much volatility, there's so much weird volatility on the actual earnings day, that we might get it wrong. So we'll just get it where it landed the very next day, or at the end of that day, right? So we're on the 15-minute. Now if we look at the daily with our anchored VWAPs, I think you'll get a better idea of where these things held. So we set the anchored volatility here, and now we can see it bounce. It bounced multiple times on this. We go back to the 15-minute. Let's go ahead and scroll back out here. Let me get rid of one of these. We scroll back out here. You can see right here, this is where we've taken our volatility index right after the big push, midday. Boom. We follow this. The next thing you know, you can see this big soak off the VWAP area, and again, you can see a big soak off this VWAP area. Now heading higher, and now it's into resistance, into its all-time high VWAP. Will it break out? Will it go higher, or will we start breaking down from here? That's the real question. Okay. So SMCI, which is also in the semiconductors, also breaking down a little bit here before the FOMC meeting. This one's for me, not for you. Man, that's good. That's some good stuff. All right, let's go through some of the stocks. You know what? How's Sound doing? Sound doesn't look like it's doing very good. It sounds pretty bad. So let's just go ahead and see what we're down here. We're down about 58 bucks on this, which is no big deal. We're just below where we bought in at. I would still consider that more of a break-even trade, but we're going to see where this wants to go. With the FOMC meeting coming out, this might get very crazy. You never know how people are going to react to a 5.5 interest rate hold. So if it holds off, the market could really go either way here. it could really go either way. But if we do have an interest rate hike, you're going to see the market just sell off incredibly hard. It's going to be disgusting how hard and fast the market sells off. But if we have a hike cut, which is probably not going to happen, but if we do have a Fed rate cut, then you're going to see the market go skyrocket, Metro Boomy to the north side, baby. And if that happens, I'm going to make a lot of money really fast. PBM still holding this trend. We're going to see if this thing will ever get up and away. If it wants to break out to the north side on volume, that would be absolutely beautiful. But a few more inside days, or at least one more inside day, would not be bad to see in this market. Goodness, the yawns are starting to come in. I better start chugging some more coffee, baby. We still got another hour. 2 hours. 2 hours to the Fed rate hike decision. Let's take a look at DYN. It did do that pullback, but it's just kind of trading sideways, just like the overall market in general. Let's take a look at a few more stocks that we have on here. We can run through the indices, so we'll go through these really quick. So we have the mutual funds, the investment miscellaneous mutual funds. We're going to look at all these on the daily, so that way we can see where they sit. So all the mutual funds you can see have been doing very good. They're back to all-time highs right now. So let's go ahead and move to XLK, which is your technology ETF. And if we zoom out, you can see XLK has been absolutely killing it lately. Absolutely killing it. Let's go ahead and let's see. Must be decaf coffee with that yawning. Yeah, you know what's funny? It's not decaf. I should pour a little bit more. Here, let me give myself a little spritzer here. It's not decaf. And on top of it, I'm double fisted with this Diet Mountain Dew here. So maybe less talky, more chuggy, you know? So this is XLK. This is the technology ETF. The technology ETF, I think we all know, has been absolutely bonkers to the north side. And you can see there's been a lot of times if you play ETFs like this, if you're playing ETFs, there's been plenty of times where you could get in with my trend break strategy. And it looks absolutely phenomenal still up here at these highs. This is just trading sideways. It's better than even doing a pullback. If it just wants to trade sideways and accumulate shares here before heading higher, that would be great too. Or maybe this is distribution. Maybe we do start to sell off and we start to go down, but only time is going to tell. Next up is the energy sector. So I just talked to you guys about how I see an energy starting to heat up. And when you start to see these little gaps in here, when you start to see things start to head up to the north side, that's how you know. That's how you really know things are starting to head up and things are starting to get hot for energy or any ETF that starts to follow this 10-day moving average like this. Very, very trendfully, okay? So if we use the anchored VWAP on this, which I used before, we can go ahead and throw it at the top of this, and we can throw it at the bottom of this. And I think you guys will see what I mean about it breaking out, right? So it broke through its average weighted volume from its previous high and its previous low. And you can see if you zoom in on this, it was supported very, very well off of this trend right here. Once you found the low and you put the anchored VWAP on it, you can see it followed the curl, it broke out, came back, retested this anchored VWAP and did not break through it. And then boom, it breaks through or tests, it pulls back and then starts following this 10-day moving average as it slowly builds to the north side. And so that is in correlation, Bob Dan Dan Bob, with your ET. Your ET sector is in XLE. Next up would be XOP. XOP is your oil and gas. As you guys know, I think already, oil and gas has been hitting it off pretty well. Oil and gas is sitting here at these highs and it's looking very nice. This might be an area of where it's going to start selling off. Only time is going to tell with that though, but I will say this, if we create a trend off these lows, you can see that it is being supported, but if we zoom out on the overall look of things, you can see that we are in an overall downtrend, but a short-term uptrend on this oil and gas ETF. So if oil and gas wants to get up and above this area of 155 to 159-ish area, and we start to see continuation to the north side, you can expect energy, the whole energy sector, the cyclical energy sector, to continue higher, continue moving higher, continuing to make those pays. And you know what's crazy too? If you really kept an eye on the sector, you would have seen that there was a lot of volume traded at these lows. A lot of volume traded. That being said, if you only used volume to get in, you would have just done yourself a beautiful favor here, getting in at these lows, buying in the 30s, in the 50s, and it's now tripled your money. So this is just one way, one strategy to look at. Next up is XLC, which I believe is communications. Yes, communication services, which has been on an absolute run here, guys. And this looks absolutely nice. It's created this V-shape bottom in this ETF, which is nice to see in communications. So if you aren't already aware, you need to find some good communication stocks that you can keep on your watch list, so that way you can find those plays that are faster movers than what this overall stock is. So this is a slower moving ETF because it is an ETF, because it tries to equally weight, not equally weight, but it tries to weight itself in its sector by buying up small, mid, and mega cap stocks, as well as large cap stocks in it. And then it trades with the overall market. And if it's not trading with the market, that means it has relative strength or weakness. Okay. So the S&P 500 is trading at 515.70 currently. Bitcoin is down to 63,709, and XLU, which is utilities, XLU is a lagger right now. It's definitely behind. So this is not a strong sector. You can see it's on this downtrend here. It's back down to below COVID when COVID hit. It's not at COVID lows, but it's still in that area of where COVID was. So just keep that in mind. XLU is not popping off. XLP, this is consumer staples. Okay. Consumer staples here looks like it's back up in its area of resistance. That area of resistance, if it breaks through this area, that's going to be an absolute beautiful sign that consumer staples is going to continue higher. So I'll just go ahead and put an alert there, so that way I know when consumer staples starts rocking. And what is this beautiful thing right here? It looks like healthcare. Oh goodness, we've been talking about healthcare after this broke out, and we've been telling you that healthcare has been in a hot sector. This hot sector of healthcare looks absolutely amazing. I do like to see it, and we're going to see if it wants to continue. If not, maybe it pulls back and we start to see some sectional rotation, meaning that money gets out of healthcare and actually goes into something else. That's good stuff. XLI looks absolutely amazing. XLI is what? XLI is industrial. And if you look, like guys, if you look around me, so I live in Michigan, if you look around me, you can see all this stuff, everything being built around us. So the industrial, the industrial technology, let's do a list, just because let's see. What is held in XLI ETF? All right, about this fund. Industries in the index includes aerospace, defense, building products, construction and engineering, electrical equipment, conglomerates, machinery, commercial services and supplies, air freight, logistics, airlines, marine, roads, and rail. Okay, so Dan, Bob, Dan, if you're still with us, Caterpillar is actually in your XLI. So you can see just by looking at this chart, it looks a lot like your Caterpillar, right? Because it is in that industrial trust, okay? Next up will be General Electric, but its number one share in this is Caterpillar. So let's take a look at Caterpillar here. I mean, you can see that it looks a lot like the ETF, and that's for good reason. That's for very good reason, There's a reason why Caterpillar looks like its ETF XLI, because XLI holds 4.5% of its share, or of its makeup is Caterpillar. So if Caterpillar goes up, XLI is going to go up, right? And it will slowly bring up everything else with it. Something else that's in XLI is Uber. Uber is in XLI, and Uber has had a great run on the daily, right? Beautiful run on the daily. Looks very, very good up here. Okay, which interests me. It interests me. I didn't think Uber Technologies would be an XLI, nor would I think Uber Technology would take up 3.93% in XLI. So I don't know if you guys find that interesting or not, but I definitely find that very interesting. Let's see what else is held in there. Honeywell International, XTX, Boeing. Okay, Boeing is probably going to pull that thing right down. Boeing's been really hit. So I think Boeing's what, BE? No, it's Bloomberg, so BO. I think Boeing is BO. No, BA. I should just throw in another vowel. Yeah, so Boeing's down here making a double bottom, but with everything going on with Boeing, people are afraid. People are so speculative and afraid of Boeing. Now, some people say Boeing's too big to fail. Don't make that mistake. Don't ever make that mistake. Play the chart, guys. Play the chart. Don't play the news. I really think that they're going to have like a revamp, a reconstruction of like what's going on in their facilities, because I've seen a lot of stuff in their facilities going on that's just crazy. But you know, I don't know too much about the news, and that's why I always just play the technical analysis. Play the technical analysis, you're gonna be a little safer. Oh yeah, coffee! It's coffee time, baby. That's good. That's good stuff. All right, XLY. So XLY here. XLY is looking really good. It's on this beautiful uptrend. What is XLY? Well, it's consumers discretionary, and we might as well ask, just so everybody knows. I don't want to give you the wrong definition and what consumer discretionary is, but we can just ask Google, and I think it would be safe to say that it might. XLY. It's just better to read verbatim, and it tells us what's in it too. So that's beautiful to see. So XLY is a consumer's discretionary, even though it says consumer. Oh, it does say consumer's discretionary. All right. So just consumer's discretionary. This is all the stuff that you don't need but you buy. Okay. So this is like your Teslas, your cars, your shoes, all your little things that you can have delivered to you. So. And according to this too, it's also like your home builder stuff, right? So it's like buying a 2x4 to build that bathroom or whatever you want. So in XLY, consumers discretionary, our top holdings is Amazon, Tesla, Home Depot, McDonald's. That sounds good. Lowe's, Booking Holdings, Nike, and TJX. So this looks like it's doing pretty well, even though we've had a lot of big pullbacks on your Teslas. Nike, I believe, had a pretty big pullback, but that's why it's not equally weighted. That's why there's a lot of different sizes held in here. So when one goes down, like Nike falls, being held at 3.82%, McDonald's goes up at 4.41%. So they're spreading their money out, but in this sector specifically, you can see that it's done overall pretty well. XBI, what is XBI? Well, XBI is biotech. Okay, so this is a different, I use IBB. This is XBI, which is pretty much the same thing. If we bring up IBB, let's see how similar it looks. So here we are, and it looks awfully similar. So we can use either one for this ETF, and we'll just use XBI just simply because we are here using the same charting platform, okay? So XBI is looking pretty good. I do like the way it looks. The thing is we need to see a bounce here if it wants to continue higher. It almost looks like we are starting to see a lot of volume at these bases here. So that might be a more insider kind of look there. Snow shoveling. Oh, poor Kobe. I feel so bad for him. He's in Canada. He's having to shovel his snow constantly out there. I don't know why you wouldn't just hook up a plow to a moose and give it the old smack on the ass and let that moose do the plowing for you. But hey, if you want to get out there and prove to yourself that you can shovel snow, then I am all for it, brother. So next up is XRT. XRT is what? XRT is Miscellaneous Investment Trust Fund. So let's just look that up because I actually have no idea what's in XRT. So what is held in XRT? Alrighty. XRT, Dick's Sporting Goods. 78 holdings, companies, apparel, automotive, computers, Okay, so this has got everything. So this is going to be your overall ETF, right? It's got everything. And that's just trading at 76.18. It's right here, trying to break out higher, trying to head higher here. But it looks like it's in an area of resistance, so do be careful. And then we have the financial. The financial, I've been doing all this just to get to the financials. Financials is back up there at all-time highs. You know you love to see it, especially because when we were having all those financial scares, those financial breakdowns, and everybody was scared about the banks collapsing and all this crap, this is where we were at. And I even said, we are at an area of support. Okay, we are at an area of support, guys. I don't know why everybody's freaking out about it. There's no need to freak out until we break this area of support at 30.78. And sure enough, we bounced, we retested, and then look, we're on a beautiful uptrend in the XLF financial market, right? We've had a few banks that have had some pretty big issues, but I don't think that it's going to have another 2008 that everybody's trying to say. You know, everybody's like, yeah, 2008, it's going to happen again. I'm waiting to buy. I'm doing, which, everybody's got their own opinion. That's totally fine. But when I see this, when I see XLF almost making all-time highs, it makes me want to go back and tell people like, hey, come on, don't let the fear take you over. That is how we lose money. All right. So speaking of fear, we need to go check on SOUN. All right, next up, this is XLRE, which is Internet Trust. We'll look, see what's the biggest held. What is held in XLRE? There we go. So XLRE, real estate management and development. So the real estate index includes companies from the following industries: real estate management, development, and REITs, including mortgages. So right here you can see this is probably not going to do over well or too good just overall, because when the feds are holding off on lowering rate hikes, it's harder to get people to buy mortgages, right? It's hard to get people to buy mortgages at 5 or 7.1% when previously they were at much lower, a much lower rating. You know what I mean? So keep that in mind, guys. Let me go ahead and get into let me get back into the analytics of things, guys. Let me just switch my account here really quick, and we'll make sure that we have all of that up and rocking for you. Live, baby. Live. Just go to YouTube here. YouTube, baby. There we go. I'm back. Let's get the analytics up here. Oh, come on. Come on now. Come on now. There we go. Okay. Took me a minute, but we're back up and running, baby. Back up and running. All right. All right. Hour and a half, guys. Hour and a half till the FOMC meeting. All right, so let's go ahead and pop back over here. We got DYN just trading sideways. We have SOUN. Let's take a look at the active trader. We're down about $42 on this. I'm still liking where this is sitting. It just created this new higher low. Right here is its new higher low from previous day. It's got this flat bottom right here. Flat bottom, girls. Flat bottom, girls. Yeah. We got this flat bottom here, which what we want to see is it hold this flat bottom. If it doesn't hold this flat bottom, that's A-okay. We know exactly what's going to happen. It's going to break down. It's going to hurt itself. It's going to head lower. But if it can hold out and hold out on the FOMC, we know that this thing could really break out to the north side. So let's keep that in mind. These aren't buy or sell recommendations, guys. I bought this share. I bought this. The FOMC meeting might even get too volatile and stop me out, but we'll see. Got a message over here in the DMs from my boy Covey. Oh, it's all good. Yeah, things are looking good, guys. Things are looking good. Let's take a look at the S&P 500, though. Let's make sure that we are keeping our eye. And here we are, still range bound, just as we called it this morning. Range bound, range bound. Got up to the previous highs from yesterday. Went a little higher than that, and then came back down. Now we're just trading sideways, following this VWAP area here. It's not doing much, just trading sideways. Let's look at Nvidia. Nvidia looks like it's curling back down here. You know, it's found this double top at this area, this green area that I drew out for you. The dollar looks like it's headed down, so that's good news for the overall market. The volatility index is calming down before the storm. This thing is it's starting to really slow down before the storm. The IBB, we already went over that. NAIL, we went over it. TLT, the 20-year treasuries, looks like they're heading up. Let's see, the Dow Jones Industrial, just trading sideways. The NASDAQ's just trading sideways. The IWM had that big push this morning, got back up to where those highs were, and then it is kind of just bouncing off of that VWAP area. SMH is just trading sideways still. The QQQ trading at 438.75, also trading sideways. I mean, I know I'm repeating myself, and it's hard to make a crazy fun day right before the Fed meeting, but hey, we are going to do the best that we possibly can here. And I think while we are here, I will take this time to ensure that we have the Fed meeting pulled up. So let's look up Fed rate hike decision meeting, so that way I can make sure that while he talks, it will be there. Let's see here. There we go. We're going to find the live on here to make sure that I can bring this up and you guys can actually watch this. Yeah, watch live, Federal Reserve powwow. Yeah, I might have to wait till it's closer to time, but that's okay. We're going to make sure that we can... oh, there we go. Okay, so I found it. It says live in 2 hours. And it's going to start at 2:30 is when he will be on for the Fed rate hike decision. Now, you know just as well as I do that we are going to have the interest rates will come out at 2 o'clock, and then we will have old Papa Powell will come out and he will chat as well on the overall market and what he thinks. So yeah, it should be pretty good. Should be nice. We should love it. But the S&P 500 is still trading within that range, so that's nice. That's nice to see. Absolutely. So let's run through some of the stocks that we have on here. PUBM trading sideways. SOUN still trading sideways. We have MOD, Moderna, or Modine Manufacturing. I don't know why I said Moderna. Suave is just trading right there at its opening. Carvana pushed back down at those highs. Uber bouncing off VWAP now. This looks pretty promising for Uber if it can catch a bid and head to the north side, hang 10. ROOT did bounce off those lows and now is trying to head to the north side. NVDA just kind of trading sideways at 886.08. CRWD, so CrowdStrike, this is the one that I tried to play inside the cybersecurity. I tried to play this software stock. Actually, I didn't play it, but I wanted to play it. I wanted to play the EP because it had a nice push up on earnings, but then it sold off extremely hard there and headed back down. So we're going to see what wants to come of that, because if it wants to get back up here and trend out on this base break, I would like to get into that in that area. That's good. All right, what else we got here? ACMR still just trying to get back up to that breakout area where I bought it right before it stopped me out the next day. We're going to see what wants to happen here. I do have my alerts set on that. DNTH, unfortunately, is a sorry sight to see because my boy was in that. He made some good money, but we wanted to make him a lot more. CELH, Celsius. I don't know if you guys are seeing this pop up on your shelves, but CELH is reminding me a lot of Monster Energy Drink when they first got started. This thing is just starting to rip and roar. It's a leader in the beverage area, in my opinion. I don't know if that's a true statement or not, but it does look like a leader in the overall market as well as the beverage, and it has an earnings beat of, well, it beat, but it was 16 cents. So that looks absolutely great for it. We're going to see if this thing wants to continue higher. Let's see here. Yeah, CELH, this would be nice. It moves 6.5%. So if we can get this thing to create a new higher low here, which it did, but if we can see this thing actually break out of this trend, I would love to be a part of CELH. I think that'd be great. Catch a bid, let it follow this 10-day moving average. Like if you look previous days, it bounced off that 10-day moving average, and even before the earnings, it's followed this 10-day moving average very well. So now it broke out, came back, retested, broke out, came back, and then dipped just below it. Now if it can get past this trend, I think things are going to look really, really well. So let's take a look at Root, guys. Keystone, what's going on, Keystone? It's good to see you. Yeah, Root's popping up, brother. So we had this beautiful base breakout that I actually took right here. If you guys were with me, I took this. If you were in the Discord, we took this here, broke out of this high on volume. That's what the beautiful thing was. It broke out high on this volume, pushed up higher, and then ramped up to the north side. It was absolutely a beautiful sight to see. You could have taken out half of your shares after 1R. What was 1R? Well, if we see it break down here, this is where your stop loss would be at 9%. 9%, you would be taking out at 52.66. Would have been an awesome 92.56. Let's see, that would have been 6.5% on half of your money. And then this thing would have came right back down, bounced again off of its breaking out area, right? It held these lows. Beautiful, beautiful move. And then here we go. We start to speculate. We start to create a nice little flag here. And then boom, it takes back off on higher volume. And it looks really nice. Very, very nice here. Breaking out above the VWAP area on volume. It looks very, very nice where it's at. Now, what we want to see here is it hold these gains. We'd like to see the push. We'd like to see the move. We want to see it hold these gains now. So if it does pull back, let's see it hold these gains, stay above that 48, maybe trade sideways for a little bit, even for the rest of the day, if you will, and then let's see this thing take off and head to the north side. If not, either way, I have made an absolute 360 on Root. I thought this thing was just a big pump and dump, but then I looked more into the financials of Root, and Root's a solid company, man. I mean, they're making money here. I'll just show you what I found here. Let me bring up Root on this. So Root, right here, you can see right here, annually and quarterly. So annually, you can see it's net. They're paying off their debts, right? Their net income, it's in the negative still, but their net margin goes from negative 150 to negative 95 to negative 32. Their revenue is going from 345 million to 310 million because they're paying off their debts, and then 455 million. Look at this quarterly though. This last quarterly, I mean, we're going from a net margin of 115 to 194. You know, that's huge. That's huge. Then their net goes from negative 39 net to negative 12 net. So now people are speculating that these guys are going to start making money. All their debt's going to be paid off, and then their net margin is just going to be through the stinking roof. So that's exactly what all these speculations are starting to happen on. So let's just do a little bit more for you, Keystone, on this stock. And if you do enjoy this, hit that like, hit that subscribe for me. I'm here doing all the hottest Fed rate hikes, the CPI indexes. That's when we do our lives. Other than that, we throw in the top 3 stocks of the day. We also do many, many other things. So it's great to be a part of this channel. We're growing this community very fast. So let's just go ahead and use our anchored VWAP here and see where we can check out. So we have a couple different, we have some differences here. We have this all-time high, which is going to act as resistance here at 51.93. Let me just throw on the 1 hour to give a better idea. Okay, so let me just get rid of this here. We're going to throw this anchored VWAP at the top of this, and we're going to go ahead and throw this anchored VWAP at the bottom of this so we can understand anchored VWAP a little better. There we go. So now you got to understand. So we broke below that anchored VWAP, okay, and now we're trying to just now get above that anchored VWAP. So that might be an issue if it can't stay above this anchored VWAP here, okay. So right now it's just getting above that anchored VWAP. We want to see that hold that anchored VWAP here. If it can hold above it and break above it, or hold above it and trade sideways, like we talked about when we were looking about think or swim, that would look very good. So right now we're at its anchored VWAP from its lows and in between its lows and its highs. So if we can continue higher, that would be great. If we can trade sideways, that would be great. But for this speculative stock, if we break back down from here, we're going to be trading below the anchored VWAP, and that's never a good sign. Keystone says they have a reverse split history. I'm a bit cautious. So there's no issue with a reverse split. I do understand the reverse splits though, to try and stay above the NASDAQ, or they're using reverse splits so that way they can look more valued as the inspector. But a reverse split isn't doing anything they're not diluting their shareholders. Now we could go and look into BAMSEC to see if they're diluting their shareholders. So even if you have, like, here's BAMSEC, we could bring up our OOT. Now I'm not going to go too in depth into here, but we can see registration for securities of employees, so they're paying their employees. Prospect supplement. Now this right here on 1029. Let's see, when was this? 1029. So they're asking for an additional 2.5 million shares of Class A common stock, and they're offering it at $27 per share. So I will say this, when you see a prospect supplement, if it's for your employees, that just means that they're paying their employees. But they have, in 2020, they have to stay afloat and to stay alive. So way back here, let's see, where's 2020 at? Somewhere in, way back here. So when they first were incepted into this company, they used supplement to at around, since we've had this reverse split, they just diluted their company shareholders back here. Now, we can say this, that's not always a bad thing. If they used it and they gained money through their shareholders through the prospective supplement of all of that money, which was how much again? Did I already erase it? I probably did. Of that millions of dollars, and then they diluted their company and they used that to help build and progress, and that can always be a good thing. But if they haven't had any practice supplement in the past, I wouldn't worry about that too much, as to show that they are being pretty profitable currently. They aren't completely profitable, right? No, there's still net margin, still negative 12.32%, but because they're starting to show proof of concept now, people are getting very speculative and wanting to buy this thing up. So yes, this definitely could go either way. These are buy or sell recommendations. It's my thought, not yours. But I will say, Root, I still wish I was holding this. I do. I can't get in right now because the FOMC meeting's coming up, and I'm already holding a pretty speculative stock, SOUN, which isn't doing too hot, but that's A-okay. That's part of it. But I wouldn't worry so much about a reverse split history, honestly. But those are my thoughts. Let me grab a sip. What else are you looking at, Keith? You got anything else on the board? We can run through some of these. Take a look at Sound again. Sound's just kind of trading sideways within that flagging pattern. We got MOD still chilling at the all-time highs here. That beautiful trend breakout that we played before. Looks like it would be a beautiful trade to buy and hold. SWAV, we've seen this on our top 3 stock watch list. Still trading well above where we called that out at 275. Now trading up there at 285. So you made $10 on every share. CGC short term. Let's take a look at CGC. I'm not sure if I'm aware. Is that a... Yep, it is. It's a marijuana stock. So if you're playing the short term, I can see why you're getting a nice pop off of this. And I can see why it's short term, because we both know that anything below a 200-day moving average is very speculative and very dangerous to be in. So if you are in it for short term, that's probably a great idea, because every time it's came up to this 200-day moving average, it's sold off pretty hard. Really low though at 311. Wow, nice catch, dude. So if you're in at 311, that's a nice catch. Let's take a look. 311. Oh, nice. So you must have caught it when you seen this this bout of volume come in here, and then okay, Keith. So it looks like you know a little bit of what you're doing here, brother. I do like it. So it looks like Keith seeing that we were getting a nice little uptrend on CGC, and he's seen it on this low. We got a push in the after hours, and we've seen volume come in for this stock, which probably caught your attention. Now, you can go ahead and correct me if I'm wrong on any of this, but we get this volume in surge, right? So that has caught Keith's attention. After that, it breaks out to the north side. This could be the first area you get in, because you know that the volume's coming in. Although when it gets up to here, you don't see too much volume getting in, but boom, this is when it gets in and it creates this trend. So now Keith is grabbing into this at this breakout area, which can be a bit dangerous because he missed his initial first buy-in. But here we go on a second buy-in and holding overnight at 311. Now, Keith, you did get it here, didn't you? I'm assuming that's when you bought it. What is the date? So if you bought it on 315, I'm going to say kudos to you, brother. That was a nice buy. A little speculative because it was already on the breakout here and buying in here. But after that, you can see the volume that came in could have continuation, and it did. And it ended up carrying on. I'm exactly right. Yeah, okay. Aftermarket. Oh, okay. So, So you've seen it holding its gains and bought in the aftermarket. So I'll just mark this in green so our viewers can see it. All right. So, boom, you got it in green. And then it takes off even higher. So now, are you still holding, or have you taken some of your shares out, Keith? I think that's the real question here. So if you got in here and then boom, we start to head higher, we pull back, we hold all of our gains on higher volume, and it pushes up even higher, now holding VWAP, trades a little lower at pre-market, and it heads higher in the aftermarket. Now we go from 311 and we're trading up to $4.42. The real question is, Keith, have you paid yourself? Have you paid yourself any of the money? Because you are up 42.78% on your trades. You sold half. When did you sell half, if you don't mind me asking? I know I'm kind of hounding you here, Keith, but it's a nice trade, and it gets me excited to see when we have viewers on here that take nice trades and they're not just buying the rips of crap. So at what point did you sell half, Keith? That's the real question here. That is the real question here. We got 17 votes on the poll already, guys. If you haven't already, vote on the poll. Raise, lower, or stay the same at 5.5%. Will Papa Powell treat the market and lower interest rates? Is he going to douse the market's bullish run and raise interest rates? Or will he keep them the same as expected at 5.5% to help kill that sticky inflation and keep it from getting any higher? I sold this morning at 430. Okay, Keith. Well, I would have to say, if you sold it at 430, I think you held on to it a little longer than you needed to. But hey, that's your trade, not mine. So 430, it looks like Keith got out 430, netting a solid profit of a 40% return, and that is beautiful. Now, do you have any sell stops? Like, when do you know you're going to sell that last half, Keith? Do you have good risk management, or are you just holding till you think you need to let it go? Because you're already up 43% and you already sold half of yours. Do you have any idea where you're going to sell that last half? I'm just curious. I like to see proper risk management on this channel, but I am curious where you think you are going to sell that last half. And while we are waiting on Keith to answer that, I would like to take a look at SOUN. And let's see where that's holding up right now. So it's trying to hold. It's not looking the prettiest. Definitely not looking the prettiest, but it looks like it's just keeping inside of this base. It's keeping inside this flagging trend. I do kind of wish at this point with the FOMC meeting coming up, I have to hold. I have to hold. I have to stay true to at least 30 trades in a row to see if I can just do it. I need to absolutely hold. Perfect. Thanks. My brother is doing some work around my house since my knee is a little I shouldn't say that. My knee is really messed up right now. My knee is pretty messed up right now, and okay, I like that, Keith. It keeps raising stop orders until it hits. Perfect. As long as you're using a stop order, that makes me happy, and I'm happy to hear it, brother. So you keep on raising those stop orders, probably the previous day, or I'm guessing probably previous day or day of the low at market. You know, there's a few different ways of doing it, but I'm just glad to hear that you have a stop loss, so that way you can keep netting those unrealized profits and putting them into your pocket, because you need to know how to make money. You need to know when to take money, right? If you don't know how to take that money, then you're never going to make money. You're always going to give it all back. So that's looking good, and it's really good to hear, brother. I'm glad you're with us today. Let's see, the S&P 500 still trading sideways per usual, just as we called it this morning. 515.90 right now, just above VWAP. We have the RSP, which is the equally weighted, trading at 165.28. The QQQ is also just trading sideways at 438.94, just above VWAP. SMH also doing the same damn thing, 217.52. The IWM, the Russell 2000, trading at 202.14, and the NASDAQ also trading sideways, looking a lot like the rest of the indices. Now the Dow Jones Industrial is trading above its previous day close, trading at 39,148. And then we have the TLT, the 20-year Treasury, which is not looking good for our smaller speculative stocks. It's trading up there at 93.28, trading higher than its previous close. $3.75 stop for the rest. Hope it continues. You know what, brother? I really hope it continues for you too. But you know, when you look at the overall market, when you look at the average of this thing, I think we both know, you know, it's probably not going to. Now, I truly hope that it does for you. And that being said, you know, when we look at this, it's got a nice volume uptick right here. This is a lot more volume than it's traded in since 9/11, 9/12, you know, of 2023. So if this is the most volume that we've seen traded in this amount of time, that's great to see. And we might get it to break above a 200-day moving average, creating new lower highs heading to the north side. I'm rooting for you, Keith, of course, because I always want to see all of my viewers making that money. But the good news is you've already made your money on it, and you still have unrealized profits with a stop loss set, meaning you will continue to make money on it. All right. Let's take a look at CVNA. How is that doing? So it bounced off of that top, and it just started to trade lower. So is it going to hold some of these gains and continue to hold a 21-day moving average and keep on heading higher? Right now, it's got a 34% short interest rate on it, meaning this has the speculative ability to squeeze to the north side, meaning it could have everybody who is short start to cover and start to head to the north side. That would be very interesting to see in the overall market. Uber Bloober is trading just now above its 30-day moving average. That would be very nice to see Uber continue higher. Root is still pushing to the north side, which is very nice to see because we have that anchored VWAP. It's trading in between now, where anchored VWAP is trading at 49.88. The upper band of the anchored VWAP is 52, and it's trading at 51.08. So it's just trading right in between it. And man, I really do like to see Root making that complete recovery and that comeback. So we can see if Root wants to continue to head to the north side, maybe it starts to create these new lower highs, like this will be its first new lower high from its previous 38.13, and we can get up there to 42.66. So that would be absolutely amazing to see. Man, I have to use the restroom so bad. I don't think I'm going to be able to make it another hour and 15 minutes. Drinking all this drink, you know? Drinking all this drink. So we're gonna see. We're gonna see. Can we make it? Will I be able to make it? Oh my gosh. Oh my goodness. We will see. All right. Let's see what else we got. Yeah. PDD. No, it's great. I'm glad that you brought up PDD. I was actually watching PDD for an earnings gap up trade. PDD, its earnings were very phenomenal, which is very nice to see. So they had an earnings beat of $1.44. I'm sorry, their earnings expected were $1.44. They beat their earnings by a full stinking dollar. So why? Why did it fail? Well, there's multiple reasons. Maybe this price was already priced in. We have been coming up off of this for a long time now. This thing has been an accumulation. And I've talked about this before. If we look all the way back here, I was watching this thing all the way back here from 2022, okay? 2022, I watched the bigger retail and financial investors start to accumulate shares here and here, okay? And I took note of it. And I just watched this all the time. Like, you've seen all of this volume that was traded here is nothing compared to the volume that was traded down here. Lots of volume traded on its sell-off, the volume died down. Lots of volume traded on the up, lots of volume dying down as it pulled back. More volume on the upside, dies down as it comes back. Over and over and over again. And now we're seeing it way up here, right? Well, what happens is we have this big beat on earnings and it goes up right into its area of resistance and then just gets sold off really hard into it, right? So there's multiple reasons why, but the market does a great way of pricing in what is actually happening in the market. So if it already had priced in the fact that it is going to be at a certain price and the evaluation comes out where it says, oh, well, it should have been up $2. We were expecting at this price that we would be up $2 earnings per share and it's not, then we could sell off on that. So that just seems to be what happened. Regardless, I like to use technical analysis and I never trade pre-earnings, only post-earnings. So in the pre-earnings, I was not in this. I was, if I ever were in, let's say I played this gap, I wouldn't play this one, but let's say I played this trend break and I was in this for 5 days, 6 days, I would be out before the very next day because I do not play earnings. I find those to be a gamble. But what I was hoping for, because we had, this thing was up in the aftermarket, it was up 16%. I was hoping this thing was going to open, trend sideways, and I was going to be able to take a 5-minute range break to the north side using the previous day's stop. But the unfortunate thing with this was, or I'm sorry, not the previous day stop, but that I would have been able to use a range in that 5-minute area. But we didn't even get anything on a range on the 1 minute. This thing just kind of just took a crap on us, guys. So it is what it is. It's definitely one that I do like. I believe that PDD is going to do well in the future, and it's definitely one to keep on your watch list. But because of earnings, no. This thing took a crap and now has time. It needs to prove itself to us. Is it going to be able to hold out? Is it going to trade sideways, create another new lower high? Is it going to be able to carry on a wayward sun? We will see if that's going to happen in the near future. But yeah, I'm glad that you brought up PDD, Keith, because that is one that I was keeping an eye on for a episodic pivot in the morning, even though it's more of just an earnings gap up play rather than the Chris Kulamagi episodic pivot. So, all right, let's go ahead and take a look at. Ooh, I gotta pee. I gotta pee, guys. Why don't you just hold off? Nobody leaves. Nobody leaves. You guys hold down the fort. You guys hold down the fort while I go do this thing. Okay. I know it looks kind of funny, but knee brace and all. So, oh yeah, I'll be back. Whee! Oh, we back. We back. Oh, yeah. Oh, yeah. We're back, baby. Oh, my gosh, man. Well, thanks for sticking with me while I had to go take a leak. That's what happens when you're drinking coffee and you're drinking Diet Mountain Dew at the same damn time. It's going to run through you like crazy. Goodness gracious, great balls of fire, baby. That's A-okay. So what were we talking about? Okay, yeah, so PDD. Yeah, maybe it turns around here. Maybe it creates new higher lows. Maybe it shows something formidable in the near future. But goodness gracious, this thing. You know what I do want to look at, guys? We haven't. Let's run through all these crazy movers today. So this thing's up 78%, okay? Now, keep in mind that these are just fast movers. I'm just looking at them. I'm not going to play them unless it shows my very specific buy and sell opportunities in this. And right now, ANGH is up 78%. It's so nice to actually see this. XTLB also up 77% right now. It was up even higher than that in the aftermarket. Looks absolutely scrumptious if you were in this in the morning, but this was not a play. There's no way I could have got in or played this. I'm even looking at this thing on the 1 minute, the 5 minute. You can tell it just ramps right up. It's what I call a pump and dump. You can see it's happened multiple times on the daily on this. You always want to zoom out and look to the left, guys. You can see that this thing pump, dump, you know? It's not the best thing to try and play unless you are a short bear bias trader, and it's going to make you plenty of money. TRUG, I called this one out first thing this morning. I just noticed that we were up a huge amount, and we are now at 53% still up. But these penny stocks, they don't have much room to come back down. You know, we're not seeing the dollar amounts. We're only seeing pennies. You know what I mean? So 75 to 20 cents. That is, it's up, 50-something%. But to actually make that whole move, to get that whole move, you'd want to see this thing really gap up something stupid like $7 and have the room and the ability to come down at least $4 or $5, So keep that in mind. TGL had a nice uptrend here. We talked about this morning, and it broke that uptrend, and then look at that. It just continued to fail down here. Maybe it starts to curl and starts to head to the north side. Who knows? These are very speculative, very fast-moving stocks. You can see that it had a nice volume chirp, just got above the pre-market's high, and then sold off very, very hard. Why am I doing that? Go back to the 5 minute on this one here. While we look at these speculative things. ANVS, this thing is just constantly pushing higher and higher. Looks absolutely crazy. If you could have got into this, maybe if you've seen some of the big volume coming in here, and then boom, it breaks through this VWAP area. You take a speculative trade and hold on to it. Not a way I could play, but this is a pretty fast mover, and it's fun to watch. LIDR, it looks like it's creating this huge top here. If you guys look, these wicks on the 5 minute, they look really nasty. And so if we look to our left, you can see the last time it was up here at this $1.68, $1.70 area, it sold off really, really hard as well. So you can see that that's what we got going on for LIDR. A lot of wicks at the top. Let's take a look at the 1 minute and see if the wicks are on there too. Look at this. 1, 2 wicks, 3, 4 wicks. Every time we get up into this area right here, it starts selling off pretty bad. So that being said, is this thing going to fail? Maybe it pops up one more time or clears those high days and then sells off really, really hard again. Either way, we don't have too much room to move. It is up 43%, but even that being said, it's not a lot of room, guys. Not a lot of room. It didn't make it up there too fast, too quick. ANVS, is that what I'm looking at? Yeah, ANVS, Anavoice Bio. It looks like that got a nice pop this morning. Ooh, that is good. That is good stuff. Works. So Works has been up there. I think it's on a day 2. It is on a day 2. So this looks pretty nice. This could continue to run. This could continue to run because it's showing the same. Like you could have used the previous day as the way it moved. I mean, it's identical. You can see this big push up, pull back, push up, pull back. Right before VWAP, fail. And then we look at today's action, big push up, pull back, big push up, pull back, it fails, and then it pops up to VWAP, and then it fails again. So you could actually use the previous day as its look. So it almost looks like the market maker, whoever's playing with this stock, is doing the same thing 2 days in a row, okay? But it is a pump and dump. TLT and Power Hour, yeah. It might not do much, but just sharing. Yeah, so TLT, is that the 10-year treasury? TLT, the 20-year treasury. Yeah, I got you. Yeah, it might get crazy once Jerome Powell turns on that microphone. No matter what's said, that thing just might start getting bonkers on us. But just like a lot of the other things when it comes to the speculative stocks or anything, when Jerome Powell turns on that microphone, things could get freaking crazy, guys. So be really, really careful. And yeah, we watch TLT every day too. The 20-year treasury, I'm still trying to learn the correlations between the treasuries and how those bonds and treasuries and how they all work in correlation to equities. But let me say, this is what I think. I'm not sure if I have it all right yet. But a 20-year treasury and a 10-year treasury, they're going to move a little different from each other because they're different timelines. And a 20-year treasury, because it's a longer term, if the 10-year treasuries go up, people are speculating that it's safer to keep your money in a 20-year treasury and put your money in a 20-year treasury rather than buy equity. So if the 20-year treasuries start to go up, I would imagine the S&P 500 would start to go down. And if I'm right there, Keith, if you have more insight on that, tell me, do you think I'm right? Do I got the right stance on that? Or is that something that I need to look more into? Because every day you're a loser unless you're learning on this channel. And we want to learn something every single day, whether it's me, whether it's the followers. But I'm usually more of a technical analysis trader rather than a macroeconomics trader. But I love everything stock market, so I'm willing to learn. So it looks like the overall market is green, guys. It is green. We can go ahead too and look at the market watch on this. You can see right here that Microsoft is looking green, Apple's green, Nvidia is still being held down, and you know if Nvidia is down, AMD is even more red. So we got a lot of green in this market. It looks like healthcare is having a pretty big hit, though. This healthcare area is looking pretty low. It looks like some of your energy looks pretty low. At least your XOM and your CVX is looking like it's being held back. But other than that, guys, it looks like we have an overall green market. And with the ETFs, you can clearly see that we are pretty green in the overall market. It looks like my SOUN is looking pretty bad. We got a huge drop here. A huge drop, so I'm probably going to be down a couple $100 here. So yeah, we're down about $128. We might take a loss today. That's a-okay. My stop loss is down here at 756, and I am fine with that. If we're going to stop out for the day, then I will take my loss and tuck my tail in between my legs and chalk it up as just another trading day. We are still up wildly on just half of this month. We are up a very large amount. This is definitely my best month I've ever had, and I would like to keep on keeping on, but sometimes you can't win every single day. You can't. So this is the only trade that I put on today. I'm still holding DYN. DYN I've already made plenty of money on. I've made a YouTube short on this. We've played this trend break one time. We played the base breakout one time. We also played this trend breakout one time. And each time we're taking off half shares. So I took off almost all my shares on this because this actually gapped up and then had a halt on it, which was absolutely crazy because this is a multi-billion-dollar market cap. And then this thing traded sideways, got out another half here after we got in. Traded this. I actually could not get into this. I forgot. I could not get into this. It took off without me, so I was only holding like 23 shares when it went all the way up here. And then when it pulled back, I got in more, taking out even more shares here. And so we've made so much money on DYN. It's absolutely beautiful. It's great to see. And now I'm holding onto this last piece right here. Let's actually take a look at what my average. So my average price is $25.53, and I'm only holding 25 shares left. So let me just mark where that's at. $25.53 is right there. So I got it right here. Let's edit this property and make it green so everybody's aware of where I got it. So I'm still only holding 73 shares. You can see my stop loss is just above my break even because I'm using the 21-day moving average. Why am I using the 21-day moving average as my stop? Well, if we look back on previous days, you can see it's bounced 1, 2, 3, 4, 5 different times. So if it breaks the 21-day moving average, that's my line in the sand. That's where I want to be out. So it looks like Keith has gotten back to me. Rates go down, LTD should go up. Okay, I would have to think about that a little bit. So rates go down, the 20-year treasury bond would go up. So I would imagine it would be the other way. If rates go up, the 20-year treasury would go up because everything else is going to be more expensive. So people rather lock their money up in a 20-year treasury so it's safer longer. Because if not, they would just buy equities to make their money faster. So ETAO, so like I said, I'm still learning, Keith, so I'm gonna have to look more into that because I obviously wanna learn more. ETAO, oh, I see. Okay, yeah, that's that don't look like fun. That looks like a headache to me, Keith. Yeah, ETAO. It looks like we had a huge ramp up in the after hours, up 416%. Now giving back almost all those gains. It's only up 68% left of it. Yeah, this is definitely a crazy stock to even look at. This thing is just, whew, holy cow. Even catching a small piece of this would have been crazy, but you have to be crazy to try and play this because there's no real edge personally in this. But yeah, ETAO, if you want to have a little fun, you know, with the grimace and as you're rubbing your hands together, let's have some fun, you know. But yeah, that's definitely not that's not my wheelhouse at all. But it does look very speculative, very interesting. If you're new to this channel, ladies and gentlemen, welcome to LoFiTrader. My name is Dave. I love to do technical analysis on any stock, large, small, mid, mega caps, it doesn't matter. If you're just joining us, go ahead and throw in the comments section. Let me know, what do you think? What are you watching? What is your speculative stock for today? I do know, and I called out in the very beginning, we are trading sideways for the most part in the S&P 500, the QQQs, the IWM, the SMH, the NASDAQ. It's all pretty much trading relatively sideways like it usually does before we have a huge Fed interest rate hike decision. Okay, and that is today. All eyes are going to be on Jerome Powell at 2:30. But before that, they are going to come out at 2 o'clock. You will have it here. And I wonder if I can get something up like a countdown bar. Let's see, countdown bar. So we can get a bar countdown timer. Oh wow, this thing's huge. This is gonna be interesting. Let's see. We want to set it. So how much more time is left? How much more time is left? Let's see if we can get this countdown chart to work. I think this would be kind of cool to have like up here in the corner or something. You know, what do you guys think? You think that would be kind of cool? We put this up in the corner maybe. Let's see. Let's see if we can do it, huh? Let's see if we can do it. We'll just put it up here, like up here in the corner. So we know, and all of everybody else can see it and they know. All right. So how much time do we got left here? 2 o'clock. So let's do I don't think LUNR is done. What are your thoughts? It's a good question. So we looked at LUNR this morning, and I also posted I also posted on this that it's got a 34% short rate. So that being said, it's definitely very speculative when it comes to this. And we have this trend right here, and it broke out on this trend this morning. We talked about it, we called it out. Now, if it can create a new lower high, so we have this new lower high, and if this becomes a new lower high, and then obviously your earnings comes out on the 21st, which is tomorrow. Let's see, it comes out before the market, so this is going to be in the after hours. So I wouldn't hold anything into the after hours, obviously, because this thing's about to get crazy. But you know, this definitely has room to run. It popped up, came back, and now is selling off on lower volume. And now with earnings the next day, no matter what happens in earnings, it might even give it reason to take off. But with a 34% short interest float on its float, a short interest on its float, the covers might come in hot if this thing starts to break out. So we do have to be careful on that. I'm back, got my iced tea, and ready for the SOMC meeting, baby. Yeah, Adam made it back. How was the shoveling of the snow, sir? I'm glad to know that you're out there kicking butt and taking names, but I haven't had to shovel snow not even one time this year because we haven't got much of anything, which kind of sucks if you wanted to go ice fishing. I want to take the kids ice fishing this year, and we had maybe one chance to do it. Instead, we just went and played on the ice, but we didn't really go ice fishing. So how was it? How was it, my friend? Let's see. We'll start this timer right at when we have 50 minutes left, and we'll wait right when it says we have 50 minutes, and we'll set it. Let's see. So we got we got 9 seconds, and we'll start this, and we'll just start it now. So start. All right, there we go. We got the timer. This is for the Fed rate. The Fed rate hike meeting, when it starts, is going to be in 59 minutes, 50 seconds. So I hope you guys like that timer. That'll keep us all up to date and interested in when it's going to pop off like the vodka, where it's going to pop off, right? So the S&P 500 still just trading sideways. Covey, I'm glad you're back, brother. I'm glad you're back, but I hope your back doesn't hurt now that you're back from shoveling that snow. So the S&P 500 is literally breaking even right now. It's exactly where it was when it closed previous day. In the overall market, that's a good sign, but I'm just saying, we talked about it this morning. It was going to trade sideways. We're right here at trading sideways. The equally weighted is actually now showing that it's down just slightly. And the QQQs are up actually 0.6% from previous day's close. The SMH is just trading sideways, but it is below about 0.13% as the IWM is pulling back after that morning push. So you got a snowblower, dude. You're such a cheater. The NASDAQ is still trading sideways inside of that tight forming flag formation. And the Dow Jones Industrial is looking healthier, but it is close to being trading sideways, only up 0.03%. What else do we have here? Oh yeah, and we are looking at the TLT. Let's go ahead and look at Nail. Nail is still having a great day today, trading at 131. That is your ETF for your home builders. Your home builders ETF. And your IBB is still starting to come down here. Your VIX volatility index is trading at 1389. So it's came down all day after being ramped up in the pre-market. And so we're going to see what happens with this. We have the dollar, which is still starting to fall, which is good because we're up here at an area of resistance on the dollar. Maybe a little higher than its area of resistance, but either way, we want to see this dollar go down. We don't want to see the value of our dollar go any higher because it usually has a negative correlation in the broader market. What do I mean by that? If your dollar is worth more, then it is more speculative. It's smarter for us to save our money because it's worth more, right? Rather than if our dollar is worth less, then people are wanting to take that dollar and put it into the market to speculate and see how much money they can make their money worth, right? So if your dollar is losing value, then you want to put it into the market so it gains value. And if your money is starting to lose value, or I'm sorry, it's starting to gain value, it's better to hold on to that money because it's continually gaining value. It's worth more money, right? So that is why the dollar usually has an inverse correlation. Dan Bob says lunar is NASA's pet child, and that they have another mission soon. So one thing I want to tell you, Dan Bob, is when you look into stuff like this, you need to understand that that all these stories are just speculation. So like we could go to the news and we could read all the craziest stuff that's in here, right? And we could read all the buy and sells and all the cool little news, you know, like Ulysses Lander still kicking on the moon, says intuitive machines. Fitzgerald reiterates overweight on I can't really find, let's see, Odyssey Lander isn't dead yet. In Houston Machine, the stock is up. So let's see. On Wednesday, Intuitive indicted that its Odyssey lander, which touched down near the moon's south pole on Friday, was likely to run out of electricity on Wednesday evening. Solar panels are powering its batteries. So, okay, so this thing's actually on the moon. Nearly 3% is a small move for Intuitive shares, yada, yada, yada. So AI route. Is this... Yeah, I guess so. I guess they actually have a lander on the moon, but you know, regardless, I don't believe in the news. I don't believe in the news. I honestly feel like the news is an aftermath. Like it's like if something happens and news is backing it up, that's gonna help it continue higher, right? It's going to help it continue higher and vault it higher even more. But a lot of times when I see the news comes out after we see a big push. And that's why I'm a technical analysis trader first, right? Now, if you can take fundamentals and back it up with technical analysis, that's amazing. You're going to be the best trader ever, right? But when I see, you know, these speculative stocks, you know, where you get these big pushes up and these big pullbacks, I don't really look into the news very much, right? I just take it in as a grain of salt. Now, the fact that it does have a lunar landing on the north or south pole of the moon is pretty cool. I mean, that's pretty cool. But is it making us money? Will it make you money? That's the question. And so that's always the question. If it's not making you money, then I don't care, right? So when it comes to making you money, it might be the coolest story in the world, but unless it shows proof of concept, then it's not something that I want to put my money to work on. So I do like that it's the pet child and they have another mission soon. But until they get funded or until they're actually making money, I mean, it's not really that cool of a stock. It's just another cool story, you know? And it's definitely something, Dan, don't get me wrong, Dan, Bob, Dan, don't get me wrong. It's definitely something that I want to keep my eye on. I want to keep my eye on it. I want to make sure that if this is something that is happening, that I can be a part of it. You know what I mean? So it is pretty cool. We can go ahead and bring this up a little bigger if we want to. Let's go ahead and do that. We'll bring this up to here. There we go. Look at that. All right. And then once the Jerome Powell meeting comes on, I can put him right here, and he could say, "Oh, Mr. Dave, I told you to not talk about my Fed rate hikes." And I could say, "Look, Mr. Powell, I'm doing the best I can. Leave me alone." And he'll run off. He'll scurry off. I'm going to give him the mic. When he's here, though, at 2:30, I'm going to give him the mic. I'll give myself a break, and we'll let old Papa Powell talk to you guys so you guys know exactly what's going on in the market. So let's see. Doing good in JD, slow gains and dividends. Let's take a look at JD. So, that's probably why I didn't do that. Let's take a look at JD. Okay, yeah, JD. It looks like JD is still in a downtrend here, unfortunately. A huge downtrend, always staying below its 200-day moving average. It's not something that I like. I've been following JD for a while, and you know, good for you if you're making some money in it, and if you were able to, especially off those higher than expected earnings. But what I would like to see, which I'm starting to see, is it's starting to form new higher lows. Get above a 200-day moving average. The 200 moving average I'd like to see start curl to the north side and then make a trend that we can buy in to break out to the upside. It's good that you're making nice slow gains in JD. I like to see that, brother. Where did you buy in at? What was your buy in? Keith. Also, Keith says Lunar is getting lots of contracts, and I would not stop watching it. Yeah, no, we'll definitely keep Lunar up here, especially if more than one of you guys are watching it. LUNR. We could even read a little bit more about this stuff if it's what's interesting you. But it's just when it comes to the news, we have to take into intuition, right? Intuition that a lot of it is a lot of fluff, right? A lot of it's fluff, so we need to be really careful when we read this. But we can go ahead and read a little bit more. The space exploration company Intuitive Machines hops into history, making Odyssey moonlander will phone home after the 2-week lunar night. Space exploration company Intuitive Machines has said goodnight to his historic Odyssey moonlander and expresses hope that the spacecraft will phone home after enduring the cold lunar night. Odyssey, the first commercial lander to successfully land on the lunar surface, ran out of power Thursday, almost a week after its historic landing near the moon's south pole. Before its power was depleted, Odyssey completed a fitting of farewell transmissions. Intuitive Machines LUNR wrote on X, formerly known as Twitter, late Thursday, receiving Tuesday. This image from February 22nd showcased the crescent Earth in the backdrop, a subtle reminder of the humanity's presence in the universe. Good night, Oddie. We hope to hear from you again. Related, Odyssey's lander still kicking on the moon, says Intuitive Machines. Odyssey reached the lunar surface February 22nd, sending the company's stock soaring. Intuitive Machines has had and overcome a number of challenges during the missions, notably that the lander tipped over during its landing. Holy guacamole. But on Wednesday, Intuitive Machines CEO Steve Altimus said that Odyssey was generating solar power. The company has also received data from all of Odyssey's 12 payloads, both NASA and commercial, according to the CEO. Intuitive Machines is hoping to communicate with Odysseys again after the cold lunar night, which lasts approximately 2 Earth weeks. Well, first of all, I do want to say, Bob, that I didn't truly believe that it was being backed by NASA, but now that I read a little bit more into it, that is a pretty cool story. I do like the story. And you know what? Let's just take to Twitter and see if we can't find, we'll go to Twitter, and we'll see if we can find that picture, and I'll post it up here for you guys. So, LUNR picture. Let's see here. USSR, lunar. Let's do $LUNR, and we'll see if we can bring up that picture. If I can find it fast enough. Oh, there, Intuitive Machines. Let's see if we can find. Oh, there's that picture right here, guys. Oh, I got it for you. I'm coming through, baby. Right here. All right, and we can post that picture right here next to lunar. And then this is absolutely beautiful that we got to actually bring this up. I'm glad I could do this for you guys. But yeah, this is the picture that they took from it. And that is a beautiful picture of the Earth. So they're showing proof of concept. Bob says, I agree with Keith. The USA is in a new space race. NASA needs lunar. Okay, I like it. I like where you guys are going with that. And we can keep an eye on lunar. We'll keep it on the watch list. I'll throw it up right here. LUNR, so that way we can keep up on it in the days to come. So next time we have the CPI index, we can always get in early and we can look at what's going on next time I go streaming. But just make sure you hit that like, hit that subscribe button so you can get notified when we do go live for that stream. We have 37 minutes, guys, until the market open. It's going to be absolutely fun and amazing. It looks like SUN is about to stop me out here. Can we hold on to these lows? I would love to see these lows being held on. I feel kind of silly here, you know. It looks like I bought the tops. We're down $187. That's a-okay. That's all part of trading. Thought I was buying the breakout here, but it looks like it's going to try and form a new higher low. At least that's my hopium tuition kicks in. We're also down on DYN, so DYN does look like it's pulling back. Let's take a look at the S&P 500. So I did mark on my overall data, which did I put my data away? Let's go ahead and take a look. On my data, I marked on my stock study data that we are on an uptrend. So what I do is I pull this up here, and then the SPY on up on SPY, I put yes for SOUNT, and we can go ahead and change the color of this real quick. There we go. And because I want to make sure on the daily that we are on an uptrend. So we are on an uptrend on the S&P 500. So that looks good for the overall market. We are still just trading within that 515.50 and that 516.50, that dollar range we talked about this morning. So we're going to see what happens. It looks like the overall market is looking like it's going red, but not by much. It's all more or less just going sideways. Old Papa Powell is probably going to turn on that microphone and it's going to get rowdy. We're going to see a lot of volatility coming into the market. If you haven't already, vote on the Fed rate hike. What would they likely do? Is it going to be raised? Is it going to raise the interest rates, lower the interest rates, or keep the interest rates the same at 5.5%? I think in the economic calendar, we took a look at this. In the economic calendar, it is forecasted, and previously they held it the same at 5.5%, and they're forecasted to leave it at 5.5% for us today. So if we can get that and it stays at 5.5%, there's really no idea what's going to happen if they keep it the same. We don't know what's priced in. We don't know what kind of volatility or where it's going to take us. But what I will say is if they raise those interest rates, the market is going to crash, okay? Not to put any fear into you, but if they do raise those interest rates, unbeknownst to anybody else, and then they just come out and they let us know that they're coming out and they're going to raise, it's going to be a scary time in the market. It's going to be a very scary time in the market, and I have a feeling that we are going to see a lot of lost wages, and yeah, that would be very bad. But if they come out and they say, you know what, we're going to cut interest rates by 1/4 or 0.5%, and things are looking good. We looked at the CPI index and the PPI index, and we said, you know, things are looking good. We're going to go ahead and lower these interest rates. The market would be metro booming to the north side, and it would be absolutely phenomenal for everybody's 401ks, Roth IRAs, and any type of investment type stocks. Everybody would just be so stinking happy. If they would just lower those interest rates. But they don't want to do it prematurely. If they raise or lower the interest rates, if they raise the interest rate too much, they have the ability to break the banks. They have the ability to put the whole economy into a recession. But if they lower interest rates too soon with their monetary policy powers, then they have the ability to leave sticky inflation still here. And if inflation is still here and it's still sticking around, that can be a very, very bad thing, because then we're all going to be paying more. And when we pay more, that creates this rotary combustion where we pay more and we pay more and we pay more, and it doesn't stop, and things get so overpriced and so crazy that they have to turn on monetary policy. They have to start printing again, and it becomes this constant. Things are too much, so they print too much, and then things are still costing too much, and our dollar will be worth zero, and America will be in, I wouldn't say shambles, but it'll definitely be hurting. So hopefully old Papa Powell will give us a nice soft landing, as he is doing so with his team. But it all starts with these Fed rate hike decisions, and that is what's going to happen in 33 minutes, guys. So make sure that you're here, you're ready, you're willing, and you're paying attention to what's going on. Maybe I should throw into the chat really quick what's going on. Let me just go ahead and do that. Give me 1 second, guys. And we have the S&P 500 up here. That's where we're going to get our news. That's where it comes in the quickest. The S&P 500 through Thinkorswim. It will pop up within seconds after the Fed rate hike gets released. It'll pop up there, and I will throw it up. I will tell you exactly what comes through. I'm getting pretty excited about this, guys. I think it's going to be a blast. So let's go ahead and do one of these here. Make sure we're not. Let's see. Let me go ahead and do this. let me go ahead and do this. All right, let me bring this over here. Give me 1 second, guys. I'm just trying to make sure. Let's see, 30 minutes. 30 minutes till decision. Be here. All right. And I think, let me just double check. Oh yeah. Oh yeah, things are looking good, guys. Things are looking real good. Let's look at this. All right. Get rid of this. Bada bing, bada boom. And what are you guys looking at? Go ahead and leave me in the chat what you're watching right now before the Fed rate hike decision. I'll be more than happy to do the technical analysis on it, or if we just want to speculate, that's A-OK too. I think we got Bob Dan Bob said a little something, which I'm going to go ahead and take a little peeky gander at. But we have the Fed rate hike decision happening in 30 minutes, ladies and gentlemen. That's absolutely phenomenal and exciting. That's the whole reason why we are here, is the Fed rate hike decision. We are hoping old Papa Powell, when he turns on that microphone, he doesn't kill the stock market, because it almost seems like every time that boy turns on the microphone, the stocks just fail. A part of me almost wants to take a speculative buy into the market, a short, if you will, because every time he turns that microphone on, it just fails. And I almost want to just test my theory that he turns it on, it fails, and then I just get out immediately just to see what would happen. I think that would be kind of fun to do. So let me go ahead and let me see here, guys. Let me see. All right, so we got that. We got 123 people waiting for that. That's awesome. That is awesome. Let's see. We got London on the track. That's awesome. And we got Bob Dan Bob. He agrees with Keith. He also says that the LUNR wild card, it is difficult to land on the moon without crashing. You ain't kidding. And we both know after reading that excerpt that they landed and that thing tipped over, right? It tipped over. They were still able to get a picture of Earth, which is awesome. They were still able to gain solar power from that. Even though it fell over, they were lucky enough. The CEO came out and they were able to still gain that solar power. But yeah, so IOVA. Now this is my kind of stock right here. This is a biotherapeutic, so we all have to be careful with the biotherapeutic. But I will say this: when we look at IOVA, we can see this beautiful trend right here, and it broke its trend. Right? And it also created a new lower high the next day. And now it's starting to push up to the north side. So this looks very promising. Right here, I can set an alert. The thing is we want to see more volume come in, guys. We want to see more volume come in for this thing. I hear my poor baby crying. He's got another 30 minutes and he's allowed up. So that being said, if it breaks out here on higher volume, that would be great. But if we look at it on the volume IOVA, if we look at the volume over here, we know that its market cap is 4 billion. I like that. The average volume through the day is only 13 million, but it's only traded 3 million shares today. So it's actually on a lot less volume since we're over halfway through the day now. It's traded only half of its average volume for the day. So unless we get a lot of volume coming in for IOVA, this would not be a typical buy-in area because we are not seeing much volume at all coming in on this push. So that's actually a bad sign if you get a big push up like this and it's on almost no volume. So no volume being put in for this, especially due to its average volume. So it looks good. It looks good in picture, and this thing still could take off, but we want to see it take off in volume to back up our money. SOUN is looking really nasty now, pulling all the way back down here, still staying within this flag, but it doesn't look like it's going to make me any money today. With the FOMC coming out in 27 minutes, this speculative stock might be a dud if we get any type of crazy volatility, which we will. We definitely are going to get some volatility in this, guys, so keep that in mind. We only have 27 minutes left, so stay tuned. And Bob Dan Bob wants to take a look at ATNM. Let's take a look at ATNM. ATNM. Let's take a look here. ATMM. So this has still got a lot of proving to do. You can tell it's on a clear downtrend. This is a pump and dump looking type stock. It's a pharmaceuticals as well, so that's got a couple bad things against it. So if we look on the daily here, you get these big pumps and these dumps, and now it's just kind of trading down here, trying to form new higher low off the 200-day moving average. The good thing about ATNM is this big excerpt of volume. So if it can continue on this volume, that's absolutely great. Let's see, do we have any cool news for it? Isotope. So yeah, so a lot of times what'll happen is, you know, you'll get different things that are hard to understand in pharmaceuticals. So they disclose the launch of a strategic innovative focus on the manufacture of highly sought after medical isotope. Who knows what that isotope is, and who knows how valuable it is? I don't. I'm not in the medical field, so I do try to stay away from these, or at least the news in these, because I don't understand them, right? But I will say this. They have been very, very profitable lately. I've played MRUS, I've played DYN, I've played many of these stocks. I hope you guys can't hear my poor baby crying. I hope he goes back to sleep. I mean, he's got 30 more minutes till he's allowed up. We are pretty serious about his sleeping schedule, because if you get him out of his sleeping schedule, then you got a grumpy baby. When you got a grumpy baby, you got a grumpy mama, and when you got a grumpy mama, everybody's life sucks. So so what are you guys doing? How are you doing? Talk to me. Leave it in the chat. Tell me what you're watching. We can go over it, looking at the technical analysis. We got 25 minutes till that data drops, and then we will talk about it right here, right now. You will get to see exactly what's happening in the market, and you will get to see it firsthand, first come, first serve, right here, 25 minutes, and we will drop that data for you. Diet Mountain Dew. Gotta drink water with it. I've already took my leak, my one leak. That's all I'm allowed on stream, right? I'm only allowed one, and I've already taken it. So, Dan Bob Dan, you're the man, Dan Bob Dan. Heck yeah. All right. Let's see what else we got going. Let's see. Oh, that's not the right trading room. All right, guys. Let's take a look. S&P 500 is doing a nice little pullback here, still trading within its range. The equally weighted is even. The QQQ is at 438.52. The SMH is now trading at 217.05. The Russell 2000 202.07. We got the indexes, the NASDAQ trading at the high of its high tight flag, still trading sideways right at previous day close. Just as we called it, guys, we're just trading sideways until this market data gets dropped. Let's see. I thought you were drinking Heineken. It does look kind of like a Heineken. No, that's a diet, brother. The Diet Dew. Just gonna crack another one, an ice cold one. It's actually warm. It's been sitting here since, well, how long have I been streaming for now? I've been streaming nonstop and have not stopped talking for over 4 hours, right? So 9, 10, 11, 12, 1, 4.5 hours. Yeah. Have you taken any trades after I left? Danny, no, because I'm not that brave. How about that? I'll just put it that way. I have not taken any more trades because I am not that brave. But I will tell you this, SOUN is definitely pulling back and is not making me feel safe, sound, and secure. If you like that, I'm a dad. I do dad jokes. But yeah, no, I have my stop loss down here at 753. And Dan Bob Dan. He says I need a catheter when I stream. I tell you, I'm not going to lie. I thought about putting like a little bucket down here so I can just, you know what I mean, get rid of it so I can stay in action just for you guys. But I'd hate to let that little willy slip up and, me get banished for life and never get monetized on this thing. But yeah, catheter on live stream. Just go ahead and put one in me. That'd be so bad. But yeah, man. 4.5 hours of live streaming. And actually almost 5 hours now. We're at 4 hours, 50 minutes. We're actually killing it. You know I'd give no dead time on this stream. Never a second of dead time unless I'm taking a sip. And that's about as long as it gets. And that's why I need to have a coffee. Somebody that serves up coffee, like Silly Sips. Silly Sips, always remember Silly Sips. Go to sillysips.com to get your coffee. They are a awesome company that supplied me with coffee, cups, and t-shirts, but I'm looking for somebody that's going to pay my way through this, because anytime I take a sip, I can give that name out for Black Rifle Coffee or Milwaukee Coffee, whatever you want to say. I got it. I can throw it in there in the chat. I can make you rich, baby. So let's go ahead. Let's get me a sponsor for coffee, and we'll get rich together, baby. And that's pretty good coffee. I might have to do one more warm up. I'm going to turn off the coffee pot. Do one last warm up on the coffee pot right here. This one's for me, guys, not for you. This one's for me. And we're going to call that good. Old Jerome Powell, Papa Powell. That's dope. It got downgraded. Oh, I don't believe in upgrades or downgrades. I really don't. I think those guys are just playing in their own hands. I really do. I don't pay any attention to upgrades or downgrades. It's never my thing, but I will bring it up, the fact that Cantor Fitzgerald downgrades Soundhound, AISOUND, has an average rating of a buy and price targets ranging from 550 to 950, according to analyst poll of Capital IQ. Newswire covers equity, comedy, and economic research. Okay, that's not part of it. Cantor Fitzgerald downgrades Soundhound AI to sell from overweight. Adjust price target to 490 to 580. So they came out with this, what? Now? Just now? Let me see. 13, 18? What time did we got in the market? Yeah. So they just came out with this just recently. Why didn't they come out to this? You'll never see them come out with a downgrade when the stock's going up. They only upgrade when the stock goes up. They only downgrade when the stock goes down. That's what they do. That's what these things do. It's like, yeah, it does look like it's going down. It's probably going to go down, you know? Like, yeah, it does look like it's going up. It's probably going to go up. And I hate these upgrades and downgrades, but at the same time, some people do use them. And I might just be ignorant to the fact. I might just be too dumb to really know and understand, but I don't ever use them. I don't pay attention to them. I only use price action. You know, I would never get the news and say, oh, Fitzgerald just downgraded my stock. I better get out now. You know, I'm technical analysis bound, but yeah, it does say. Let's see. Do you have a plan for the afternoon? Are you going to look to trade anything? No, absolutely not. It's going to get too volatile for me to trade. Let's put it this way. If we have any, if we have any positive news for the rate hikes, let's say that they cut rate hikes, yes, my alerts will be going off, my trend breaks will be going off, and I will be in whatever. I'll be in whatever, basically any trend break that pops off, right? If they raise interest rates, though, my stops are going to be hit in the two stocks that I'm in. I'm still holding DYN from a month ago, and I'm holding Sound from this morning. And if the Fed rate wants to say that they're going to raise interest rates, or heck, even volatile enough where it stays the same at 5.5%, it will stop me out, and I'm stopped out. I'm clean. I got my stops in. That's all I need, and I'm happy with it. But when it comes to actually looking to trade something, honestly, the only thing that I would want to try to do, because I've been watching these like every time they come out, whenever old Jerome Powell comes out and he turns that microphone on at 2:30, it makes me want to just immediately short the market. Now, I'm not going to do this. What I should do is, just for the stream, I'll mark at 2:30, and then you'll watch the market tank real quick, and then it'll get bought right back up. And that's just what I've constantly seen happen anytime I watch this. So no, I'm not going to trade anything. My hands are off. I took my one trade today. I felt brave. I felt very brave for doing it. But it looks like it looks like I'm going to get stopped out of it, and that's a-okay. I had 1% risk, and it's going to tax my account a pretty penny, probably $250 in the dollar amount, or 1% in the account's percentage, which is a-okay. It's going to be my 4th of 30 trades in a row to actually being played. So I'm proud of myself still for sticking to it, even though I am four trades in a row. 4 trades in a row is a loss right now, but I'm still wildly up on the month, so I'm very proud of myself for being up on the month. But this is part of it, guys. This is part of trading. You're always going to have losing trades. What you have to do is look at your losers and learn, because remember, on this channel, you are a loser unless you learn, okay? Let's carry on with the chat. Let's make sure that we stay up to date, because we only have 16 minutes, 30 seconds till the Fed rate hike decision gets dropped. Okay, let's see here. Do you have a plan for the afternoon? We went over that. Watching FRPT. We can go over these really quick. Sorry, I had a meeting and catching up. I'm in JD at 2601. I've been in it for a few weeks and plan on holding. Okay, good for you, Keith. I like that. I hope you got a good stop loss on it, because it does look very, very it looks very speculative, very, very speculative. Covey, we're going to go over those really quick. Daniel says, I mean, it affects to price. Look at CELH January 19th. It got downgraded and fell like crazy. Yeah, I gotcha. No, I understand. I feel like, I really don't feel like I just don't believe in them yet, Danny. And I'll look at CELH, but that is just one example. I have seen it many, many times where they're upgrading and downgrading just as the price goes up and as the price goes down. I see it all the time, and I feel like these guys they're just playing out of their own hands. That's how I honestly feel. They're playing out of their own hands, and they're upgrading and downgrading as the market moves it. So SoundHound, they would have never downgraded it if it would have broke out. If it would have broke out this morning at $8.50, no way would they have came out and said, we're downgrading the stock. What caused it to downgrade, though, all of a sudden? Did some news come out and say SoundHound AI, they have a glitch in their system, that's why they're getting downgraded? No, they're just downgrading. They're downgrading it because the price is falling. And yeah, it might fall down more, but either way, I would never use that to get out of the trade. I would never get that, and I would say, okay, cool. Yeah, I would never trade that, but in Sound, example, many shorted it after the downgrade. Hey, that's pretty cool too. That if you get a downgrade and boom, the news comes out, there's a downgrade, and then people start to short. That's awesome. That's awesome. When are they going to get out? Because a lot of times, if you got a lot of people shorting, and we get down to this basing flag pattern, a lot of people start buying. The next thing you know, the shorts start to cover, and this might be the squeeze. You know what I mean? And squeeze could be relative to a lot of different people. But yeah, I totally understand what you're saying. You would never trade that, but yes, the stock price is coming down. People are shorting it because of the downgrade, but that's just future buying in my eyes. So, all right, let's go over a few of these. Good old Adam threw up in here, so he's watching FRPT. Which is beautiful. I have my alert set right here. I'm telling you, if we get a Fed rate cut, which very doubtably that will happen in 13 minutes, 30 seconds, but if they do, this would be an awesome stock for me to get in. Freshpet Incorporated. Maybe we should read a little story about Freshpet. I think that would be a good one. What else you got for me? NTRA for that base breakout that we talked about last night, you and I, in the Discord. If you guys want to join our Discord, it is in the description. We go over things every single day. We don't tell you what to buy or sell. We aren't that type. We aren't trying to lead the sheeple, but we do talk about how we trade, how the stocks that we are looking at. And if you want to be a part of that, and if you have any questions, just go ahead and join that Discord. We would be happy to have you. We also have CNA looking absolutely beautiful down here at this base. Are you sure it's CNA that you're looking at? Yeah, so CNA is just holding a 50-day moving average, but this doesn't look like a stock. Maybe RNA? Maybe that's what you meant, RNA? Because CNA, well, RNA doesn't even look that crazy. But are you sure it's CNA, Covey, that you're looking at? Because CNA doesn't look too crazy. TREX, yeah, that just doesn't look like what you would normally play. But TREX has got that base breakout at the top there. It would look really, really nice. Absolutely. And wait and see, yeah. But yeah, I don't think CNA is the stock ticker that you're looking at all, dude. That's not you. It only moves 1.4%. So, oh, you don't think the link is there? Oh, that's not good. Well, I'll just throw it up in chat then really quick. Here we go. The Discord is there if you guys want to join. It is in the chat, and thank you, Danny, for telling me that we have a little mishap in the description. I thought we had all of it in the description there. I'll go ahead and check the description while we're right here. Let's see. I guess I'm not seeing it either. Yeah, I'm not seeing it much either, but that's okay. All right, guys, we got 11 minutes. We definitely want to stay focused here on what's going on. Make sure my sound's on for this. Very good. Make sure the analytics are on for this. Very good. All right, cool. Yeah, so guys in the chat, yeah, CVNA, yeah. See, I know your trades, bro. I know your trades. You put CNA, and I still have CNA up. CVNA, yes, absolutely. And I'm with you. Those are the stocks that I'm watching. I'd like to see CVNA just because it's 34 short interest rate on that float, and that would be great to see it break out above this area and take off to the north side. But again, because it's a base breakout, my next 30 trades will be only my trend breakouts, and that I cannot play. So, but there was what was that, RNA or RVNA or VNA maybe? No. Oh well. There's another stock that I have a beautiful setup on that I can't wait to see if it actually breaks out on. I wonder how, before we really get into it, HMY. Yeah, so HMY, this is that gold ETF. Harmony Gold Mining, and that actually Dr. David was talking about this. He played this like back in the 80s. He made a ton of money back in the 80s off this stock. So I thought it was cool because I was looking at it and he brought up Harmony Gold, and I said, huh, that reminds me, I think I'm watching Harmony Gold. And sure enough, I am. And here's the trend breakout, that huge buyback right here, that huge wick on that 1 hour. But because it didn't make a new higher low, I couldn't get into this and play it, unfortunately. But I love this trend. I love the breakout. But hey, you know, I got rules and I'm trying to stick with them, especially for the next 30 trades for Danny's. Danny and I were trying to do that. 30 trade challenge, actually, where you play very specific to your buy and sell rules. Which, speaking of which, we're down 7% here on SOUN, and it's looking pretty bad for my trade in SOUN. But that's a-okay, guys. You can't win them all. I have been very happy with my trades and everything that I've made, but SOUN was not the best. Hopefully it holds out. With 9 minutes left to go, guys, we're going to bring up the S&P 500. We're going to go ahead and bring up the news. We're going to bring this in so we can see how volatile things get. I'll bring up the news over here. And we're going to see, let's see, holds public hearing on TikTok crackdown legislation. Well, we got 8 minutes. I guess I can read that for you. Let's see. The Senate committee may hold public hearing on TikTok. So they might hold it. What kind of news is that? Yeah, so they might hold public hearing. You know, it's not even owned by China. Like they're out of somewhere else. They're out of the Cayman Islands. Like it's not even. I doubt it. I think this is all just BS, honestly. I don't think it's gonna happen. I don't think they're gonna ban TikTok in America. Like, it's America. You know? It's America. Like we don't ban stuff. It's a free country. You know what I mean? But you know, I could be wildly wrong. I don't know the news. I don't follow the news. It keeps me sane to not follow the dang news. MNDY. So MNDY is above a rising 200-day moving average, following this 50-day moving average pretty well. But it is a slower mover of a stock at 3.4%. But we had this big volume blurb and traded sideways, and this volume dry up down here. What's going to happen with MNDY? It is in the software sector, so you can look at that ETF to get a better hint of how it's going to trade. But MNDY I don't know. It's not really going anywhere. It's not really showing me any kind of setup. I mean, you had this trend break, but it's not following any moving averages. It's a messy moving average system here. If we had a big push up like this, and then it followed this moving average and then started to take off, or pulled back to the 21 and then took off, but it's just not following any moving averages. So I don't have too many thoughts on MNDY. CLSK, yeah, so CLSK, so that's your Clean Spark Incorporated, which is your miner, your Bitcoin miner for Bitcoin. So if Bitcoin's moving up, CLSK usually is, but the last time Bitcoin moved up, your miners did not follow suit. So let's take a look at BTC, Bitcoin, and see, yeah, look, so Bitcoin's moving up, CLSK did a little jump up. And so maybe we find some nice support down here, and it is holding that $15 area, and maybe it breaks out and heads on higher. The last time I played CLSK, we did make a nice amount on this. It was great. We made it the very next day. We popped into this thing, we got out, and then it came out and stopped me for break even the very next day. So I was very happy with that trade. That's why you need to know when to take money to make money, baby. And we have 6 minutes left, guys. 6 minutes left. So we're gonna have to bite our tongues on the tickers. Unfortunately, I could do technical analysis all day, baby. But here we go. We got 5 minutes left, 6 minutes left, and we're gonna get the drop, drop, baby. We got data coming in, and it's gonna come in hot. We want to see what's gonna happen with this. We'll go ahead and maximize this sell so we can get a better understanding of where this is gonna go. We'll even turn this on the 5 minute, so that way we can even get a better idea. Bada bing, bada boom. There we go. Now we can see what's going to happen in the overall market here. Look at that. Really zoomed in on that for you. That's the 5 minute. That'll give you a heart attack, guys. I used to watch it this close. I used to watch everything on the 5 and 1 minute chart. And now I zoomed way out to the 1 hour. It just makes things a lot more relaxing for me. So anyway, we're going to bring up the news, the live news on this bad baby. And then as the news comes out, I will do my best to read it as quick as I possibly can. But we're going to have some fun here, guys. We're about to get some serious news popping in on this. And then Jerome Powell comes out in 35 minutes, and I already have him up and ready. And that'll be the time I get to take a break. It starts at 2:30 p.m. Eastern, or market time, if you will. Oh yeah, this is gonna be a good day, and we are about to have some serious volatility rolling into the markets, baby. I hope you boys are ready. Let's do this damn thing. Yeah, baby. Yeah. I'm just gonna throw this in the chat. Yeah, that's me saying yeah. I'm gonna throw a heart in there. Oh yeah, things are getting crazy now. All right, guys, so let's go. We can probably end this poll here. We only got a few more minutes, guys, so go ahead and look at the screen with only 4 minutes left to go. I want you to do me a huge favor. We got this like button. If you haven't already, smash that like button. We're going to try and get to 15 likes before the stream is over. And if you haven't already, hit that subscribe button, guys, and then right here is the poll. Make sure you are voting on the poll because we only have 4 minutes, and then this poll will be over. I will have to stop the poll. So like, subscribe, and then go ahead and hit that poll. Your vote counts. Your vote counts here, damn it. Even if you don't think your vote counts out there, it counts here, damn it. So go ahead and vote for me. Let me know what you think. Is the Fed rate hike, will they be raising interest rates, lowering interest rates, or do you think the interest rates will stay the same at 5.5% as they are predicted in the forecast? So we have 3 minutes, 22 seconds, and then we will keep our eye on that news. So the second it gets dropped, we're going to see exactly what happens. I'm pumped. I hope you're ready. Hope you're excited. Let's do this, baby. With 3 minutes left to go, it's time to take a sip, Shawana. This one's for you, though. This one's for you, not for me. Thank you guys for joining me. This is going to be a good day. Make sure you got your stop losses set. Make sure you got your buy orders ready. Make sure you're using risk management here because this is going to be volatile. It's going to be volatile. And if you guys want, for any reason, to join our Discord, it's absolutely free. It's absolutely free, ladies and gentlemen. It is in the chat right now. You can go ahead and go in there and join us. Absolutely free. Everything I ask of you will be only your time. It will never be of money. Never, ever, ever, ever will I ask for your money, just your time. So welcome, ladies and gentlemen. Thank you so much for being here. I do appreciate you just as much as you appreciate me. And here we go. We are 2 minutes away. 2 minutes away from the Fed rate hike decision. We're going to see, does Jerome Powell decide he's going to smack the head of the market and shoot it down by raising interest rates? Will he rise it above the fire and flame by lowering those interest rates? Or are we just going to keep it the same and see what price action is going to do for us? So we only got just a few minutes left. Get ready. We're going to warm these hands up. Blah! And I need to get a drink in. Blah. You know why? Because it's going to be, I'm going to read it as fast as I possibly can. Hopefully I don't stutter, slip, spit, or trip, because we want to make sure we bring the news the best that we can to you. I'm excited. I hope you are too. Cheers. With just a minute and a half left to go, ladies and gentlemen, thank you so much for joining me. This is LoFiTrader, where we do all the heavy news, the CPI, the Fed rate hikes, the PPI index, and we stream. We never leave a moment of free air. And if you do hear it, it's that lo-fi music in the background, because every time you get too excited when you're trading or the news gets you too excited, you always want to revert back to the mean. Revert back to the mean and relax. Take a few deep breaths, and we got it popping in 50 minutes, guys. 50 minutes. Let's do this, guys. 46 seconds. Should have a countdown on here. Should have a countdown. Yes, sir, Bob. Nobody cares about the TikTok crackdown now. We're all here for one reason. What is that? The Fed rate hike decision. Guys, if you haven't, go ahead and submit your vote on that poll. I'm going to end it here in about 10 seconds. So if you haven't voted on the poll, make sure you vote on the poll. We're going to end it. We're going to end it in 8 seconds. So make sure, if you haven't already, vote on that poll. Watching it all unfold from the nerve center, baby. Yeah, lo-fi for the win. I'm in the nerve center, baby. Watch out now. All right, we're going to end the poll. Our poll says this, that most of us agree. 63% of us say 5.5%. Okay, the alarm just went off. Now we can wait. And here comes the data. It looks like the market is taking the data in before it even pops out. We're going up to the north side right now. We're still waiting on that data to come in. Where the heck are you, data? We want to see it. My PLTR is going off. I got a lot of alerts going off here. The Senate committee here, he's still talking about TikTok. Where the heck is it? Let's go ahead. Federal Reserve, interest rates. Oh, there we go. Unchanged. Bam. Unchanged. So 5.5%, guys. Unchanged on the interest rates. Absolutely beautiful. It looks like the market initially is taking this, that it likes that interest rate decision. So we're going to go ahead and restore these cells here, and we have an interest rate of 5.5%. It's keeping it the same. That means that we aren't going to falter or sweat. We're not going to fail at this point, because if they raise those interest rates, we would have definitely came down. We would have came down very, very hard. Now, the full statement is going to be in about 30 minutes, guys. Jerome Powell will pop up in the meeting right here, and we will let Jerome Powell talk. But for right now, it's my mic. It's my time to shine, baby. And we have plenty of things to look at. So PLTR, that's the first thing that was popping off. Look at that beautiful trend break to the north side. We need to go ahead and bring up my tickers here and see what's going on. We got PUMB popping off here. IOVA. We have, let's see, ACMR. So let's go ahead and look at RNA, baby. That's the one. That's the ticker I want right here. RNA at 2437. That is looking very nice. Let's see, at 8.3% ADR, will I be able to get into this trade using today's lows? I'm using the wrong things here. Let's see. So that would be nice. Yes, sir, Bob. It looks like that's going to be a good one to take. So yes, Dave, we can totally fail. Yes, if he says that no June cuts, we gonna fail. Yeah, okay, I totally understand that. GLD is rising. AXTI is rising. Things are looking really good in the overall market here, guys. That is absolutely beautiful to see. And yes, there always is that possibility that when he comes out and he starts talking on the mic, that he talks about the future, what is going to happen, what they have planned. But right now, with the Fed coming out with the same rates, the market is liking this right now, guys. They're liking this. So I won't be so brave. I won't take this trade. But man, I tell you, with this popping up off like this, my new lower high has been set. And I love RNA in its bioscience. I really want to take this trade, man. I really want to take this trade. This really does seem like my play. But I'll get away from it so I don't play it. SOUN had a nice little pop right back into the VWAP area and then sold right back off. What else do we have popping off here? We got TREX is popping off. TREX is popping off. Look at this. There's that breakout. That base breakout took off. PUMB. PUMB? PUBM. PUBM looks like it's now breaking up above that trend, but it's still above that 10-day moving average. Got to be careful with that. What else do we have here? AXTI. AXTI looks like this. I think this is something that you were watching. Covey Adam. Dave, we can totally fail. Oh, Root. Oh, let's take a Root. Whoop, whoop. Let's take a look at Root. Yeah, baby. Root just had a nice little pop as well. Looking very, very good. You gotta love to see it, guys. You gotta love to see when the market is doing well. You have to love it, because if you have a Roth IRA, any type of investing account, that's what you want to see. You want to see all of these huge pops in the market. You want to see people making that money. Everybody wants to make money. Everybody wants to have a good retirement. Roth IRA, their 401ks, your money marketing, and all that stuff. We want to see that get higher. But I'm telling you, RNA has got me a little frantic. I want to get into this damn trade. I really do. This is my trade. I've been waiting for this forever. So 24.58. Its lows of today would be 23.47, 23.48, 23.47. Absolutely beautiful. Let's go ahead and take a little peeky gander. We don't want to get too caught up in trade. Yeah, looking good. Absolutely. So 5.5%, and we're going to see what old Papa Pelwell wants to come out and say. You took CVNA. Let's take a look. CVNA. Oh, man. That's right at the breakout, though. That's the issue with this. It's right at the breakout, and it's only on average volume. So, yeah, no, I know what you meant this time. You can't get that right, Covey. Covey took CVNA. Best of luck to you. I still think it has time to work, personally. So, best of luck. Best of luck. I got Netflix popping off. So, Netflix. Yeah. Everything's getting that pop. RNA, though, I'm telling you, I love this RNA. It's not on a crazy amount of volume, though, but it just looks so dang clean. So dang clean, man. And, I really just want to take this damn trade. So 5.22 at an 8.3. 522 at 8.3. Even at this low at 6.4. So I can afford it. I want to take it. 23.44. 24.69. Let's just do the math really quick. 24.69 minus 23.44, 23.44. That's $1.25, and then we use our risk calculator here. Let's go ahead and bring up the risk calculator. Risk calculator here. $1.25. And we're going to take, I can risk up to 250. My account, that's 200 shares. Now, before I always take it, okay, it's only got a spread of 4 cents. So I'm going to try and do 200 shares. That's what the risk calculator said, I do believe. Let's just take a double look. Nope, not that one. Buy bid. Oh, it's going to take off without me, isn't it? All right, well, I'm not gonna have no fear of missing out. I got my bid out. We're gonna see if it gets me in. If it doesn't, that's a-okay. I should just take it when I thought I wanted to, but that's okay. We'll see. We'll see how it works out. Let's go back to the SPY, guys. So the SPY is still taking off. It's still showing that it really likes that. It's going up on higher volume. So the overall market is saying that it likes it. Now, of course, I've seen many, many rate hikes. This could easily go to all-time high, like we talked about this morning. It is at all-time high right now. And you know, a lot of things that happen at all-time high. Either one, we have huge selling off at all-time high, or two, we get a lot of people that get very, very excited at that all-time high. And what do? They buy in. They don't want to miss out. They want to buy in. They want to be a part of all-time high. They want to continue buy, you know, and sometimes that happens. So we just did get into RNA, which I like this stock. I wish I would have gotten a little bit better price, but you know what? 24.73 is good enough for me. I wanted to get in right about 24.50, but 24.73 is still just above this breakout area, and it's within my risk range by still 2%. So this is going to be my risk down here. So we're going to go ahead and take and mark this out really quick. We're going to put our stop in right here. Bada bing, bada boom. And then we're going to go ahead and switch this order to a good till cancel. And there we go. Now we are in two different biotech stocks, which is never a good thing to be. I don't like being in two of the same biotech stocks. But I've been in DYN, and this is a solid trade. This thing only has, you know, it's either going to break out from here or it's going to stop me out as well. But this is going to be for a win because I've already got most of my money out. So we did take RNA. So what do I do when I take RNA? The very first thing that I want to do is I want to bring up my stock study, and I want to go ahead and throw that up here. Let me go ahead and bring up this one more time. So on my stock study, what I always do is the market on an uptrend? Yes. What ticker did I take? That is RNA. What date did I take it? 23. Oops. 320. The market cap for RNA. Let's go ahead and take a little peeky gander. RNA. RNA is a 1.97 billion, which is my favorite. 1.97 billion. The buy price for RNA. Let's go ahead and take a look. RNA. The buy price was at 24.73. 24.73, very good. Our stop loss is set at 23.40, 23.40, and our position size is 200 shares. All right, and then it'll tell you the risk per share and the total risk, so that way I can make sure I got my numbers right, which I did. And then, yeah, the trade risk percentage should tell us here. Bam. All right. So things are looking good, guys. Got that in there, and we are going to let it play out. Okay, we'll go back to the SPY, and we'll check the chat just to make sure that we don't have anything that I've missed. Sorry, guys. Let me just go back into here. Sorry if I missed anything. We'll go back to this. We got 603 subscribers. Gentlemen, ladies and gentlemen, thank you very much. Pat yourself on the back. I do appreciate you and everything that you do for me. YouTube.com. Yeah, we've been moving up pretty fast. It's like 80 subscribers every week, every 2 weeks or something crazy like that. So this is a very fast moving, very quick subscriber rate of inflow, and I love it. I love it. I love seeing progression. So let's take a look at the EQ. You said that's got a nice pop to it. Yep. I don't like watching it because it's just dead space. It's just no. But I mean, there is volume coming in. Don't get me wrong. The EQ's got some volume coming in. It held this 21-day moving average very well. And now you got the EQ popping off with something it shouldn't have said right here. But everything is popping off. 15.3% fast mover. So this might be a very nice stock to get in if you have a small account. Oh man. So Jerome Powell will be starting to talk here in about 15 minutes. It's going to start at 2:30. So if you stick around, I will stream it live right here for you. No big deal. You are welcome. I'll just say it in advance. You're very welcome. I want to go ahead and take a look at Enflix though. Keep an eye on EQ. Let me know if anything happens with that. This is definitely your type of stock. I know that you love these very speculative, very low float type of stocks, but let's take a look at Enflix. And guys, if you're just joining us now, the Fed rate hike decision was even 5.5%. They kept it the same. Okay, they kept the interest rates the same, was showing very favorable so far in the market. But don't think that the volatility is over just yet. We're seeing higher volume. We hit all-time highs, guys. All-time highs in the S&P 500 at 518.40. That is a beautiful, beautiful thing to see. You know you love to see it, and you've seen it here first on LoFiTrader. So make sure you hit that like, hit that subscribe button, share it with your friends, share it with your mama. She'll love it. So the S&P 500 is only up 0.30%, but it still reached the new all-time highs. After trading sideways almost all stinking day, we're going to see if when Jerome Powell comes out, if my guess is correct, once he turns on that mic right at 2:30, if the market's going to tank, we'll see how bad it does, and we'll see if we are going to continue to have a sell-off after that, because this could be a trap. We will see. Seen many traps before, guys. Many traps. All-time highs. Why wouldn't we, you know? Why wouldn't we just pull back and sell off? I mean, it very well could. Very well could. So we did take a speculative trade on RNA, and we are still in DYN and SOUN. We are still in as well. So we're going to see what is going to happen in front of us when it comes to that. But I did take all my trades that I wanted to trade. So RNA, we can see a beautiful push up higher and a pullback following a 10-day moving average, and we got in on a new higher low. We're going to use today's day as a new higher low. Any breakout looks absolutely beautiful. I love to see it. Gotta loosen that up. Whew. DYN is up 0.4%. The S&P 500 is up 0.23% on the day from previous day's close. That looks absolutely phenomenal. Will this continue to go higher? Maybe we should bring up another poll here, and we should say, will it continue to go higher? So we already have one. Oh shit. What am I doing here? Hang on one second, guys. We got to switch the account here to Lo-Fi. There we go. And then I can go to the analytics. That'll make things a little quicker here. There we go. That's much better. And then I can go ahead and start a poll. I am curious though, Covey, if you're still listening, I wonder if you are able to start a poll on here. Can you start a poll from your end? It would be down by the chat. So I'm on my computer, but the chat is down at the bottom right-hand side. And I'm curious if you are able to start a poll on your own. Just let me know if you can. You don't have to start one, but just let me know if you can actually start a poll on your own. So I'm going to go ahead and start a poll, and I'm going to say, start a poll. Will the market end green or red by end of day? We'll do green, red. All right. New poll is up in the chat. We got 9 of us in here, so go ahead and let me know what you think. Are we going to be green or are we going to be red in the overall market by the end of the day? So the S&P 500 is now trading at 516.76. We had a nice pop when we got that rate hike decision of break even. So we have, let's see, the Fed holds interest rates steady. Dot plot signals 3 rate cuts in 2024. Fewer reductions in 2025 and 26. So that plot data, that's some that plot data is something very, very interesting. So it's something that I should probably bring up because a lot of people go off of that plot data, which just shows when people think, maybe not people, but when everybody is expecting the rate hikes to actually come in. I said not people like they're lizards or something. The plot date revealed the median preference for the 3 rate cuts in 2024, with rates expected to reach a midpoint range of 4.6% by the end of the year. The potential strategy confirmed what Federal Reserve outlined in December 2023, allaying fears of a downwardly revision to rate cuts after the recent hotter-than-expected inflation data. However, looking ahead to 2025, the Fed now eyes the possibility of 3 rate cuts, down from 4 earlier, aiming from a midpoint Fed funds rate of 3.9% by end of year for 2026. The Fed production rates to be at 3.1% by the end of the year, up from the 2.9% earlier. So that's what we got going on right now, and it looks like the market is starting to head to the downside after getting that. We are still at the highest point. We have not had the biggest sell-off yet, but we do know that the old Papa Powell, he's going to be out here in just a few minutes, and he's going to go ahead and take the mic from me, so that way I can do less talking and he can do more talking. So if you guys are liking what you're seeing on this stream, make sure you hit that like, hit that subscribe button. I am so pumped and happy that you are here with me today, so thank you for joining us. You guys are awesome. All right. Let me go ahead and bring this up and see what we got going on here. You know what I can't wait? I can't wait to do? I can't wait to smash on some food. Your boy is hungry. How long have I been streaming here, guys? I've been streaming for 5 hours, 31 minutes straight, and you have not heard any downtime. You don't hear that from anywhere else. There is so much downtime and dead air and all these different things. I'm giving you the best stock commentary, the best analysis. I'm bringing you the news. I'm doing everything I can to make sure this stream is 100 for you, baby. And I love to do it. So I'm happy to be here. So make sure if you're enjoying this, you hit that subscribe button. I am very, very happy. Very happy to be here. Very pumped. Yes, sirree, Bob. Okay, let's see here. Do-do-do-hoo. Do-do-do-do. Oh, I gotta do one more thing. Hold up. Hold up. Hey, the Fed right hate decision. Hey. All right. What'd you guys vote? We got 67% said it's going to end green, and 33% of us said it's going to end red. Goodness gracious. I don't hope it ends red because I got, these chat rooms for Robinhood needs to be consolidated because too many notifications and messages coming through. No. All right, ladies and gentlemen, what do we have here today? We have just a few more minutes. We got 10 more minutes till Jerome Powell, old Papa Powell, comes out and starts speaking in tongues. No, I'm just kidding. He's going to come out and he's going to tell us, hey, this is what I do or I don't think. This is what I like or what I don't like. This is what I'm expecting to see in the future. You know, if he comes out and he says the same thing that we see in the news when it talks about the steady dot plot signals 3 rate hikes in 2024, which is fewer reductions, that might be bad on the overall market. But right now we are still holding green. We still are holding that sideways action. We had that beautiful pop to the north side. So things are still looking very positive for the overall S&P 500. We just cleared new all-time highs. You can't really complain with that, guys. You cannot complain. Whether you're bullish or you're bearish, the first thing that we see here on the S&P 500 is the fact that we just beat all new all-time highs. So whether we look at this thing to die today or to continue higher, everyone has to accept the fact that we just hit new all-time highs. new all-time highs with a 5.5 rate of expectancy. Okay, so if we're gonna stay at 5.5 and we get a nice pop to the north side, you know, that at least in its bare minimum is a positive thing. It's a positive thing right there. Okay, so that is a beautiful thing. Decided to grab TLT in this dip before he speaks. Yeah, I like that. Yeah, I'm telling you, I do really want to just take a quick short on this and say, you know, hey, I think it's going to fail, because every time he turns on that microphone, he always ends up crashing the market for a little bit. Not to say that it's going to be sustainable, you know. It's not going to be sustainable, you know. What could easily happen is that you know, it just pops back down. It just creates volatility, fear. You know, oh, Jerome Powell's talking, old daddy's popping, or daddy's talking, let's get to popping, and it slides on down. But you know, you never know. You never actually know what's going to happen in the overall market. All you can do is play the proper price action. So if we come back down and we hit a new low, you know, that could definitely be something. But yeah, I like, Keith, I appreciate you being in here. You've been in here almost all day with me, Keith, about at least half the day. So I appreciate your dedication. Bob, I do appreciate you being in here. Covey, of course. Adam, thank you so much for being in here. Yeah, Danny, you were in here for quite some time. Keith, you're awesome. Let's see who else we got. Sergio, I think, popped in here for a little bit. My brother Dan. There's so many Daniels. Danny, Daniel, Danielson. We got so many Daniels in this chat today. I love it. So thank you guys. Thank you so much for being in here with me today. It was an awesome day with you guys. We still got some time left. We still got old Jerome Powell coming out here in about 7 more minutes. And while he talks, I'm going to give him a chance to talk. I'll let him do his thing. And then I will go grab a bite to eat while he's doing that. And then I'll be back in here to catch the tail end of it, and we can go over whatever. I really appreciate you guys being in here, though. This has been absolutely phenomenal. And right now, with the S&P 500 being where it is at, sitting at 516.74, absolutely pumped to see where this is headed. Maybe we find some support right here where we traded sideways all day at 516, and maybe we continue on wayward son, but we will see what is to come very, very soon here, guys. So absolutely wonderful to see this. See, Covey, you are a managing moderator. I made you a managing moderator. Covey, I gave you full rights. You are my number one, my right hand, bruh. Come on, bruh. You don't think I would give you managing rights, bro? Of course I would. You're my dude. You're my editorialist. You're my social anxiety. You know, you're my socialite. I don't even know what to call you, man. You got so many titles. You're the man. You're the myth. You're the legend. You're the guy in the back that nobody sees, that keeps everything running smoothly. You know, I'm just this big head in front of a camera. Well, you take care of all the hard work, and I appreciate you, bro. Yeah, so, yeah, well, I already put a poll out too, Covey. So that being said, because I already put a poll out too, you probably won't be able to actually do it. But with only 3 votes, guys, I want everybody to vote on this. Are we going to be green? Are we going to be red? What are we going to be by the end of the day? Only Papa Powell knows. He knows. Oh, he knows. I know he knows. But we got 5 minutes, guys. 5 minutes, and then this is going to pop off. This is going to be fun. It's going to be a good time. Yes, sirree. Let's go ahead and do this. Go ahead and do this. And then we'll turn up our mic to make sure that we all know what's happening. Let's turn this up, this volume. Oh yeah, this is about to be lit. I'm happy to be doing this with you guys. Let's go ahead and we'll just blow this up as well, maximize this cell. We'll get rid of the live news. We'll zoom in on this. And then we'll bring up old Papa Powell back up over here, and we will get rid of my face in just a minute. But yeah, guys, awesome. Old Papa Powell. Come on, old Papa Powell. Come on out here and play. Oh. Today was a good day. Was it not? Do I not entertain you? Let's go. That was a nice little pop there. Look at that. Look at that volume, that buying volume. You get over 1.8 million shares traded right there. No, I was wrong. I lied. 2.5 million shares right there. And then on the sell-off volume, you have 1.5 million shares, so almost half of that. So things are looking pretty dang good. Pretty good. Guess who's hungry? I am. I am super hungry. I'm going to go eat hot dogs and hamburgers and stuff. So, yeah, man. Things are looking good. Things are looking good. 4 votes. Loving it. Thank you guys for voting. We got Papa Powell coming out at 2:30. We got about 3 minutes. 3 minutes until that happens, baby. You know you want to see it. Let's hear that old man chitter-chat and talk. Is he going to come out looking dovish or bullish? I think that's the funniest thing. People, I mean, and it is true. When he comes out, if his papers are bent and folded and it looks like his hair's a little messed up, you know, they do certain things to make him look a certain way. So if they want him to look hawkish, they will bend and ruffle his papers. They'll make his glasses tilt a little sideways. They'll mess up his hair a little bit. Maybe his tie will be off to the side a little bit to make it look like he's rough, you know, like, yeah, he's hawkish. Things aren't looking good, you know. So if they want to make things look bad, they're going to make things look bad, and without giving you too much, you know, too much to tell. And then, you know, if he comes out, he looks crispy, clean, clear skin, wearing the nicest blues you've ever seen with a crispy tie and no wrinkles in his shirts. His hair is done, not a strand out of place. His glasses are as clean and squeaky as they possibly can be. Well, guess what? They're trying to look dovish. They're trying to look good for the overall outlook on the macroeconomics side of things, you know. And if we got that, that's a-okay. Things are going to look good. But yeah, so that's going to happen. That's going to take place. Guess when? Like 1 minute right now. So let's see if we can get this.
The Federal Reserve, through
Here we
its
go.
Federal Reserve Education Program, also helps people understand how the economy works, so consumers have the tools to make sound financial decisions.
Enjoy, guys. Thank you for joining me. Enjoy the meeting.
Through this
Enjoy the
education
show.
program, teachers have access to classroom-ready online resources for students from kindergarten to college. Videos, classroom lessons, online education, publications, and more. These resources are all free for educators to use in their lesson plans, or as they see fit. Many of the Federal Reserve System's regional reserve banks, located in 12 districts across the nation, also offer in-person and online professional development that allows educators to deepen their knowledge and hone their craft when it comes to economics, personal finance, and more. Students, too, can take advantage of in-person opportunities by taking tours and exhibits in many of the 12 Federal Reserve banks around the country. Whether a student visits with their family or a school group, they get an in-depth look at how the Federal Reserve works to promote a healthy, sustainable U.S. economy. At the board and reserve banks, students also get hands-on opportunities like internships and participation on student boards, which introduce them to key economics concepts and potential careers in economics and finance. Consumers are empowered to make sound financial decisions through the availability of easy-to-understand resources that explain personal finance concepts, the broader economy, and the Federal Reserve's role in it. Federal Reserve Education is committed to equipping educators, educating students, and empowering consumers when it comes to understanding and participating in our evolving economy. For more information, visit federalreserveeducation.org to find links to resources and Reserve Bank programs offered near you, and follow Federal Reserve Education on Twitter at FedEconEd.
Hi, I'm Ian, and I work for the Federal Reserve.
afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. The economy has made considerable progress toward our dual mandate objectives. Inflation has eased substantially, while the labor market has remained strong, and that is very good news. But inflation is still too high. Ongoing progress in bringing it down is not assured, and the path forward is uncertain. We are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustainably strong labor market that benefits all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Our restrictive stance on monetary policy has been putting downward pressure on economic activity and inflation. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. GDP growth in the fourth quarter of last year came in at 3.2%. For 2023 as a whole, GDP expanded 3.1%, bolstered by strong consumer demand as well as improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have weighed on business fixed investment. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2% over the next 2 years. Participants generally revised up their growth projections since December, reflecting the strength of incoming data, including data on labor supply. The labor market remains relatively tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 265,000 jobs per month. The unemployment rate has edged up but remains low at 3.9%. Strong job creation has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has been easing and job vacancies have declined. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebalancing in the labor market to continue, easing upward pressure on inflation. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.1% at the end of next year. Inflation has eased notably over the past year, but remains above our longer-run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as from measures from financial markets. The median projection in the SEP for total PCE inflation falls to 2.4% this year, 2.2% next year, and 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are strongly committed to returning inflation to our 2% objective. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are coming into better balance. We believe that our policy rate is likely at its peak for this tightening cycle, and that, if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We are prepared to maintain the current target range for the federal funds rate for longer, if appropriate. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we have seen on inflation, and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. The committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably down toward 2%. Of course, we're committed to both sides of our dual mandate, and an unexpected weakening in the labor market could also warrant a policy response. We will continue to make our decisions meeting by meeting. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 4.6% at the end of this year, 3.9% at the end of 2025, and 3.1% at the end of 2026, still above the median longer-term funds rate. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. Turning to our balance sheet, our securities holdings have declined by nearly $1.5 trillion since the committee began reducing our portfolio. At this meeting, we discussed issues related to slowing the pace of decline in our securities holdings. While we did not make any decisions today on this, the general sense of the committee is that it will be appropriate to slow the pace of runoff fairly soon, consistent with the plans we previously issued. The decision to slow the pace of runoff does not mean that our balance sheet will ultimately shrink by less than it would otherwise, but rather allows us to approach that ultimate level more gradually. In particular, slowing the pace of runoff will help ensure a smooth transition, reducing the possibility that money markets experience stress and thereby facilitating the ongoing decline in our securities holdings, consistent with reaching the appropriate level of ample reserves. We remain committed to bringing inflation back down to our 2% goal and to keeping our longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and price stability over the long term. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you.
Steve Leisman, CNBC. Mr. Chairman, the projections show somewhat higher core inflation. They also show somewhat stronger growth. What should we infer from this notion that on average rates were kept the same this year, but inflation is higher and growth is higher? Does it mean more tolerance for higher inflation and less of a willingness to slow the economy to achieve that target?
Well, it doesn't. No, it doesn't mean that. What it means is that we've seen incoming, as I pointed out in my opening remarks, we did mark up our growth forecast, and so have many other forecasters. So the economy is performing well, and the inflation data came in a little bit higher as a separate matter, and I think that caused people to write up their inflation. But nonetheless, we continue to make good progress on bringing inflation down, and so.
When you just to follow up, when you say that you're willing to either maintain the rate for longer, what is the tolerance of the Federal Reserve for inflation coming in above its 2% target?
We're strongly committed to bringing inflation down to 2% over time. That is our goal, and we will achieve that goal. Markets believe we will achieve that goal, and they should believe that, because that's what will happen over time. But we stress over time, and so I think we're making projections that do show that happening, and we're committed to that outcome, and we will bring it about.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. You and others have been saying that relief on housing inflation is coming, but it still hasn't shown up meaningfully in the CPI or the PCE. Does that challenge your assumption about when the shift will finally break through, since it hasn't at that point?
So I think there's some confidence that the market rents, lower market rent increases that we're seeing will show up in measures of housing, services, inflation over time. There's a little bit of uncertainty about when that will happen, but there's real confidence that they will show up eventually over time. But again, uncertainty about the exact timing of that.
And will you be able to get overall inflation down to target if housing doesn't break through quickly, and does that affect the timing for eventual cuts this year?
We will get aggregate inflation down to 2% over time. We will. And I would assume that what we'll continue to see is we'll see goods prices coming into a new equilibrium where they're going down perhaps not as quickly as they had been earlier this year, where housing services inflation will come back down as current market rents are suggesting will happen, and where non-housing services will move back down. Some combination of those three things, and it may be different from the combination we had before the pandemic, will be achieved and will bring inflation back down to 2% sustainably.
Of the Wall Street Journal. Chair Powell, during your congressional testimony this month, you said that your test for making the first change to interest rates does not require you to be terribly comfortable that inflation is at 2% because interest rates are well above neutral. At the same time, you said here after the last meeting that the first cut is highly consequential. Can you reconcile these views for me? If rates are well above neutral, why would the first cut be highly consequential? Is that because you anticipate one cut would be followed by one or two more along the lines of the recalibration you made in 2019, which itself was modeled on the mid-cycle adjustment of 1995?
It's more, I would put it more in the context of what I said in my opening remarks, that the risks are really two-sided here. We're in a situation where, if we ease too much or too soon, we could see inflation come back, and if we ease too late, we could do unnecessary harm to employment and people's working lives. And so we do see the risks as two-sided, so it is consequential. We want to be careful. Unfortunately, with the economy growing, with the labor market strong, and with inflation coming down, we can approach that question carefully and let the data speak on that. That's really what I was thinking.
How much of that you've seen so far this year do you chalk up to one-off calendar adjustment effects following a period of high inflation versus some change in the trend we saw in the second half of last year?
I want to start by saying I always try to be careful about dismissing data that we don't like. So you need to check yourself on that, and I'll do that. I would say the January number, which was very high, the January CPI and PCE numbers were quite high. There's reason to think that there could be seasonal effects there. But nonetheless, we don't want to be completely dismissive of it. The February number was higher than expectations, but we have it at currently well below 30 basis points core PCE, which is not terribly high. So it's not like the January number. But I take the two of them together, and I think they haven't really changed the overall story, which is that of inflation moving down gradually on a sometimes bumpy road toward 2%. I don't think that story has changed. I also don't think that those readings added to anyone's confidence that we're moving closer to that point. But we didn't. Last thing I'll say is we didn't excessively celebrate the good inflation readings we got in the last 7 months of last year. We didn't take too much signal out of that. What you heard us saying was that we needed to see more, that we could, we wanted to be careful about that decision. And we're not going to overreact as well to these 2 months of data, nor are we going to ignore them.
Hi, yes, Chair Powell. Could you speak a little bit more about the timing? Is there enough data between now and, say, May to be able to get the kind of confidence that you say that, you still need, or by June, is there enough data for you? Just give us a sense of your thinking there. Thank you.
Yeah, so we make decisions meeting by meeting, and we didn't make any decisions about future meetings today. Those are going to depend on our ongoing assessment of the incoming data, the evolving outlook, and the balance of risk. So I really don't have anything for you on any specific meeting looking forward.
Is there even enough data to be able to?
We'll take, things can happen during an intermeeting period if you look back, unexpected things. So I wouldn't want to dismiss anything. So I just would say that the committee wants to see more data that gives us higher confidence that inflation is moving down sustainably toward 2%. I also mentioned, and we don't see this in the data right now, but if there were a significant weakening in the data, particularly in the labor market, that could also be a reason for us to begin the process of reducing rates. Again, there's nothing in the data pointing at that, but those are the things that we'll be looking at coming meetings, and without trying to refer to any specific meeting.
Hi, Chris Regaber at Associated Press. Thank you. In the projections, there is an increase in the neutral rate, as you know, and higher rates, a quarter point higher rates projected in 2025, 2026. Can you speak about why might be behind that? Is there a real sense here that the economy has perhaps changed in some way that higher rates will be needed in the future? Thank you.
So you're right, they're pretty modest changes, but you're right, there was an uptick in the longer run rate, and also there's a 25 basis point increase in 25 and 26. In terms of are rates going to be higher in the longer run, if that's really your question, I don't think we know that. I think we think that rates were generally low during the pre-pandemic, post-global financial crisis era for reasons that are mostly, important, slow-moving, large things like demographics and productivity and that sort of thing, things that don't move quickly. But I don't think we know. I mean, my instinct would be that rates will not go back down to the very low levels that we saw, where all around the world there were long-run rates that were at or below zero in some cases. I don't see rates going back down to that level, but I think there's tremendous uncertainty around that.
Great. And just a quick follow on the projections, you also have 2.6% core inflation for the end of this year. It's already at, or you mentioned it being 2.8 in February. I mean, that doesn't sound like much disinflation at all. So are you still confident? Or the last press conference, you sounded pretty optimistic you would get more confidence at the end of this year. Is it right to say that this suggests you're not seeing a lot of disinflation this year compared to what we've seen 2023 and so forth?
I think that higher year-end number reflects the data we've seen so far this year, because you're now in this year. So I think that. Sorry, say your last part of your question again. I think if you look at the SEP, what it says is that it is still likely in most people's view that we will achieve that confidence and that there will be rate cuts. But that's really going to depend on the incoming data. It is. The other thing is, in the second half of the year, you have some pretty low readings, so it might be harder to make progress as you move that 12-month window forward. Nonetheless, we're looking for data that confirm the kind of low readings that we had last year, and give us a higher degree of confidence that what we saw was really inflation moving sustainably down to 2%, toward 2%.
Gina Smilik, The New York Times. Thank you for taking our questions. Per your comment, Anne, that a weakening in the labor market would be a reason to potentially cut rates, or at least a consideration in making a rate cut, would continued strength in the labor market be a reason to hold off on rate cuts? And just in general, if labor supply continued to rebound in 2024 the way it did in 2023, what would stronger hiring and possibly stronger growth mean for the path forward on policy?
Yeah, so if what we're getting is a lot of supply and a lot of demand, and that supply is actually feeding demand because workers are getting paid and they're spending, and that's, what you would have is potentially kind of what you had last year, which is a bigger economy where inflationary pressures are not increasing. In fact, they were decreasing. So you can't have that if you have the continued supply side activity that we had last year with both with supply chains and also with growth in the size of the labor force.
But so strong hiring in and of itself would not be a reason to hold off on rate cuts?
No, not all by itself, no. I mean, we saw, you saw last year, very strong hiring and inflation coming down quickly. We now have a better sense that a big part of that was supply side healing, particularly with growth in the labor force. So in and of itself, strong job growth is not a reason, for us to be concerned about inflation.
Hi, Chair Powell. Neil Irwin with Axios. How do you assess the state of financial conditions right now, and in particular, do you view the kind of easing in financial conditions since the fall as consistent and compatible with what you're trying to achieve on the inflation mandate?
So we think there are many different financial conditions indicators. You can kind of, see different answers to that question, but ultimately, we do think that financial conditions are weighing on economic activity, and we think you see that in a great place to see it is in the labor market, where you've seen demand cooling off a little bit from the extremely high levels. And there I would point to job openings, quits, surveys, the hiring rate, things like that are really demand. There are also supply side things happening, but I think those are demand side things happening. We saw, that's been a question for a while. We did see progress on inflation last year, significant progress, despite financial conditions sometimes being tighter, sometimes looser.
Michael McGee with Bloomberg Radio and Television. Can you give us more color on how the committee is thinking about inflation dynamics now? What we've seen at the beginning of the year, are they more one-off increases that will fade, or is there more of a secular turn with goods prices rising again and service prices staying sticky? And also, housing prices have been sort of the Godot of this cycle, in that you keep expecting them to go down and they don't. How does the committee see this playing out forward since you've raised your inflation forecast?
So I see the committees looking at the 2 months of data and asking the same question you're asking and saying we're just going to have to see what the data show. As I mentioned, you can look at January, which is very high reading, and I think many people did see the possibility of seasonal adjustment problems there. But again, you got to be careful about dismissing the parts of the data that you don't like. So then February wasn't as high, but it was higher. So the question is, what are we going to see? We tend to see a little bit stronger, this is in the data, a little bit stronger inflation in the first half of the year, a little bit less strong later in the year. We're going to let the data show. I don't think we really know whether this is a bump on the road or something more. We'll have to find out. In the meantime, the economy is strong, the labor market is strong, inflation has come way down, and that gives us the ability to approach this question carefully and feel more confident that inflation is moving down sustainably at 2% when we take that step to begin dialing back our restrictive policy.
Well, you've talked about the desire to have confidence that inflation is continually moving down. Has the recent numbers we've gotten for inflation data dented that confidence at all?
It certainly hasn't improved our confidence. It hasn't raised anyone's confidence, but I would say that the story is really essentially the same, and that is of inflation coming down gradually toward 2% on a sometimes bumpy path, as I mentioned. I think that's what you still see. We've got 9 months of 2.5% inflation now. We've had 2 months of kind of bumpy inflation. We were saying that it's going to be a bumpy ride. We consistently said that. Now here are some bumps, and the question is, are they more than bumps? And we can't know that. That's why we are approaching this question carefully. It is very important for everyone that we serve that we do get inflation sustainably down. And I think the historical record, every situation is different, but the historical record is that you need to approach that question carefully and try to get it right the first time and not have to come back and raise rates again, perhaps, if you cut inappropriately, prematurely.
Thank you, Mr. Chairman. Edward Lawrence with Fox Business. I wanted to ask you, you received a letter from, the Federal Reserve, first independent body, understanding Congress has oversight over that, received a letter from Senators Elizabeth Warren and Sheldon Whitehouse that said, calling on you to lower interest rates, cut interest rates, because it says, quote, the potential that it may remain too high for too long has halted advances in deploying renewable energy technologies and delayed significant climate and economic benefits from these projects. So has higher interest rates caused that?
Have they? Well, first of all, I respect in our system of government, it is Congress that has oversight responsibility over the Fed. We place a tremendous amount of importance on our engagements with Congress and always treat them with great respect. In this case, I would say those are, our mandate is for maximum employment and price stability and the other things that we do. And that's what we're trying to accomplish. We're trying to do that in a way that sustains the strong growth we're seeing, the strong labor market we're seeing, but allows us to make further progress with inflation. That's how we can best serve the public and leave the other issues, which in many cases are incredibly important, such as those you mentioned, leave those to the people who have responsibility for those.
There's another letter from 2 dozen lawmakers saying that the higher rates are squeezing the working people. How do these letters affect what you guys are doing policy-wise?
We receive these letters with respect, and we write careful responses and address concerns. We listen, again, because we're talking to the people who in our system of government have oversight over our activity. So but at the end of the day, we take that on board, but we have to make our judgments and we have to stick to our knitting, which is maximum employment, price stability, supervise and regulate banks, work on the payment system, the things that we do.
Claire Jones, Financial Times. Thanks a lot for the opportunity to ask a question. As chair of the FOMC, would you want to see unanimity on the committee or something close to it, meaning no more than one dissent before you begin cutting rates? Thank you.
We're a very consensus-oriented organization, and we do try to achieve consensus and ideally unanimity. People do dissent. It's something that happens. Life goes on, and it's not a problem. We've always had dissents, and so you respect thoughtful dissents very much. It's like you may not agree with some arguments, but you really want to understand them. So you may read a book that takes a position that you have long opposed just to understand that book. So I treat dissents with real respect as well.
Can you hear me?
Yes.
Okay, great. Obviously, inflation is some ways away from target. Unemployment, though, if you look at the projection for the full year, 4.0%. In February, we were already at 3.9%, so quite close to the median projection. Are you concerned at all that, notwithstanding the very strong jobs growth, that in fact there may be some cracks appearing in the employment market? You talked about a significant deterioration in the labor market being a condition for easing rates. What would constitute that in your books? Thank you.
So we, of course, monitor it's one of our two goal variables. We all monitor the labor market very, very carefully, and I don't see those cracks today. And we follow all the possible stories that are out there about there being cracks. But the overall picture really is strong labor market. The extreme imbalances that we saw in the early parts of the pandemic recovery have mostly been resolved. You're seeing high job growth. You're seeing big increases in supply. You're seeing strong wage growth, but wage growth is gradually moderating down to more sustainable levels. In many, many respects, things are returning more to their state in 2019, which we can think of as normal for this purpose. That's job openings and quits, and surveys of workers and businesses are always interesting on this. You know, how easy is it to find a job? How easy it is to find a worker? Those surveys have both come down. So the labor market's in good shape. You do see things like the low hiring rate, and people have made the argument that if layoffs were to increase, that would mean that the net would be fairly quick increases in unemployment. So that's something we're watching, but we're not seeing it. Of course, initial claims are very, very low, and if anything, have tracked down a little bit. So watching it carefully, don't see it. And when I say something, I use the term unexpected weakening in the labor market. So, we do expect the unemployment rate to, the forecast is that it would move up, I think, closer to what we see as the longer run sustainable level. That's just people's forecast, individual forecasts. But we're talking about something that's unexpected. That's where I'll leave it, though.
Steve Matthews with Bloomberg. You mentioned at the beginning of the press conference that the committee thought it might be appropriate to slow the pace of asset runoff fairly soon. I'm wondering, when you say fairly soon, does that mean that the committee would meet about this again in May, and a decision could be reached that soon? And I was wondering if you could also just describe the scope of what the committee is discussing here. You're at $95 billion of caps right now. Would that be cut about in half or something in that nature? Thank you.
So that is what we're discussing essentially is and we're not discussing many other balance sheet issues. We will discuss those in due course, but what we're really looking at is slowing the pace of runoff. There isn't much runoff among MBS right now, but there is in treasuries, and we're talking about going to a lower pace. I don't want to give you a specific number because we haven't had an agreement or a decision, but that's the idea, and that's what we're looking at. And in terms of the timing, I said fairly soon. I wouldn't want to try to be more specific than that, but you get the idea. The idea is, and this is in our longer run plans, that we may actually be able to get to a lower level because we would avoid the kind of frictions that can happen. Liquidity is not evenly distributed in the system, and there can be times when, in the aggregate, reserves are ample or even abundant, but not in every part. And those parts where they're not ample, there can be stress, and that can cause you to prematurely stop the process to avoid the stress, and then it would be very hard to restart, we think. So something like that happened in 19, perhaps. So that's what we're doing. We're looking at what would be a good time and what would be a good structure, and fairly soon is words that we use to mean fairly soon.
And will there be a discussion about returning to an all treasuries balance sheet at some point?
So that our longer run goal is to return to a balance sheet that is mostly treasuries. I do expect that once we're through this, we'll come back to the other issues about the composition and the maturity and revisit those issues. But it's not urgent right now. We want to get this decision made first, and then we can, when the time is right, come back to the other issues.
Hi, Victoria Guido with Politico. Also on the balance sheet, can you talk a little bit about how the outlook for the banking sector might impact your balance sheet plans? Do you worry that as deposits start to shrink that we could see more turbulence?
We'll be watching carefully, but one of the reasons we're slowing down, we will soon enough, fairly soon I should say, slow down, is that we want to avoid any kind of turbulence. I wasn't thinking particularly about banking sector turbulence, but we had some indicators the last time. This is our second time in doing this, and I think we're going to be paying a lot of attention to the things that started to happen and that foreshadowed what eventually happened at the end of that tightening cycle, where we wound up in a short reserve situation. And we don't want to do that again. And I think now we have a better sense of what are the indicators. It It wasn't so much in the banking system as it was around, for example, where federal funds is trading relative to the administered rates, and where secured rates are relative to the administered rates, those sorts of things. We will always be watching the banking system for similar signs, though.
Well, is it also because you're not sure exactly how the reserve supply will react once the overnight reverse repo facility, drops near at zero?
Well, I think we broadly think that once the overnight repo stabilizes, either at zero or close to zero, that as the balance sheet shrinks, we should expect that reserves will decline pretty close to dollar for dollar with that. That's what we think.
Hi, Chair Powell. Jean Young with M&I Market News. I wanted to ask also about the balance sheet. You said that starting the taper sooner could get you to a smaller balance sheet size. Does that mean you don't have to make a decision on when to end QT at this point, and will you be setting up the process for deciding that sooner, or will you wait until we're close to the end?
So it's sort of ironic that by going slower you can get farther, but that's the idea. The idea is that with a smoother transition, you'll run much less risk of kind of liquidity problems, which can grow into shocks and which can cause you to stop the process prematurely. So that's where, in terms of how it ends, we're going to be monitoring carefully money market conditions and asking ourselves what they're telling us about reserves. Right now we would characterize them as abundant, and what we're aiming for is ample, and which is a little bit less than abundant, right? So there isn't there's not a dollar amount or a percent of GDP or anything like that where we think we have a really pretty clear understanding of that. We're going to be looking at what these what's happening in money markets, in particular a bunch of different indicators, including the ones I mentioned, to tell us when we're getting close. Then though you reach a point ultimately where you stop allowing the balance sheet to run off, but then from that point there's another period in which non-reserve liabilities grow organically, like currency, and that also shrinks reserves at a very slow pace. So you have a slower pace of runoff, which we'll have fairly soon. Then you have another time where you effectively hold the balance sheet constant and allow non-reserve liabilities to expand, and then that ultimately brings you ideally in for brings it into a nice easy landing at a level that is above what we think the lowest possible ample number would be. We're not trying for that. We want to have a cushion, a buffer, because we know that demand for reserves can be very volatile, and we don't want to again find ourselves in a situation where there aren't reserves. We have to turn around and buy assets and put reserves back in the banking system the way we did in 2019-20.
Hi, Nancy Marshall-Genzer with Marketplace. Chair Powell, you said you're waiting to become more confident that inflation is getting to your 2% goal before you cut rates. Can you just sum up more specifically what data you're looking at that would give you that confidence?
Sure. So most importantly, we're looking at the incoming inflation data and the contents of it and what they're telling us. So that'll be, and also the various components. So obviously that's what we want. We want more confidence that inflation is coming down sustainably toward 2%. And I mean, of course, we'll also be looking at all the other things that are happening in the economy. We'll look at the totality of the data, including everything essentially, as we make that assessment. But the most important thing will be the inflation data coming in.
Are there things that you would give more weight to, like wages?
Wages is one thing. We don't. Our target is not wages. It's really inflation. We would look to the fact that wages are still coming in very strong, but wage increases. Wage increases have been quite strong, but they're gradually coming down to levels that are more sustainable over time, and that's what we want. We don't think that the inflation was not originally caused, I don't think, mostly by wages. That wasn't really the story. But we do think that to get inflation back down to 2% sustainably, we'd like to see, continuing gradual movement of wage increases at still high levels, but back down to levels that are more sustainable over time.
Thank you. Greg Robb from MarketWatch. Chair Powell, could you say at this meeting whether there were more officials who wanted to be careful and go slower about rates than were at the last meeting? Was there that sense of maybe it's smart to wait? Thanks.
I guess I'd put it this way. If you look at the incoming inflation data that we've had for January and February, I think very broadly that suggests that we were right to wait until we're more confident. So I think I didn't hear anyone dismissing it as not information that we should look at or anything like that. So I think generally speaking, it does go in the direction of saying yes, it's appropriate for us to be careful as we approach this question.
Thanks, Chair Powell. Brendan Peterson with Punchbowl News. I wanted to ask you about central bank digital currency stuff. We've been hearing a lot from Republicans in Congress about what the Fed is or isn't doing in a digital dollar. But I know you have said to Congress that you are going to wait for approval before the Fed does anything, launches anything. But folks like House Majority Whip Tom Emmer have said that the Fed is either actively researching or hiring personnel to study the implications of the CBDC. Can you give us any clarity on what the Fed is doing right now on a digital dollar?
Sure. So I think we've been pretty transparent on this, but I'll try harder. So we are not getting ready to. We haven't proposed. We haven't come to a conclusion that we should propose, or anything like that. That Congress consider legislation to authorize a digital dollar, and it would take legislation by Congress signed by the president to give us the ability to do what we think of as a CBDC, which is really a retail CBDC with the public of it. So we're just a long, long way from that. What we are doing, and I think what every major central bank is doing, is we're trying to stay in the frontiers of what's going on in digital finance, and it has many, many different areas. It has applications in wholesale finance, in the payment system. And so we to serve the public, these issues have become very front burner in the last 5 or 6 years. We need to be knowledgeable about all that. So we actually do have people trying to understand things that are, but it's wrong to say that we're working on a CBDC and we've secretly got a lab here where we've got one and we're just going to spring it on Congress at the right moment. We don't. I haven't at all in my own mind made a decision that I think this is something the U.S. should be doing. I just think it's something we need to understand. We do have people who are keeping up with that as part of the broader payments landscape. That's how I would characterize it.
Thank you. It's Mark Hamrick with Bankrate. Mr. Chairman, April 27th will mark the 13th anniversary since a Fed chairman began holding regular news conferences. How important has that higher transparency been in your view, both for the proper functioning of the central bank and also in accomplishing your mission? And is there more that you and your colleagues can do on the transparency front, and what might that look like?
I generally think this movement actually started, 30 years ago, when some academics posited that a more transparent central bank, if the public understands your reaction function, the markets will do your work for you. They'll react to the data. And so it all happens that way. And so there's been a march toward greater and greater transparency. And that certainly Chairman Bernanke advanced that, so Chairman Greenspan did, Chair Yellen did. And so we went from four press conferences a year to 8, so now every meeting really is live now. I think that's a good innovation. I wouldn't want to turn it back. We also done a bunch of other things. We have an annual supervision report, financial stability report. There's a long list of things that we've done. I think nothing comes to mind as really desperately in need of doing at this moment. We're very transparent. We have no shortage of FOMC participants speaking to the public through the media, and so that channel is full, I would say. So I think it's generally broadly helped and made things better, but not every day and in every way.
Well, to follow up, has there ever been a day where you wanted to put that genie back in the bottle somewhat?
Of course not.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. Not to harp too much more on confidence and inflation, but you did say earlier in this press conference that the recent inflation data hasn't raised anyone's confidence. But when you testified before the Senate a couple weeks ago, you told lawmakers that you are, quote, not far from receiving the confidence needed on inflation to begin cutting rates. So are you still of that belief or not? What are we to take by those words, not far?
So let me say my main message at that in those 2 days of hearings was really that the committee needs to see more evidence to build our confidence that inflation is moving down sustainably toward our 2% goal. We don't expect that it will be appropriate to begin to reduce rates until we're more confident that is the case. I said that any number of times, so those were kind of the main part of the message. We repeated that today in our statement. I also, to the language you mentioned, I really pointed out that we had made significant progress over the past year, and what we're looking for now is confirmation that that progress will continue. We had a series of inflation readings over the second half of last year that were really much lower. We didn't overreact, as I mentioned, but that's what I had in mind.
But given that you said that PCE for February 2.8%, the estimate, and that we have been seeing core PCE coming down by 10% every month, wouldn't you be at about 2.4% this summer, June, July, to a point where you could cut then?
Well, we'll just have to see how the data come in. We would, of course, love to get great inflation data. We got really good inflation data on the second part of last year. Again, we didn't overreact to it. We said we needed to see more, and we said it would be bumpy. And now we have January and February, which I've talked about a couple of times. So, we're looking for more good data, and we would certainly welcome it. Thank you.
All right. Well, that's going to wrap up our live stream. We had an awesome chat from Mr. Jerome Powell with the man, the myth, the legend. He came out, he spoke, and it looks like the markets reacted very positively off these lows. We came all the way up, reaching the new 520.62 is the new all-time highs to beat in the S&P 500. And now, after he leaves the stand, we're trading at 519.50. And if you look at the overall market on the hourly, you can see that this new all-time high has been made. So that's a beautiful thing to see. We'll see what it looks like tomorrow when the market opens, how much sell-off we're going to have. I think, obviously, now that we're at the new all-time highs, we do need to come back down, at least retest this 10-day moving average before we bounce back up. And I'll start looking for trades. So let's take a look at how my trades did do today. We did stop out of SOUN. We are in SYN, which is holding out fairly well here. We did get an RNA, which actually, right after getting in, it pulled back to its breakout area, which is A-OK. We're going to be holding on this thing until it breaks that low of day. And then we got into SOUN earlier today, and we got stopped out. Right after it stopped us out, it bounced right back up. So we'll see what comes of this. Maybe we set alert, but we need to see a new lower high. We'll see what happens with this beautiful looking stock. Regardless, guys, it was a red day, unfortunately. Maybe we should take into consideration Danny's style of preaching where we don't take any trades on the FOMC meeting just because of due to the volatility. But good thing is we are still alive and well, and we are still well up on the month. Best month ever still so far to the date. So we will keep on keeping on. It looks like we do have some other beautiful trades that we're going to have to take a look at tonight, and we will get right into it. So guys, if you're still with me, that's absolutely impressive. There's still 8 of you watching right now. I want to say thank you so much. Make sure you hit that like, hit that subscribe button. We're going to be here every major news release. If it's big, if it's bad, we're going to be here to shell out the news to you. So thank you so much. That's a good 5, 6, 7 hours worth of streaming. So if I brought you any type of entertainment or anything, go ahead and hit that like, hit that subscribe button. Leave me a comment and share this with your friends. You know the drill. You already know the drill, baby. So thank you guys so much. I hope you have a good one, and I hope you catch me on the next one. Thanks, guys.